Hello, Peter. We're back. It's Friday.
Hello, Franklin, my friend. We're wrapping up a strong week on Forex Focus. How are you?
It's a strong week on Forex Focus. So you think the market isn't necessarily a strong week, but you think the Forex Focus is strong this week?
I think the force is with the Forex Focus, yes. F cubed, as we would like to say.
You are at home. You're getting ready to go somewhere else. You never stop moving. Now it's Dallas.
It's Dallas. So it's the last of our Tasty Live shows with Tom and crew. So with Katie and Nick and Jamal and Mike Butler. So we'll be building out a portfolio in Dallas Saturday morning. So exciting stuff. That'll be really fun. But the real fun is what you and I are going to talk about. Lots of fun. So it's a whole week of fun.
What are we?
Weekend of fun.
First, we're going to talk about yesterday was Pete's birthday. He turned 83 years old. Happy birthday, Pete. You look good. You're doing good you're traveling to Dallas and Poland for 83.
I love it's great because I know, having gone to Michigan and done your university work there, the fact that you can count past 10. I know usually you have to be in a graduate program to get to 11 and take a sock off. For you to think of the number 85,
it took me all night to get there.
You must have been like Russell Crowe in that movie, just putting numbers in mailboxes.
Gladiator?
Seeing what came back out. No, it was A Beautiful Mind.
Oh, Beautiful Mind. Okay. Gladiator 2. Are you going to go see Gladiator 2?
Is there a Gladiator 2 coming?
They're making a second one. It actually looks pretty good.
Absolutely. No, I love the first one. Yeah.
I'm sure you
know that.
love the first one.
That's a perfect movie. Yeah.
Right up your alley. There's action. There's a good guy. There's a bad guy.
Are you not entertained?
But Russell Crowe, does he win? Does he win the Gladiator thing? But his family's all dead, right? Like it's not like a win for him.
He's victorious. We won't say how it ends, but he is victorious. He reaps the revenge he wants from.
That's a young Joaquin Phoenix, I think, is Caesar.
It is, and Diane Lane as his sister. Yeah, it's a great cast. It's a great movie. What is it? Ridley Scott, I think, did that, and it's a classic. It really is. I mean, it's good guys versus bad guys. It's got everything you want, and just a good story. And Crowe was great in it. I mean, perfect role for him.
Well, and I think that's part of the kind of like lead up to this Gladiator 2 is Ridley Scott, I think, directed, Sir Ridley Scott, by the way, directed Gladiator 2 as well. And he is your contemporary, 86, He's able to direct Gladiator 2 at 86.
And turning the big 8.5, I was expecting to see this gorgeous alpaca hoodie / sweater on my desk when I got home, because you had ordered this very, what do we call it? The anti-bougie or bougie, anti-public sweater, alpaca sweater with matching neck gloves. And that's something we'll talk about in another show, because I don't quite get the concept of neck gloves, but we could talk about that. But I did not see maybe I'm looking I've got a very small house, kind of gone through the whole thing. I haven't seen my alpaca sweater.
He's got a very small house.
I haven't seen my alpaca sweater anywhere.
I pulled up the sweater. You're going to have to start paying me a lot more for me to buy you this sweater for your birthday. It is beautiful. But yeah, I don't know. Alpaca's not cheap. Alpaca's not cheap.
Well, and that's something we should look into, though. I mean, we're thinking about ideas out of the box. We're thinking about combining a crypto mining operation with a farming operation. It could be cows. It could be alpacas. I don't know. We could run down the alpaca route.
Do we use the alpaca fur to clothe the miners, or do the alpaca, they generate power somehow?
The alpacas generate fur that we make the bougie sweaters off of.
Oh, it's just a separate business. It has nothing to do with crypto mining.
No, it's just using the land on top of the subterranean crypto mining.
In Pete's mind,
If
you're mining crypto, you have to be under the ground. Which
it's cool. It's cooler. Again, it's cooler there, so you're saving on some of the electricity usage to cool the units. So yeah, I'm trying to think a little non-conventionally about how we do this. Okay, I just am not worried about going out and dropping a big chunk of change for an alpaca sweater. I'm like, how do we create return around the alpaca sweater? How do we create value? We're going into Friday.
I've got a small house. I'm in a small house. Where's your small house again?
It's by the side of the toll road where Willow and 294 meet.
It's in like a top 10 most expensive suburb in the world.
With a lantern trying to collect tolls. So that's where my house is.
You're unbelievable. And what was the car you used to drive when you were in your 20s? What did you say it was?
It was a Pinto.
It wasn't a Pinto. Oh,
it was a Pinto.
We're trying to celebrate you on your birthday.
Which were prone to explode. What
did you do last? In all seriousness, what did you do last night for your birthday?
I had the best night ever. I came home and my fantastic wife made me my favorite thing, which are lamb chops and twice baked potatoes and asparagus, and had a nice shrimp cocktail to start with. So it was fantastic.
That's awesome.
And I was asleep at 8:30, so it's perfect.
That is great.
Yes.
Wow, lamb chops. Do you cook lamb chops on the stovetop, on the grill, or in the oven?
She does it the right way. She braises them on the grill and then she puts them in the oven, which is like, if you were a chef, that would be the way you'd do them.
And yesterday was probably one of the last days you could access a grill in Chicago without a coat and gloves.
Right.
Because now it's like it was, I think, 35 degrees this morning, but yesterday it was 65.
Right. It was cold, and it's going to get cold. Good thing you've got the alpaca and the gloves. You may actually need them.
Don't try to turn this on me with the alpaca.
No, it was a great birthday. So very excited. We kind of do them a little bit. I like to do mine a little bit lower key, but it was very nice.
Oh, did you?
Thank you for asking.
Last thing, your birthday's on Halloween.
Yeah.
Did any kids come by? You're in such a secluded, expensive, and exclusive part of the north side of Chicago. Do any kids make it to your doorstep? I have to imagine you're handing out like $100 bills or something. What is it?
Being so close to the toll road, I used to hand out quarters and tell the kids to go play on the highway. And since they've gone to that iPass thing where you don't use change anymore to go through the toll booth, it's been a big downdraft in the amount of trick-or-treaters
we get.
You just
stamp a barcode on them?
Yeah.
They can go run under the thing.
You're free. Go. Just go in between the cars. It's fun. No, we live at the end of a lane, so my wife, who absolutely loves kids coming and trick-or-treating and stuff, our old house used to be on kind of a busy street, so we would have from 3:30 to 8 o'clock at night, the doorbell would ring continuously. We had our new little neighbors who have a 6-year-old or a 5-year-old named Ford and a 1-year-old named Stanley came by yesterday, and that was it. We were stood up.
That was it?
That was it. Nobody else came down the street. There's not a lot of kids in the area, and it's kind of a hike to get down to where we are. So that was it.
Did Michelle buy candy? Did you?
Oh, we got candy. We got lots of candy, which will be coming to the office for everyone except you on Monday.
That's perfect. I don't need the sugar. I need to lose like 15 pounds. But anyways, all right. That's enough. Happy birthday, Pete.
Thank you very much.
Another year in the books. Let's get to
how about it?
The market, because we're rapidly approaching.
And you're more like Benjamin Button. I get older and you get younger. I mean, you're starting to look, like you're a tween now. So
I keep telling myself really that it's going to
a reverse thing.
It's going to pay off at some point that I look so young, but it's not paying off because everybody. I'm almost 32 years old. And all of the people that run this friggin' place think that I'm like 12. And so no one will give me a promotion or will give me any more money because they're like, this guy, he can't possibly be in charge of anything. He's 12 years old.
I told you, if you keep performing, next year we'll talk about paying you. Right now it's performance-based, but next year could be the golden opportunity where you actually get paid for working.
I got to pay off this Alpaca. I'm paying for it for years.
I would say you got a 60-month payment schedule on the 5 years to pay off the Alpaca. Where does Alpaca come from?
What?
I mean, there is local Alpaca, but I got to imagine you would not settle for a local Alpaca.
Let me just look it up. Because it probably says
there it is.
Alpaca blend fabric made in Portugal. But is that where the alpaca comes from?
Peru.
Is that where it's at? What does it say, Peru?
I don't know. John said that very convincingly, which makes me think
he's
got some inside track on Alpaca. But
the AI, yeah, South America. Nailed it, John. John's always got it. But so they pass it through Portugal, and then it comes. All right, whatever.
That must be where they fabricate that very fancy stuff, and they box it up with armed guards because it's so expensive, and then deliver it to your
How much is one of your maps? In Pete's office, he's got like 10 of these maps that have like the lock. They're so old.
My
that,
office
like, the Loch
has
Ness
a brick
monster
wall.
is on them. How much are one of the maps?
My office is a brick wall, and I just did the lights last week myself, and that's no easy feat to bend the glass and everything. All right. It's not easy.
All right. What else isn't easy is this market heading into non-farm in about 45 minutes away from non-farm for October. It's the 1st of November, but we are getting non-farm here today. For a second, we around the office thought that maybe next week was going to be election, FOMC, and non-farm, because today is the first Friday, but it's also the first of the month. I don't understand how they do it. They're constantly changing it on us, but we do have non-farm today.
We do have non-farm today, the election next week, and then they bumped FOMC to the following week, I think, right?
No, FOMC's next week. It's on
next
Thursday.
Week?
They bumped it to Thursday.
Okay. But they bumped it to Thursday.
Let's make this sure, because the TastyFX economic calendar is great and accurate, so we can just reference this. Non-farm, the number's all the way down to 113. I think when we looked at this on Monday or Tuesday, it was like 135.
140. Yeah. So they're softening up a little bit. PCE yesterday, really kind of a non-event. We didn't get a lot of movement off of it. We saw a little bit of two-way action in euro. It's wrapped right around the 200-day moving average right now. Euro off just a little bit. Sterling, the only thing up on the day a little bit, but sterling was actually
got killed.
Probably beat up the most last night.
Yeah.
And during the day. So and that traded down to right down to its 200-day average before it bounced a little bit. So commodity currencies, not much of a reprieve. Swissy a lot lower, dollar Swiss higher today, probably the biggest mover overnight. Aussie and Canada.
I want to get to the dollar Swissy in a second, because there is something developing there. It might be a little interesting one-off story, because that is the biggest mover today going into non-farm.
Right.
But yeah, yesterday, absolute bloodbath for a number of currencies. Commodity currencies got hit, and they're not really gaining too much back. You see that this Aussie got down to 65.50, 65.40, and has been able to bounce back, 10 to 20 pips, depending on where you're looking. This is a really interesting one here, man. This Dollar-CAD, absolutely no reprieve for the Canadian dollar selling that we've been seeing. This market got up to 139 yesterday. I mean, for a second there, at the peak of some of the volatility we saw across equities and pretty much every asset class, except for crude. Crude, the only market really that was trading higher yesterday, and CAD didn't even get any lift from that.
No,
Pete, we got up to close to 139.5 and looked like we were going to break 140 for the first time in, it would have been years. Here, I'll get some more data in as you maybe fill us in on what's going on in CAD.
Yeah, I think a lot of it has to do with pace of rates and divergence there of them not being as quick to move on rates. The crude correlation, I mean, we're wrapped around $70. So we're cheaper than we were the first half of the year. We're off the lows of 65, but again, a month end $2 bounce in crude is not usually helping Canada in the way it would, which would just maybe not have it dollar Canada fall, but maybe stop it from rallying so much. It doesn't seem to really have that connection to it right now. So I think we're seeing more of the rates play through kind of the Canada dynamics. Traditionally, on a non-farm payrolls day, we get also Canadian unemployment at the same time. We don't this once in a while when they're set up date-wise. Canada will be next Friday, so we're not going to have the employment numbers out of Canada. So we'll see just the one event around 7:30. It'll be interesting to see how this plays through. Yen had a decent sell-off yesterday too, a little bit. Now it was month end. Sometimes we see some month end flows. We saw a little bit, as you pointed out, new lows put in the Aussie, traded down, and then rallied off that low around 10:30 in the morning, our time in Chicago. Rallied off that low, but given some of that back. Euro had the same bounce, gave that back.
Yeah.
Sterling, the best you can say about sterling right now is it stopped falling. I mean, the rally's pretty benign. And it seems the dollar strength, and maybe this is the election playing through a little bit too. Dollar strength, the election. We'll take a look at Peso because I haven't looked at Peso this morning, but it'll be interesting to see if we're well clear of 20 pesos to the dollar, and that being kind of our election proxy a little bit.
Yeah, it'll be really interesting, like you say, to see how this all unfolds. And I just want to hang on the Canadian dollar piece for just a second more, just because, to your point, Pete, most of these major currency markets are right near their lows for maybe the last couple of weeks, couple of months, going into a ton of data, be it the election, FOMC, and a bunch of other rate decisions. To your point here with Canada, their unemployment will be next week. And so a ton of data at these inflection points. But that being said, this Canadian dollar piece, Pete, isn't at its lows for the last couple of weeks or months. Look at this. This is the weekly chart for the last 5-6 years. And you could see here trading 139 bid very rarely over the course of the last couple of years. And it hasn't held above 139 for more than a week, going back all the way to the pandemic. And you can see we got up to 140, and it looks like, we traded 145 for maybe a day or two in March of 2020 amid all of that volatility around. Of course, that's the outset of the pandemic there. But even around the pandemic, Pete, only traded above 140 in this major pair for a month or two. This is a really serious course that Dollar-CAD is setting. And it'll be really interesting to see because, I mean, it's not like, it's summertime and we're sitting around 139, 140. There's a ton of stuff coming up that will either send this market through to highs that we haven't seen in the last handful of years, or we'll see this reversion that we've seen back down to close to 135. They've gotten close to 130 in recent years. But, I mean, this is a big, fat price extreme right near 140 that, like I say, aside from this pandemic cluster, it hasn't traded.
No, and, I don't know what your thoughts are, but, I mean, the tariff talk, we do a lot of business with Canada. Are they selectively who knows? But, any changes to import restrictions would dramatically affect the value of the Canadian dollar. But you bring up a good point because we have been in this relatively low volume environment. I think the daily range Glenn ran last week in euros was under 30 pips, I think. I don't remember the last time I've seen a one standard deviation 30-day expected range. That's small. Everybody's is pretty compressed right now. Canada could be like Aussie and Kiwi. You get through those levels. If we get through that level, you're going to see a lot of elasticity. We're going to get to price levels we haven't seen in a long period of time, you'll get more elasticity. That market will start to get a little bit more volatility and uncertainty to it. You get that range to widen out, which is great if you look to actively engage around product, either on a momentum basis or if you're a contrarian. Both of those provide you opportunities as long as you get 2A action. But don't be lulled into thinking like, well, this is a 30-pip market. You're going to see, like when Aussie and Kiwi get to new levels, that elasticity pricing starts to expand a little bit, and we'll see that play through. So this will be another one to watch next week, not only for the unemployment report coming up in Canada at the end of the week, but how does it react to the election?
Yeah, here we have dollar peso, which has seen similar this is the weekly chart as well, and so if I bounce back between peso and CAD, you'll see a similar trend the last handful of weeks here, which is dollar dominance to the point of, like I say, at least a couple of months of highs, right. But in Canada's case, a couple of years of highs for U.S. dollar. But yeah, a little bit of give back yesterday in USD to peso, and maybe you can talk us through that. But going into the election here, Pete, yeah, that U.S. dollar to our other North American trade partners here is looking pretty strong. I mean, this is pretty much highs for dollar peso going back the last 2 years or so. That this 20 peso mark has been a level that we haven't really eclipsed since the pandemic, where they got all the way up to 25 pesos, and that was a huge move. But yeah, what's set the scene for us going into next week on the peso front?
I think it's interesting to see if we really, and we're holding above 20 pesos to the dollars, if we really extend those gains today and tomorrow, I mean, people are making a commitment that they've got an idea of, I think a little bit, some people have a little bit more clarity about the election outcome and its impact on this. Now, a lot of that election outcome has been built into this market the last 6 months. So does that mean we go to 21 or 22 really quickly? We can. Whether or not we stay there is a different situation. But that's exactly what we want. We want to be mindful of a little bit of context of what's driving them, but also what's been built in. Now here, who's stressed right now? Anybody who's short dollar peso is in an uncomfortable spot. The longs have the stronger hand here. So it'll be interesting to see how far we test before the event and then what the actual reaction to it is. Do we get a spike up and then some profit taking, or does it continue? The tape action will be very interesting up here, but I would have honestly thought, Frankie, we would have seen a little come off here just as they peeled a little bit off the table. But from a carry standpoint, and we'll talk about this a little bit more in the next couple of weeks, what carry is in Spot FX, so people start to understand that dynamic, that unique aspect of FX products. But talk about the carry trade here is an important piece that's playing through the markets on this also.
Yeah, we'll hit that in coming weeks. We are running out of time. Just a last piece, because we don't get to talk about it ever, and I'll just run through it really quick because I noticed it this morning. Dollar Swissy is rallying pretty hard, and this is off of lower than expected inflation in Switzerland, and so you're seeing some weakness there if you are trading. It's a major pair. It just hasn't been one to highlight recently, so maybe some action there in the few hours left here in our Friday session. But Pete, you only have a few hours left until you get to Dallas, my friend, so we'll get you out of here. Thanks so much for coming on with us, and we'll do it again next week. How's that sound?
It sounds fantastic. All right, guys, have a great weekend.
Peace.
Life goes by fast, really fast. One day we're 25 and living large, and the next day we're 65 and hopefully still living large. It's the 40 years in between that are mostly a blur. When asked what they would do differently, most people confidently say, nothing. I have no regrets. As much as I want to believe them, I know better. I believe there's one common regret virtually everyone chooses not to remember. It's the taboo topic of not taking as much risk as possible every chance you get. Remember, the genesis behind tastylive was to encourage risk-taking. What were we thinking? Imagine the risk of building a business designed to encourage people to take risks. One of the things I've learned about taking risk, it's not personal. You can't let your ego dictate your decision-making. Unless, of course, you're the richest person in the world, then it's a death trade. Another thing about taking risks is that it's never obvious. There are no easy decisions. Risk-taking should be fun, engaging, and challenging. But if it ever seems apparent, success will not be easy. The great thing about the world of finance is that success does not require genius. In my opinion, the model for success, without a lot of complex math, is relatively straightforward. It's risk times longevity. Between academia and financial media, we have overly complicated embracing the paradox of risk. It's finally time to simplify the model behind success to risk-taking times duration. This definition should give everyone hope and a reason to hang in there.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
As they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Got the need for speed? No problem! On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
Free market, come on, you know it, how you feeling? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot, now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both. Vanetta, how are you this morning?
I'm good. How are you?
I'm doing phenomenal. Look, I'm doing my best Tom Sodloff impersonation today. I'm wearing Tasty swag. You know, he's either Costco or Tasty. How am I doing?
I mean, the video with him and your son yesterday, it did so good on socials. I might need a raise.
I had to judge. I had to go. They wanted me to judge the Halloween costume thing yesterday afternoon.
Oh, the Office Halloween. Oh, who won?
So I refused. I had to recuse myself.
You had to eliminate Nikki.
No, I had to eliminate myself from being a judge because I didn't think that was fair. But Nikki and Mactad, who were dressed as me, they tied for third. The winner was Ariel, I think, came in second, and the winner
Ariel was dressed as David Bowie from The Labyrinth in just an iconic leather pants and a sequin jacket and the blonde wig. She looked amazing.
I think she came in second, and Garrett came in first.
Garrett was Jack Skellington from The Nightmare Before Christmas, I believe.
Mm-hmm.
Yes, and so I don't know what the prize was.
Did you know what Garrett was?
I had no idea.
That was another reason why you had to be eliminated.
No, because I wanted people that were actually good at doing that stuff to be the judges. Alyssa and Tori were the judges.
Oh, that's good.
Very nice.
So it was fun. There was about 20 people in the in the finals.
Yeah, and you can see all of the great costumes. You follow Tasty Trade and Tasty Live on social. I took the pictures and we posted them yesterday, and everyone did a good job.
Yeah, I thought Tony trying to be Italian was really good.
How was your guys' Halloween? How many of the big bars did you hand out? I want to know. And what was the best costume you saw?
Make a market. I was home the whole time. From like 4:30 to 7:30, let's say.
It started at 3. It started at 3, but sure, go ahead.
My market's 7.
That's your market, 7, pick 'em?
I'm going to go 4.
Vanetta is on the number.
Oh,
7,
nice.
7 candy bars, and 6 of them were to one group.
Awesome. Yeah. So you had 2 dings of the bell.
2 doorbell dings.
Mm-hmm.
One was a lone kid with his parents, and another one was like, I guess they were like young teenagers or something. But 6 of them.
Did you give him the Larry David? Did you talk to him about what are they dressed up as? What is this?
No, they were in costume.
Oh, they were in costume. Oh, okay, good.
Yeah,
very nice.
Plus, I'm trying to get rid of my candy bars, not keep them. So. Anyway, so 7. How about you?
Oof. I said we had 200 big bars. We probably had about 250 of we had about 50 of like assorted other kind of smaller gummies and stuff like that. So kids were taking bars and a handful of gummies, and I would say we went to about 160. Big bar. But you know what? I think it was actually smaller this year than last year because a lot of kids, I put them out on a table so they have a choice. You know what I mean? That's the kind of guy. I sit outside with a whiskey and, put, 30 of them out there, make them choice. Every kid would come up to me and go, how many can I take? I go, what do you mean how many can you take? What do you think this is, the welfare system? You take 1 for crying out loud. And then I would go, all right, you could take 2. And then we'd take 2 or take 3. So I don't think it was as many as, I had given out. So I would say probably about 100 kids.
Oh, that's
not
still
a lot.
No, it's not a lot. Not a lot.
No.
Yeah. It was real windy. I mean, real windy. And it got cold.
When I was driving home.
Do you remember it snowed last year on Halloween?
Yes. When you were driving home, it was 65 degrees probably.
Oh, I was around 60, but there was a million little kids out at like 4 o'clock. Mm-hmm. But by 5 o'clock, it was like kind of quiet.
Yeah, because it was down about 40 degrees. I mean, it was cold and windy. I mean, real windy.
Dude, these kids, they don't know. When I was growing up in northern Indiana and I had to fight through like a blizzard to get my candy, and then I had to wear a coat, but I didn't want to because I wanted to look cute, but my mom wouldn't let me go out without a coat.
That's the bad thing about Illinois. You got to wear a coat all the time.
No, but my childhood, the Halloweens were brutally cold. Yeah. And it was craptastic. It was 80 degrees in New York City yesterday. Those kids don't know anything.
Yeah, I agree. Yeah.
Anyway, shenanigans all around. Well, I'm glad that you guys had good. What was the best costume you saw, Bat?
Man, there were a couple. There was a young kid as Beetlejuice that looked really good, like the original.
Beetlejuice was very in this Halloween season.
But this was a young kid. He had to be like 12 or something like that. 12 or 13, 10, 11, something like that. He looked really good. I'd give it to him.
Aw. What was the best costume you saw?
Of the seven people that you saw,
I couldn't tell you what one of the. I don't know what one person was. Like I can't. I don't even know what they were dressed up as.
Ah, that's okay, Grandpa.
Yeah, it's. I tried. Like I really don't look. Just like take the candy, get the hell out of here.
I did give out a dozen Trulies and beers though, so that was good to the parents.
Oh, to the parents.
Yeah. Had a little cooler underneath the candy table, and the parents could, it just said parents on it, and people would open up.
How did Vinny's frat boy costume turn out?
He didn't come home with one piece of candy, and he didn't get dressed up. They went to a young lady's house and hung out.
Oh.
Mm-hmm. The apple doesn't fall far from the tree, Sadnoff. This kid is not yours. I knew it.
Starting to happen already.
Oh no.
Did you see that video? It's like I guess it's a TikTok or Instagram video of this one couple that put out a cooler that said parents on it, and then inside of it somebody jumped out when they opened it up, and one guy fainted.
No.
Oh
no. Yeah. One guy came up and he opened it up, and then he just took a step back and fainted.
Oh, that's funny.
Well, if you're not expecting something to jump out at you, like...
I know. That's why they did it, but it was pretty, it's like not the result they wanted, but...
We'll see you in court.
I thought the Bat might pull something like that,
No, that was good. I did have a couple of kids that didn't want to, like, walk up, like some of the younger kids, a little too scary.
Well, you're scary.
I mean, you should probably close the bathrobe.
Yeah.
If it's ever real warm, I'm going to do that, Vanette. I'm going to go as the Sopranos and just have a bathrobe on.
No.
That's pretty good.
Anyway, no good. Hey, did you guys watch some Thursday night football? Jamal and Vecchio were going back and forth on Twitter last night just about how bad the Jets are.
I saw Aaron Rodgers had like 27 yards in the first half throwing, and I'm like, I can't watch this.
The Jets pulled it out, though, didn't they? Like that, I think they won.
Yeah, they did. They won. Garrett.
I didn't watch any.
Garrett Wilson had one of the greatest
an amazing catch, like a Odell Beckham Jr. catch, but a couple of wonky rules in the league the last couple of games. Do you know if your 1 foot touches twice, it doesn't count? But you gotta, like, I don't know. It was just some weird rules.
Because it's just the tip. Because it's just the tip.
It's just 1 foot. You gotta get 2 feet. So not tap 2 feet.
Oh, I
think John has the video of the Halloween scare.
It was a really. Oh, he does? Yeah, this is a good one. No, there's another one where the guy.
Do you think homeowners prepared a special surprise for the parents of the children who come trick or treat on Halloween? Do you think this scared a lot of parents?
That's great.
Don't do that. Don't do that.
You should do that.
If you want to get sued.
How are you going to get sued? It's Halloween.
If someone goes into cardiac arrest or an arrhythmia, then you're going to get sued.
Yeah.
You got as much of a chance as somebody slamming the thing back down on your head and breaking your neck, but it's still worth it.
I guess. I don't know. Tom, where are you headed this weekend? You're going to Dallas. Are you excited?
I'm very excited.
You sound it.
We're going to have a show. I'm going to have some barbecue. It's going to be perfect.
Who is going? What show is this? Building a complex portfolio.
The whole gang's going. The original team. So everybody, the Mikey, Nikki, Katie, and Pete, Jamal, myself.
Ooh.
So it is going to be last one of the year of this show.
Okay. To commemorate this, I edited it. I worked on this like all afternoon yesterday.
Oh God.
I'm gonna post it when I'm done here. So we do like promo videos for each city that's coming up for the show, for the speaker
series. Yeah, I want to cancel this video, whatever it is.
And so if you might remember our Miami one where we recreated the opening intro to Miami Vice, Nikki Bat serving as a cartel drug lord perfectly.
Yeah. If you get that raise for social media, you got to throw him like a free lunch or something like that.
I know. And Katie was like a bombshell. Well, for this week, because the theme is Dallas, I made a video of Katie teaching Tom how to line dance, and it goes as well as you expect. It is so funny. Like Tracy, who works here, she was with me when we were filming it. I thought she was gonna go into labor because she was laughing so hard.
When are we gonna see this? This is good.
I'm gonna post it this morning. Also, Katie is like a dancing savant. Katie is such a good line dancer. I was very impressed.
I didn't know, where did Katie learn all this stuff? Like,
she went to school at Illinois. It's in
big
Southern
deal.
Illinois.
So do 50,000 other people. They don't learn how to line dance. And Katie went to school at Illinois, a while ago.
Bat, it's so, you're gonna be like, Vanetta, I owe you. Have you ever tried to line dance, Bat, like back in the day?
Yeah, maybe for 10 seconds. Maybe when what was the John Travolta movie that came out?
Oh, Staying Alive or Saturday Night Fever. Sorry.
No, Cowboy. Something Cowboy.
Midnight Cowboy.
Urban
Cowboy.
Wasn't it? Yeah. Urban Cowboy. Maybe around that year. Or prior to that, it was very big in the clubbing scene.
I'm so curious. I think line dancing is fun. I would love to
Nah,
go,
dumb.
but...
Unless you're in Texas or someplace else, it doesn't fly. It really doesn't. You would agree, Tom?
Right.
You agree?
For me, it doesn't fly anywhere, but So.
Wow. Anyway, well, something that is going to fly is today's show. We got a great show for you today. We made it. It's Friday. It's a new month. The year is almost over. We did it. Hey, programming note, you got to set your clocks back this weekend. And as of Sunday, the sun's going to set before 5 p.m. So, yay! I hate it. I hate it so much.
Why do they do that still?
I don't know. I think we can all come together as a nation in these divided times and agree that changing our clock sucks.
We could definitely start by doing that, right? That'd be great.
But anyway, the top of the 8 o'clock hour, while it's still 8 o'clock, is This Week in Stocks. Jamal is in to recap the big week. Had a lot of numbers come out, a lot of really big earnings from the biggest tech names. And he has titled it Mixed Bag Earnings and Mixed Bag Markets. So Jamal will be in at 8 o'clock, and Jamal will also be in Dallas this weekend. So catch him there. And then 8:40, it's Fast Market. This is where viewers submit their trade ideas, and Tom and Bat try to do as many trades as possible. That's going to be at 8:40. Then 9 o'clock, we have a market measures for you, a history of scary moves. So wait, it just says a history of scary movies.
I don't think so.
I think it's a history of scary moves.
I think so. Yeah.
I would love a retrospective, though, of a history, like a little John Carpenter, a little like breaking stuff down. I don't personally like horror. I'm scared. But we should start switching up our segments like that.
I don't like horror movies either.
Yeah. But the weird thing is, though, I listen to more true crime than almost anyone I know, so I don't know what's wrong with me. It is what it is. But that's going to be our market measures at 9 o'clock. And then my personal favorite live from the trade desk at around 9:30, big boy Scotty asks, Scott Sheridan, taking your calls today. So if you have calls on the brokerage side of things, we would love to hear from you. That's going to be at around 9:30. And of course, we are counting down the days to our election unspecial. It's going to be on Tuesday. We are almost there, you guys. We're going to have guests. We're going to have games. We're going to have chaos. It's going to be a good time. It's going to be from 6 to 8 on Tuesday. So stay tuned for that. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's November the 1st. It's the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Little rabbit. I like when the Friday is like the first. I don't know. I like when it lines up like that, but that's just me.
Glad we can make that happen for you.
Yes. Hey, well, guess what you're getting today? Friday's job report is expected to show the slowest pace of hiring in years. Economists surveyed by the Dow Jones expect the Bureau of Labor Statistics to report Friday that payrolls expanded by just 100,000 on the month. But you have to remember here, you had the Boeing machinist strike. I got news on that later. You had hurricanes in Florida, North Carolina, and other areas. So we all know. But you're getting your jobs number this morning. What are you going to do?
I haven't made any trades yet related to the jobs number. I'm kind of thinking I'm going to buy some notes here, but I have not.
Okay.
Bonds are looking down around 4 ticks, 117.27. Notes are 110.09, down around 6.5 ticks.
The notes are down more than the bonds right here, and so I kind of like the notes. I think at yeah.
Is there a number you're looking for?
No.
Okay.
No, not really. I'm going to I'm going to bid on the bid and see what happens.
This also comes on the heels of positive consumer confidence that came out this week. Also PCE, GDP, you down with OPP. It all came out this week. Jamal's going to talk about it. But keeping it moving, the yen is extending gains after the Bank of Japan signals interest rates may increase. The yen advanced as much as 1% against the dollar. Let's talk about the yen.
I'm not exactly sure what movie they're watching. The yen's down pretty good today.
It's down. Yeah.
Last night when I was putting this together,
it was up yesterday, but
it caught a bid yesterday, small, off of its lows. I mean, the first heartbeat it's had, since September.
So what are you guys doing now that it is down then this morning?
We're still
haven't done anything.
Sitting.
Haven't done anything there today, but we're still long the yen.
Yeah.
Okay. What about other currencies? A euro, a pound?
Long.
What about gold?
Gold took its first hit yesterday, down around 40 something, but it's up $11 this morning.
We're flat gold this morning.
Okay.
Good Ivy rank at 82 in gold, so place your bets if you're looking to sell premium one direction or the other.
JP Morgan Chase will pay $151 million to settle 5 U.S. SEC enforcement cases, including accusations that the largest U.S. bank made misleading disclosures to brokerage customers. That's according to the regulator. The settlements include $61 million of civil fines and $90 million in reimbursements to customers. Are you getting reimbursed by JP Morgan, Tom?
I don't think so. But I've never used JP Morgan brokerage ever, so I don't even know. I'm not.
You have like one. It was some like weird OTC thing. You have like one time.
No, we did a bond swap.
We did a bond swap about 15 years ago.
That's not never. That's not never.
I shut that account down the day we sold that bond swap.
You build 1,000 bridges. I don't know if you do one bond swap, and they
I think it was 2013 or 2014. We did a bond swap. It was actually painful to use their brokerage,
It worked out, but it was painful to get it unwound and to get it on. It was ridiculous.
Yeah, I mean, let's put it this way. We made one trade. It was 10 years ago, and I don't think we have ever made another trade ever.
JP Morgan.
I remember it because I was here.
Looking up $1.15 or so.
Oh, JP Morgan. Okay. Thank you, Bat.
Yeah. After Sadnov's review, it'll probably be down by the opening, but we'll see.
BlackRock iShares is trying to appeal to investors who want to diversify beyond the so-called Magnificent Seven. The firm launched their TOPT ETF this month, and it's the top 20 U.S. stocks. So it's made up of the 20 largest U.S. stocks by market capitalization. What are your thoughts on this as a concept or theory?
I have no interest in it.
No, just a basket of the top 20 stocks by market cap.
I understand.
But just as an experienced investor, I would think you would have some insight on whether or not if a new investor would be like, hey, would this be a good option? I have a smaller account. I want exposure to a larger basket. I just wanted your thoughts because you've been doing this since the Mastodon era.
I thought I was pretty clear when I said I had zero interest in that product whatsoever.
But as an instrument for younger investors or newer investors or people with smaller accounts.
Go into you. I'm done with him. TOPT. I don't know if it's doing anything.
I don't know how we could be any more clear. A crappy fund by who did this? JP Morgan or whatever?
No, BlackRock. You literally can't read.
Whatever. I'm just saying. Who cares what? Like it's just another ETF with fewer names that's less liquid. Why would we care?
But I would want to appraise its feasibility. That's all. Just have a discussion about it. I don't have a dog in this fight. BlackRock is not paying me, sadly.
Its feasibility is next to zero.
All right.
I'm not looking it up.
Yeah, we would have zero interest in that product.
All right.
I got to work with him all day. I'm not looking.
Yeah, thanks for nothing. Hey, I'm going to keep it moving. Hey, let's get into the earnings last night. A lot of stuff coming up. So Apple's fiscal fourth quarter results beat Wall Street expectations for revenue and earnings per share, but Apple's net income slumped after the company paid a one-time charge as part of a tax decision in Europe. But a highlight was that iPhone sales and overall sales both rose by 6%. Apple down around $4. What are you doing?
Yeah, down around 3 right now, sitting at 221 and change, just under 222.
Yeah, we have. We're not doing anything in there. We're just we have a position on. We wanted the stock to do nothing. It did nothing, so we're good.
Okay, Bat, did you trade it or will you
same
trade
same thing? Wanted it to do nothing. It did nothing. It's okay.
Okay, all right then. Hey, in other earnings news, Amazon shares popped on their earnings beat and cloud growth. The company's cloud and advertising units showed strong growth. Amazon's revenue came in at $158 billion. I'm worth about 10% of that. No, I'm just kidding. And in their cloud and Amazon Web Services, revenue was a hair below consensus estimates. Amazon CEO Andy Jassy pledges that Amazon's AI investments will pay off as CapEx surges 81%. Totally a theme that's been on all these calls. They're like, we're doing AI because you want us to do AI, but we just found out that doing AI is real expensive, so you're gonna have to bear with us. We're gonna have to have a bake sale. But what are you guys doing in Amazon?
Sadnov took me down in Amazon, but we're gonna be okay. Amazon's flirting with 200 right now. Let's say it's up $13.
Oh.
I made the mistake of listening to Tony yesterday afternoon and put a position on.
You got a beautiful position on stocks 200. Your break even's 210. You just got to show a little intestinal fortitude and sit for a day or two. You'll be fine by Monday or Tuesday. You will be out on the opening for a scratch.
I think it's going to be a small loser. I never liked the trade to start with. I just did it because he was yakking up a storm yesterday afternoon. But I had my own Amazon position on, which should just be just fine. A short story.
Oh yeah, it should just be just fine.
Okay. All right, boys. Hey, Intel shares jumped 7% on its earnings beat and uplifting guidance. They reported better than expected earnings and issued uplifting guidance. They're in the midst of a major restructuring initiative. Part of the uptick is because of sad news. They're eliminating over 16,000 jobs, which I guess the street likes. Intel brought in revenue of $13.28 billion, but their revenue declined 6% year over year. Intel has been the laggard of the chip stocks. Did you do anything in Intel?
I did.
Yes, he followed the Bat's lead. The stock is up $1.50. He's going to be doing golden.
I actually didn't listen to him, and I just did I just sold some out of the money puts in November. On the close, I did a bunch of them too, so it's going to be actually my best earnings trade of the entire season.
Wow.
So, yes, I will cover on the opening. We should make like 60 or 70 cents with no pain.
Also, I just love this press photo of Intel CEO Pat Gelsinger. It looks like he's getting robbed. He's like, yikes. He kind of looks like the Crypt Keeper. I don't know, man. Like, switch up your skincare routine, homie. Hey, in other news, OpenAI announced they're adding a new search function to ChatGPT, taking a direct swipe at Google. So earlier this week, I announced that Facebook's Meta is also going to build in a new search feature. And now OpenAI says they're adding a new search function to its popular large language model, opting to integrate the feature into the chatbot instead of launching a separate product. Everyone is coming for Google's neck. ChatGPT loosely affiliated with Microsoft because you can't trade OpenAI. So what are you doing in Microsoft and Google?
Microsoft up 4.
Yeah, nothing really. After yesterday, no. I mean, our Microsoft position is super small.
Okay.
Google looks unchanged, hanging out at 171.
U.S. chipmaker NVIDIA will have to seek EU antitrust clearance for its proposed acquisition of an AI startup called Run AI because it threatens competition in the markets where the company operates, and that's according to the European Commission. A lot of the more stringent penalties that tech companies are facing have been coming out of the EU. What are you doing in NVIDIA?
We're pretty flat NVIDIA. We're just short some at the money strangles. I mean, NVIDIA is our smallest of all the tech positions right now.
Because all the chip makers had their earnings, but NVIDIA has their earnings later. So
yeah, we have a small NVIDIA position. No risk in there.
NVIDIA up $2. Earnings on November 20th. You are correct, Vanetta.
Okie dokie, artichoke. Hey, in other news, good news, Boeing and its machinist union have reached a sweetened contract offer in a bid to end their strike. The vote is scheduled for Monday. The more than 32,000 machinists rejected a previous contract proposal in a vote earlier this month. They walked off the job September 13th. A lot of people saying this strike already costing Boeing into the billions of dollars, but the new proposal includes a 38% general wage increase over 4 years, up from the previous Boeing offer of 35%, bringing the compounding pay increase to close to 44%. Bat, you and I, let's get our reps on the phone.
You're going to have to get a union, baby.
Boeing, what are you doing in Boeing?
Up $3 this morning.
We're a little long.
It was down around $5 or $6 yesterday. Up.
It was our biggest loser. It was our biggest loser yesterday. So
you can get it back today.
Boeing said at the end of the contract, the average machine.
Look at that.
Oh, your number's out. Sorry. Go ahead.
Yeah, little bond scalpy from you. You picked up a good little 13 points or so. 13.
You can go full screen, John.
I had the 21 offer in there, and it freaking hit it. Unbelievable. On those notes.
You mean they lifted it?
They took it.
They didn't hit it. Let's both agree they didn't hit it. They don't hit offers. They hit bids. They take or lift offers.
They scoopied it.
Okay, whatever. Yeah, Bat, you were right again. Even the S&Ps are up 18 or so. Now they're up 20. NASDAQ up 75. Russell only up 1. Dow up 125. They're all up around the same. Bonds, which were down, are now up 11 ticks.
Yeah.
Okay.
Just all I did was buy notes and then sell notes. That's it.
Got it. Good job out of you. I think you're flat them from this morning.
Yeah, and I actually sold a few extras, but yeah.
What is volatility doing?
Volatility was down this morning. /VX is down 60 cents. It's been sitting there. Even the S&Ps were up 21 before the number. They're up 21 right now.
Okay.
So no real movement on this number except for maybe the bonds.
Yeah, we pretty much knew what to expect. Yeah.
Bonds and notes had a big move. That was it.
Yep. Debt instruments. Tom is correct.
All right. Good for you. Nice.
I think a little bit of rally in some of the currency. Yeah, the yen rallied up, the euro rallied up. The currencies, the dollar just got a little tiny bit weaker too.
Mm-hmm.
What about gold?
Gold didn't move.
Hasn't moved. Yeah.
All right. Can we take the rest of the day off? Pretty good. All right. Hey, getting back to my headlines, Uber shares slid yesterday as slowing bookings growth spooks investors. Uber signaled a further slowdown in its mainstay app-based taxi business as it forecast fourth quarter gross bookings below Wall Street estimates. Shares of Uber down nearly 8%. What are you doing in Uber?
Uber, we got a little bit hurt in there yesterday.
Yeah, it was a big move.
Yeah, I played it to the upside for earnings.
It went down, right? It went from like 79 to about 72 or so.
Yeah. So we actually we lost a little bit and we sold calls against it. So now I'm kind of neutral in there with a little bit of upside bias. I don't know what it's doing today.
It's up $1 this morning to 73. I mean, the market's higher. Even the S&Ps are now up 29, so everything's catching a little bit of a bid.
Nice.
Yeah.
Anything in Lyft?
I don't know. I don't have a Lyft position. Tony, I just flattened out those notes.
I got them. You sold them all the way up to 110.23. Good job out of you. Lyft is hanging out. Lyft's a $13 stock, Vanetta. Not like If for us, selling premium, Uber would be the way to go. And really, Lyft would be more of a directional play if you're looking to trade as some stock or something like that.
Google Maps is getting new features powered by Gemini, Google's generative AI model. The company announced incoming updates that will allow Google Map users in the U.S. to tap into AI to help them find new places to visit. If Google's AI for Maps works as well as Google's search now does, we're going to all end up in someone's basement. This is terrible, and I hate it. AI is broken, and it's telling you to put glue in your pizza sauce. Lord knows what it's going to tell you to do in your car. Like, no, do not want.
It's going to say, don't get in that car with him. Don't get in that car with him. Google.
I don't know. Or it's just going to scrape all the mean comments from Reddit. It's like, oh, where do you want to go? Oh, you're a woman? You can't drive anyway.
Why don't you fly?
It's going to be bad.
It hasn't learned sarcasm yet, but it will.
This feels bad. Hey, Meta says they're partnering with sensor firm GelSight and Wanik Robotics, a South Korean robotics company, to commercialize tactile sensors for AI. The new devices aren't meant for consumer use, but they are intended for scientists. Meta says it envisions them being used to advance research into AI that can learn about the world in richer detail. I don't want a Zuckerberg robot that can touch me, but whatever. What are you doing in Meta?
We're just kind of spread off. It's kind of a weird thing. I mean, we just have kind of after yesterday, we're stuck. We need Meta to sit right here for a month.
Okay.
Catching a little bit of a bid here, up $5 to $5.73 on the offer.
By the way, if you have a bond or note option position on Tony, which I think you do, or at least I do.
Yep.
Today is 21 DT.
Time to roll.
I just rolled my notes. On the last tick, I'm going to roll my bonds now.
Nice.
Got it. And by rolling them, you're just rolling from 1 month to the next, extending duration if you want that same directional bias, which is what futures are.
We keep the we keep the mechanics exactly the same. So, don't overthink this stuff.
Yep.
Hey, Peloton had earnings and they reported negative quarterly earnings, but their stock was up 27%, and I don't know what anything means anymore. They're getting a new CEO, so a Ford executive and the founder of Apple Fitness Plus, Peter Stern, will now be the next CEO of Peloton. I don't know which number CEO this is. Poor Peloton. Let's just talk about Peloton and its crazy earnings move.
Well, to be fair, we don't have a Peloton position on, so.
No, I know. I didn't even know it was having earnings.
Yeah, I know. I'm just saying, we don't really trade it, so.
I know.
Peloton was looks like it's up to about 8.5 this morning. It was 6.5 2 days ago. So yeah, catch a little bit of a bid, but again, well off of its highs, flirting in the 60-70 handle back in the day.
Yeah. Well, good job, Peloton, I guess.
Back in the 160 handle, if you want to go back just about 2 years.
Hey, new research suggests that Polymarket, the crypto-based platform that lets users bet large sums of money on political races, is rife with wash trading. Wash trading, by which traders buy and sell the same stock nearly simultaneously, is running rampant on Polymarket. This can artificially inflate the prominence or trade volume of a particular underlying, making it appear more popular than it actually is. We will actually have the founder of Kalshi on the show on Tuesday, and it will be interesting insight into these prediction and election betting markets.
I've actually said this like about 50 times on, just on our network, that those markets, those numbers aren't really real, but whatever.
I know, but this was from researchers. Your sources are always trust me, bro.
Yeah, his sources are up here somewhere. Yeah,
my sources are better than your researchers 99% of the time. So yeah, I have a little bit better.
$2.9 billion traded.
That's a lot. No. Yeah, it's. I mean, I'm not saying that. Yeah.
No, stop. $2.9 billion did not trade. That is just a notional number.
It did.
Oh, okay. Can we have this discussion?
Oh my God, girl.
Can we have a discussion later? If you bought something for a penny, it didn't trade at $100, just so you know.
Okay. Well, you're super fun. Pat, what's Bitcoin doing today? Let's check on that to end the week.
Sure. Bitcoin's had a little bit of volatility, although it has been staying in this tight range from 69 now up to around 74. It's sitting at 70,700 and change on the futures.
Okay. Hey, in other news, Comcast, lost the thread there. Comcast yesterday said they're exploring spinning off its cable networks into a separate company. The development comes as the media industry undergoes massive disruption, with more consumers cutting the cord. CMCSA is Comcast. Comcast had earnings, and the stock ticks more than 3% higher on the report. They beat on top and bottom line, so good job, Comcast.
Okay. I'm never mentioning their name again until.
Well, but they own Bravo, they own CNBC, which loves Tom. They own MSNBC, the Sci-Fi Network, and the USA Network. The spinoff would not include NBC or its streaming platform Peacock.
All I want to say is I agree with Tony. Until they get the Blackhawks and the Bulls, they're dead to me.
Dead to me too. That's right. Tui skata.
You did. Okay. All right. Hey, in other news, you might want to thank your local Democrat, because Democrats did what no one else could do They fixed the ice cream machine at McDonald's. This is true. An exemption by the Copyright Office will now let franchisees work around restrictions to fix the finicky machines on their own. The U.S. Copyright Office worked in conjunction with the current administration to grant an exemption allowing third parties to diagnose and repair commercial equipment. You already know there was an ice cream indicator online that you would have to use as a tracker. If you got a taste for a McFlurry, you better check before you head out the door. But now
check yourself before you wreck yourself.
But now it looks like the power is back in the hands of franchisees, which is how it should be. All jokes aside, so.
Sadnov, what do you think about this? Was it your go-to at around 9:30 at night if you can't sleep or something like that? Waking up and get yourself a little McDonald's.
He's a Dairy Queen boy.
I've only had a McDonald's like ice cream once because, like she said, it's always broken. But when I've had
You've only had a McDonald's ice cream cone once in your entire life.
I never had an ice cream cone. I don't like ice cream cones. I only get the cup. But I only had it once and it was good, but it's never open. I actually prefer Wendy's.
The Frosty?
A chocolate
Frosty is elite. Yes, I do like a Frosty.
I've only had maybe 2 of those in my entire life. They're disgusting.
Oh, look at you. You've had more than 2.
No.
Wow. Okay, let's not body shame people here. MCD as a stock. Can we talk about that?
We don't have a position on.
We could if we wanted to, but we might bore you to death. McDonald's hanging out at $2.92 or so, unchanged.
All right.
Had a little bit of a sell-off after earnings, not going to lie.
Yeah, sure. And also, there's like 90 E. coli cases now and probably a class action lawsuit. So do that what you will.
That is true.
Hey, speaking of Wendy.
You are right. The Ivy rank is 56 in there, so I should give you some props.
Tom is not going to Wendy's enough, apparently, because Wendy's, WEN, announced they are closing 140 more low-performing restaurants by the end of the year. Wendy's is accelerating plans to shut down many of its lower-performing outposts globally, while also adding a similar number of new locations. The fast food chain will close 140 locations this year. And yeah, they're going to retool some locations because now most places want to be more drive-through forward, so more lanes for drive-through operations.
Wendy's, not really tradable, $19 and change. I was looking at some of the markets. I mean, they're okay. IB rank is good at 58. I think it's a directional play if you can do something there. Hard to sell premium unless you do it one side.
Morgan Stanley, yes, that Morgan Stanley is introducing a new portfolio for investors that's tied to the most prominent sports leagues. It will target high net worth sports fans and will carry a minimum investment of $250,000. Sports have proven to be an attractive and growing asset class as valuations have skyrocketed in the past decade, and that's left those who are on the sidelines wanting to get in. The new offering first came about when a Morgan Stanley client asked the bank to design a portfolio made up of the companies that support a specific sport. Tom, do you wish you personally had invested more in sports-oriented things in your career?
That's a really fair question. I've never had an opportunity to invest in sports franchises except.
Didn't you sponsor like an Eastern European volleyball player woman?
Yes, he did. Yes, he did. Yes, he did.
Didn't she write your name on her butt or something?
The company name. Yes, she did. Yes.
All right. Uh-huh.
And then she put on her shorts, which was yes.
That was just good marketing by her. Okay. She outmarketed me. Okay. It was very easy. But that was not. No, only opportunity I ever had to invest in a sport franchise is when the Ricketts bought the Cubs, and they were trying to raise money in Chicago to fill out the cash part of it. And I could have invested, and I didn't. And obviously, it was a mistake. But
and then they won the World Series. Another great call by Tom Sosnoff.
Well, it wasn't. I just didn't like the terms. But whatever the case was, I've never invested in anything sports related. And most people that have, unless you've done like top level, like unless you've done, like a major franchise, I would say most of the secondary investments in sports have been not very good.
Okay. I was just curious if either of you could buy a league or franchise, what sport would it be?
Oh, well, if you had your choice of any sport, I mean, football or basketball, probably.
Yeah, I think I would save the Bears.
Yeah, I mean, I would love to own the Bears. Tony, we should buy the Bears.
Yeah, I would save them.
Bears.
We'd start by putting a big cherry on their helmet, and then we'd work our way down from there.
Yeah.
Wait, so if the Philadelphia Eagles are worth $8 billion, how much are the Bears worth?
Pretty close to the same.
Oh, okay. Not after that Hail Mary in Washington. We are not worth $10 billion.
No, we ain't worth $10 after that.
Yeah, that's a downgrade. Hey, finally today, because it is Friday, you know what you love. It's a little segment I like to call Will Tom Eat It, where I scour the internet for food for fat traders. Tom and the rest of the Tasty team is headed to Dallas this weekend for building a complex portfolio. If you are in the DFW area, please stop by, say hi. But Tom, for you, I know there are several just wonderful, wonderful places to eat in Dallas, but I found for you an Ethiopian barbecue place. What? Get into it. Watch this. Look at this brisket,
I'm not going to go there, but I'm open to this.
One of the most unique barbecue experiences I've had in Texas is this Ethiopian barbecue spot where you can scoop spiced brisket with injera bread. Smoke and Ash is located 30 minutes west of downtown Dallas, but the vibes are East African. I wouldn't tell you to get the brisket fries if they didn't impress me both times I had them. The spiced fries and sauced meat come together like divorced parents at their kids' graduation. Then get a PhD in flavor with this jumbo meat platter. An astounding amount of food for $60. I like to scoop the brisket with this sponge blanket of injera bread, slide on some collard greens, layer some sauce, and then take a trip to Flavortown. And Fieri himself would roll his eyes trying these ribs, bite and chew like a classic Texas pork rib, but the bark a blend of Ethiopian spices. It doesn't need sauce to have a sensational salation. The rib tips are a Wally-sized Texan's favorite candy, little bones but big flavor, while the smoked Doro Wat chicken is sauced like your uncle on 4th of July, and by your last bite, you'll be confessing your love for Smoke and Ash as if you had a few drinks yourself. One of the most unique barbecue experiences I've had in Texas.
I like it.
I
like it. Everything about that sounded great.
Yeah, agreed. As long as I can have somebody serve it to me, I'll be fine.
Yeah, I'll serve it to you.
You would want a large man named Bubba to hand feed you.
Be careful what you wish for. Okay.
And don't bite the hand that feeds you. I would have to.
And I know who you're going to get serving you, and they're two different people. I'll serve you all right.
You want Billy Bob to wipe your mouth?
That looks good.
Good job out of you, Vanetta. Hey, listen, even the S&Ps are doing good. They're up 26. Vanetta just did great. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
Have a good weekend.
Have a good
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Well, the fruits of my labor of 2 weeks ago came to fruition yesterday when UPS dropped off a little something for me. You can look underneath your
Is this
thing
a
on the
bit?
left-hand side, right by the bottom of the booze. It's a gift for you. I was sitting on my couch one day. Open it. You can open it. It's for you.
This is hella sus. Holy shit!
Yeah, see that?
Oh my god!
Yeah.
Oh my god!
Yeah.
Where did you get this?
So I go to this auction site.
This is a
auction.
signed Taylor Swift from the Tortured Poets Department. It's a signed insert from
the CD.
Taylor Allison Swift herself. This is now my most prized possession. This is like the nicest thing you've ever done. We'll add it to my shrine. So wait, Tom, are you going out again tonight?
Yeah, I told you I'm going to the Aragon Ballroom. I'm partying tonight.
You're going to like a rock concert tonight, and you are literally wearing a white t-shirt that still has the folding crease patterns in it.
And you know that's what
That's not metal, dude.
You know that's what he's wearing too, because he ain't changing.
This is not what I'm wearing tonight.
Oh, you're not gonna wear your fringe jacket again, are you?
I'm not gonna tell you what I'm wearing. I got a really cool outfit for tonight.
And his really cool outfit is a Tasty FX zip up.
Can I vote now?
You can vote now. I will send you early voting. It's in your precinct.
Yes.
I'll send it to you. So my job responsibilities include signing Tom up for his shots, finding where Tom can vote, finding if Tom's vehicles are vehicle emission compliant, and
Don't forget my cell phone.
yeah, don't forget your cell phone and your pap smear.
We're going to pizza. We're going to your favorite pizza joint. And what's your go-to pizza?
Pepperoni black olive.
Ugh, I don't like that.
We're not
I don't know if we can do that. Saz is paying. We can do it.
Wait, do not. Okay, because I don't want you to be in a bad mood. Let the pizza sit for a minute. I know you're going to want to dive in. I guarantee you burn your mouth if you go right in. Okay? Then you will.
I like the way you guys talk to me like I've never eaten pizza before. I've had 25,000 pizzas in my life. Okay, I like the way you give me instructions on how to order a pizza.
Get the full scoop by checking out the archives at tastylive.com.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, confirm and send. But before we do, let's take a quick look at the market. Even the S&P sound off up 29, solidly green. NASDAQ up 101. Russell up 16. The leader of the clubhouse to the upside has been the Russell the last couple of days. Dow up 224. Volatility still over 20 at 2020, down 66 cents, still elevated. Bonds had a good run from 117.07 up to 118.23, just a tick off of their highs, just on their highs right now, up 24. Same thing with the notes. You scoopied and scalpied, taking a nice little profit in the notes. Bitcoin or the cash hanging out at 70,700. Oil up another $1.58 actually, flirting with 71 mid-range for the last 2 weeks or so. Gold catching another bid after taking one down day yesterday, significantly around $40 or so, but it is up 16, taking about half of that. Silver up 16 cents. Net gas down 3 cents, but really the movers today are Amazon to the upside. It was up around 13 or so. It still is, and Apple AAPL was down around $3. It still is down around $3 after earnings. That's all I got.
Let's do it.
I'm ready.
These are emails that came into us overnight. Yeah, it was busy yesterday. No bout of doubt it.
Mm-hmm.
And what were we down yesterday? 100 in the S&Ps?
Yeah. Even the S&Ps a little bit more at one point during the day.
I like these Bondolinis up 25. Like I mentioned before, we rolled our bond options this morning and scalped some notes. That's it. Other than that, not much else moving, is there, so far?
No. So far, status quo.
Yeah, the only thing that turned around this morning, like I mentioned just a few minutes ago, was the U.S. dollar. And that's something that it was up earlier. It's down now, so all the currencies are a little tiny bit higher. Not much, a little bit.
Yep.
Confirm and send. Let's do it. Friday. It is November 1st. I cannot believe it's November 1st.
I know.
Is there an ideal delta to use when selling options for earnings?
I mean,
I wish.
Yeah, if it's going to go your direction, you get as close to at the money as possible. If it's not going to go your direction, you go as far out of the money as possible. I mean, there's no way of telling. We like to stick somewhere around that 20 to 15-ish delta, if I had to say, when we're selling a strangle or something like that for earnings.
This is one of these questions we get all the time, which is there an optimal date to choose, like a duration? Is there an optimal delta? I like, my experience with earnings is that they're hard. So I like to go as wide as you can. I never use a big delta. So, I mean, I get as small as you can for earnings. And, I don't know if that's the best. I mean, sometimes, like last night in Intel, I used November, but in Amazon and Apple, I used December. So I don't even know, like duration, we just always messing with it too. There's no easy answer. Dollars at risk, everything's priced fair. But I like 16, 12, 14, 10. I like the lower deltas.
Yep.
Further out of the money. Let's go next slide. With the election coming up, is there any historical average for what to expect from the S&Ps? Also, would you trade the 0DT for Tuesday, or would you trade Wednesday expiration if you were looking for a volatility collapse after the election results are in?
I mean, I don't know if there's any historical average for what to expect in the S&P, so I would say no to this. I would say the closer you go to 0 days, the bigger bang and risk for your buck you're going to get. So depending on how you feel about your position and opinion, you can use that as a guide. I would probably stick to December, and November would be, with my typical positions, about as close as I would get.
Yeah, I mean, well, for sure, you're not going to, if you're looking for a vol collapse, you're not going to get it on Tuesday. I mean, nothing's going to happen Tuesday. If anything, vol, I mean, it might collapse a little bit, but
in the 0 days, vol doesn't even matter if you're going to go to.
Yeah, I mean, well, it'll matter on Wednesday possibly, but on Tuesday there's not going to be any vol collapse. I mean, it's just going to trade. Vol's going to trade cheap on Tuesday because there's going to be no news. Right. You're not going to know what happens on Tuesday. So forget Tuesday. If you're looking for a vol collapse, it'll be Wednesday or beyond. But don't forget, I mean, it's not like something's going to be very mispriced. They're
sure.
With the election coming up, is there any historical average? No, because who cares what happened in 2000 or 2008 or 2012? But the expected move from now till next Wednesday's close is 125 S&P points.
You had 105 yesterday.
Right, but I think I remember that right. Isn't it 125 to next Wednesday? You want to check on that really fast?
I'm looking right now.
November 6th.
Yeah, it's gonna 125. You're on the number.
Right. Yeah, I looked at it. I just remember looking at it earlier. It's 125. So pick your poison.
Yeah.
I'm guessing that by next Tuesday that number will be a little bit lower. I'm going to say probably around, I don't know, 90 or so. But I don't know.
Yeah, right. Nobody does.
And when I say,
you know what? I would expect it to be the same or lower with volatility IV rank and then volatility /VX in the 20 handle.
Yeah, I mean, the bottom line here is, though, that nobody knows, okay? No matter what anybody tells you about next week, there's not a single person in the world has any clue.
Sure.
So you're no better or no worse than anybody else.
But it's okay to have an opinion.
Oh, sure. I'm going to have an opinion.
Right.
Yeah, no question about it. I'm going to have an opinion. All right. On a day like Thursday, when the market is down so much, that's yesterday, I'm curious why you don't put on more opening trades in stocks that have been beaten down the most. It didn't look like you did that yesterday, and I'm wondering why.
Because he's not very good, basically what it comes down to. You see the S&P is up 26 right now. It would have been great. Now, if you followed option trades today, that's right, every Tuesday and Thursday, yesterday happened to be Thursday, we put our patent pending broken wing butterfly on an SPX. It should be doing quite well.
It's funny that I didn't even for a second think that yesterday's sell-off even remotely warranted stepping in. I mean, we're basically one day off of record highs.
Yeah, totally.
I don't feel like that warranted buying a dip at all. I mean, a dip to me is, I don't know, 5%, 10% or something like that. There's no such thing. I mean, I bought the bonds this morning. I bought the notes this morning because I felt the notes were beaten down to an extreme, but they've been down for 4 straight weeks.
Yes.
I mean, on one day is not a beatdown to me. So now I never even thought about it. I mean, if you're bullish, I can see why you thought that was a good opportunity. And it turns out with the S&Ps up 25 today, it was a good opportunity, but not for me. I don't think that way. I want to see price extreme.
It's only a good beatdown sound enough if you're doing the beatdown.
It's only a good beatdown if you're right.
That's correct.
Okay. Let's go next slide. If you sell a put and it gets tested, how do you know when to start making defensive adjustments?
That's such a great question, right? I mean, because it's subjective, but I'll tell you what I do, right? So for me, if I'm just selling a naked put, my directional bias is to the upside. I'm somewhere around the 30-ish delta. When that 30-ish delta gets to around 40, 45, I'm looking to sell a call on the other side to get my overall position back to that 30 deltas. That makes me comfortable. I'll worry about when it goes my direction,
Yeah, if I sell a put and it gets tested, I start making, there's no reason not to make a defensive adjustment. I'll sell a call against it. I'll do something. I mean, I'm not just going to sit there and I'm not just going to sit there and let the market take over unless I feel very strongly about the position. Like there's position. I have certain positions on where I'm like, I'm not going to touch this position because I'm very bullish. Like in bonds or notes, I didn't sell calls against those positions. But in something else I don't really care about, sure, I'll do something against it as soon as it gets tested, before it gets tested.
Yep.
Let's go to the next slide. I'm in a strangle and my call is at 50% of max profit. Because of the big down move yesterday and taking positive drift into account, would you ever close the call side just leaving the put side naked?
I'm strangling my call 50%. Again, we don't look at the individual strikes to figure out like what my P&L is. I'm going to do it by its totality because that's the position I have. Just, one side's always going to do good. Even in a vertical spread that's deep in the money, that's a full loser. One side's going to do good. The other side's going to be doing twice as bad. So I don't look at the individual. For me, it's more of a delta play. So I'm not looking at this in any way.
Since we built Tasty, we've always said what goes on as a spread comes off as a spread. And just because one side made money, we would never take that side off and just leave the other side.
Yeah.
We would probably, if anything, roll down the call side and just, and neutralize the position again.
Yep.
There's never a time when we're just going to leg out for the sake of legging out. Never.
Yep.
Let's go to the next one. I have a smaller account in which I've been trading put spreads and iron condors. I usually set my short delta around 20. what would you suggest as a next step? Should I get more aggressive with my deltas, or should I try other strategies?
Again, smaller account. Let's just assume that you really can't do too many naked options. So I'm going to say get a little bit wider with your iron condor. Not going closer to the money, but wider with your wing that you buy, using more buying power that way. So, and collecting more credit. So that to simulate more of a strangle type strategy. That's what I would suggest first.
If you have a small account in which you've been trading put spreads and iron condors and you've been doing okay, that's great. And as a next step, I would diversify into more strategies, because it sounds like you have enough positions, enough trades, but just from this. But I would diversify into more strategies, because strategic diversification is just as important as, number of trades and diversified underlyings and everything else. So before I get more aggressive with my deltas, I would try other strategies if that was my choice.
Okey-dokey.
That's it, sir.
Very good. Let's take a quick 90-second break and come back. We got even the S&Ps up 23. We'll be back in 90 seconds. It's Tasty Live. This week.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. I thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do. Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
90% goes to S&P index funds.
You got a double
10% straight to buy.
Is 20th century advice driving your 21st century portfolio? Tasty Live has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other Tasty Live personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this week in stocks with my man Jamal. How are you?
I'm fantastic. How you guys doing?
Doing great, sir. Thank you so much for coming on the show.
Yeah. What have I missed so far? What's going on?
You missed Sadnov scalping bonds. Tell him how good he is. By notes.
Oh, you're so great. You're so amazing. Did they jump on this number or what?
You get to keep your job.
Yep. They jumped. They were down. The notes had about a half a point reversal. The bonds had about a 2/3 of a point reversal this morning, just on the unemployment numbers. I don't know what the numbers were.
Mm-hmm.
Yeah, well, we're going to get into that in a little bit.
Let's do it.
Yeah, let's do it. Let's do it.
Perfect.
Wait a minute. Hold on. Wait, the World Series is over. I just remembered this.
Yeah.
So what's the matter?
Well, we got to settle something here. We got to settle up.
Did we bet you?
Yeah, you bet me.
Tony might have bet you.
You were such a gentleman in betting me because he was so scared to do it.
Oh, that's right. $10 or something like that, right?
Yeah. I mean, look, great series. Not so great for the Yankees, but they were kind of cold bats. But look, we're going to look back on Game 5 and be like, damn, how did that happen? That was pretty nuts. These dudes
that was sloppy play.
These dudes are up 5-0. I know. It's so crazy. With Garrett Cole on the mound, too? Wow.
Garrett Cole I haven't seen a pitcher. He was pitching like he was throwing bullets.
He looks horrible.
No. He was
up until that. Before that, yeah, he was looking great.
Yeah, he was looking great. And even in that inning, he was throwing the ball at 99 miles an hour. He looked good, but he just froze. I froze once when I was pitching in a softball game, just fooling around. I didn't get to first base, and the guy was like bitching at me, and I'm like, I just froze.
Are you freaking kidding me? Are you freaking serious right now? Are you comparing yourself to the World Series pitcher?
No,
seriously.
I'm not. I'm comparing myself not running to first base.
Wait,
cover.
I want to hear a little more about this game. Where was this game? What year was this? What are we talking?
And they had you in as a pitcher. What were you like, managing a girls' softball team? And it was self pitch.
No, it was like slow pitch. It was
you were never a freaking pitcher for us. Not one time I called bullshit on this story.
Okay.
Butchie was our pitcher. He was always our pitcher.
Okay.
You didn't freaking move, dude.
Okay.
We stuck you at third base so you could get hit with the ball, and maybe JJ would pick it up and throw it to first.
Okay. Listen. This is a different league. I played with after Tony. When they kicked Tony off the team, I went to a different team.
You didn't play after we didn't play.
Yeah, we did. I actually played with Marty. Marty's on the trade desk. And
yeah, I played with.
Was this like in Grant Park or where was this?
The best center fielder you've ever
seen. So anyway, I played.
You never freaking.
Oh my God! You can ask him when you're in the office on Monday. Anyway, so we're playing this game, and I was just pitching, and I forgot to run to first base, and the whole team looked at me like, oh my God, like it was the worst moment.
Nobody expected you to run to first base. You had 3 freaking spins, okay? You didn't freaking get the freak out of here. This is bull, okay? I'm sorry.
You can say whatever you want.
I'm really sorry.
I'm with you, Tom. You and Garrett.
Listen, stop. I can do this all day long about, Saj, you're a great bond scalper and this and that.
Oh my God.
Don't start telling me about how you ran at first base. Saj, look, if you didn't hit the ball out of the park, which meant we had a wall in right center field, then you didn't run anywhere.
Okay, let me without him interrupting Jamal. So I was playing with Marty. He's on the trade desk now. They had a whole team. And anyway, one night I didn't run to first base. They all bitched me out. So I'm watching this game the other night. I'm thinking Garrett Cole. He's done this probably since he was 4 years old in Little League. Okay, the guy's been probably the best player on the team for every sport he's ever played. And he just froze and forgot to run to first base.
Oh yeah, on that play, yeah, he did. I know, right? He messed that up. I mean, that wasn't Rizzo's fault for sure.
No. That was the game.
Yeah.
Rizzo
You and Garrett Cole
stunk too. He could have ran a little bit faster too.
I think, yeah. Well, on that play, I mean, yeah. Well, nobody's ever accused Rizzo of running fast. I love the guy though, but nobody's ever accused him of that. It's also similar to Tom. I didn't know Tom had so much in common with Rizzo and Garrett Cole.
Did I tell you
pull
about
up slides now? Boy, that was a good laugh.
Did I tell you about my Anthony Rizzo ball?
No.
Oh my God. More about you. Go ahead. Tell us about your Anthony Rizzo balls that you took.
No, that's okay. I'm not going to tell you now because you don't deserve to hear the story.
Okay. Let's mixed bag earnings and mixed bag markets this week. It's been an interesting and fascinating week, as we expected, with so much stuff going on with a lot of earnings, a lot of macro stuff. Let's move to the next slide.
But Chili ate it, so it doesn't matter. I had a beautiful signed Rizzo ball, and the dog jumped up on the counter and just chewed it into pieces.
The Dow, Nasdaq, S&P, and Russell 2000. I mean, they it's close. It's going to be real close, but they could end up red for the second consecutive week. Big tech earnings were this was the mixed bag, man. I mean, Google was up, but AMD was down, Meta was down, Microsoft was down, Amazon, looks like it's going to end up being up close to 200. Apple, kind of down flat, right? So it's really kind of a mixed bag this week. Inflation indicators, Fed's preferred indication, and Fed's preferred inflation indicator was a little hotter than expected, which means we could be seeing more rate cuts potentially. It's good for the rate story. Also good for the rate story. Non-farm payrolls this morning. This is the last one before the election, and they rose 12K, which is a big miss, likely impacted by the hurricanes. Can't forget about those earlier in the month. Dollar is losing ground for the first week in the last 5, but Bitcoin and gold also hit highs on the week, record highs this week. So kind of interesting there. And then lastly, talk about these bonds. Treasuries had the biggest monthly rout in 2 years on the bets of less aggressive rate cuts. But of course, they rose today, which means maybe we're getting more. We'll see what happens. So I got a couple of charts for you. Let's move to the next slide. Yeah, this is the one. I mean, this is the last several weeks of the yield curve. Each week we've been higher. We've seen 10-year upwards of 4.3%. I have obviously faded this move in bonds. Obviously, you guys have too. This has been a crazy move. Tell me more about what do you think?
Yeah, it's been a crazy move. It's been extended. It's one of the more vicious sell-offs I think I can remember in a long, long time.
I just think this is one of the better trades on the board, being long bonds here, honestly. So that's what I've been.
I couldn't agree with you more. We're buying them on every downtick.
Yeah. I'm not sure what the influence has been over the last couple of weeks. I don't even care.
You talk about scalping. I think you can scalp bonds, and from both sides, no doubt. I like Tom and your side of buying them first and then selling them, buying them on a dip and then selling them if they get a rally. But you could trade both sides because they have gone both sides.
Yeah, you can. It's just the worst thing about this is you don't want to get caught at the bottom, trying to that's the other thing.
Selling them, yeah. Mm-hmm.
And you've been able to sell some vol in the options too, right? I mean, those are some of the higher options vol on the board. I mean, not like implied wise, just implied vol rank wise, some of the higher stuff on the board. Let's move to the next slide. As a result, saying the same thing here. This move index is the highest. It's like a 1-year high that we've seen. This is how you know there's a lot going on in the bond area. When you look at the Bank of America Move Index, it's really been surging recently. As a result, we've been seeing bond vol pretty high. So you can get in there and sell it.
Continues to be high. Yes, agreed.
Let's move to the next slide. Also elevated is equity volatility. VIX yesterday closed a little bit above 23. VVIX is above 121. This is the volatility risk premium chart where you take the difference between VIX and historical vol. Historical vol has been fairly low, probably jumped a little bit after yesterday's move, but historical vol has been really low, and that's why you're seeing this metric fairly high, and you're able to, there's a lot of, I like to sell a lot of names after earnings. You can look at the JP Morgans of the world and Goldman Sachs. Those are elevated IVR, and they have no earnings coming out. lots of opportunities to make plays. These are the type of plays that you will find on Options Trade Today podcast. These are the type of things that Tony loved to go after, things that implied vol rank is elevated and there's no earnings. Am I right, Tony? What?
100%. That's my ball
right.
wax. That's right.
I know. Yeah. You ever watch that, Tom? Options Trade Today?
I mean, I don't watch it. So occasionally I'll listen to it. I can't watch the video.
Let's move to the next slide. Man, this is a year-to-date performance. Gold spot. It's like gold in the S&P versus everything else return-wise. Dollar's a little bit up there, but yeah, bonds. This has been the picture so far. I do wonder what this is going to look like in the next 2 months. I do think there's just been a lot of noise over the last month or so that has really dragged bonds down. It's going to be interesting to see where we end up on the year here with bonds, with gold. With bonds and dollar. Gold, I'm pretty sure, is going to end somewhere around here towards the end of the year, and we'll see what SPYs does. But just an interesting year when you see gold is one of the best performing things on the year, along with the S&P 500. I bet there's a lot of people, if you told them that at the beginning of the year, they wouldn't necessarily believe it, but here we are.
You're right.
Yeah, crazy. I agree.
Let's move to the next slide. I keep saying this, though. You ever notice like the times where gold and silver are really outperforming in the market, and you get those cheesy commercials on TV about like buying and selling? I really haven't seen those. Have you?
No, I haven't seen as many as usual. I have been getting this scam kind of emails, hey, you want to buy this gold bullion coin and stuff like that, and gold percentage it's up year after year for the last 20 years, outperforming stocks by 4,000%. It's really good. It's really good.
Speaking of the thousands of percent, after a 2,000% run in 2 years, SMCI has been rocked more recently. Some are saying this is one of the things that are showing the AI trade is kind of over, but I don't think so. I mean, you've seen a couple of names. Well, I don't know. Maybe this is some kind of
NVIDIA would beg. The NVIDIA price would beg to differ, but SMCI looks like it's more of a fraud thing than a AI trade.
But and actually speaking of Vecchio, he reminded me of this. SMCI is like NVIDIA's third largest customer. So how does that work? If there's a fraud with a company that's your third largest customer, do you just keep that money that they've already paid you? You do, right? I mean, you don't return that money, right? This is not going to affect NVIDIA, right?
No, that's not going to affect NVIDIA. But if they're the third largest customer and they're no longer around, then it does.
Yeah, there'll be somebody else to step up, I'm sure. DJT had a 54% range on the week, or I should say in the past 4 days, with week's not over yet. But election odds swung around this week, so did DJT. Big moves. Was halted a couple of different times yesterday. This thing has moved a lot. I know a lot of people are trading it. Do you guys got anything on here?
I don't. We traded a little bit. We did some ratio spreads in there a couple days ago, and we scalped them. I have no position on there now. I think the stock's down about $2 pre-market.
It is 33 and change. You are correct. Not enough.
Yeah, but it's been all over the place. The out of the money call skew in there was ridiculous. I mean, it's trading for like 350% volatility.
Yeah,
it's trading like it's going to 10 or 80.
Yeah, it's wild.
But it doesn't make any sense because it doesn't, I don't understand why it would go to 10 or 80, but whatever. Yeah. That's what the volatility is saying.
That's what the volatility is saying. Tom, this pertains to you. Comcast is considering spinning out their cable networks as a separate company. You still have time to get on YouTube TV if you want, but they're looking to change things up here. Dollar, again, takes a breather for the first time in 5 weeks. So, of course, next week we have the presidential election on Tuesday. We got the FOMC policy meeting, which is a little bit elevated higher in vol, on Thursday, November 7th. And then we got CPI report the week after that. And research this week, OJ, probability of profit may be deceiving. Check that out.
Good job, Jamal. Good job mentioning option trades today, every Tuesday and Thursday, wherever you get your podcasts. Good work out of you. I sent you your money, you grifter. We're going to take a quick 90-second break and come back. We got more Tasty Live with the opening bell after this.
Rock.
Know someone who needs a better broker?
Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like in horse racing, they would call it wire to wire. And in trading, they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tomas, breaking news. On Instagram, the first segment of your line dancing has been posted. You look a little nervous. Do you remember? Left together, switch, turn. Right together, twirl, turn. Hip, 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 hip.
Oh,
did you get it right?
Left together, spin, clap, hitch, turn, shuffle, rock, shuffle, rise, shimmies.
This is not good.
And there's the opening bell, my friend. Timing couldn't be better. Even the S&Ps open. Sadov, they're in the teens. Where's the plunge protection team? They're only up 18 or 19. NASDAQ up 46. It's the weakest of the group. Russell up 16. The Dow up 150. The Russell is the leader in the clubhouse compared to the E-mini S&Ps. Your pairs trade is doing wonderfully, Sadov.
It's a miracle.
2 ticks to 118.02. Notes 110.20, about 20 ticks off of their off of their lows, 10 ticks off of their highs. Bitcoin 70,500. That hasn't moved all day. Oil up $1.78, trading near its highs, about 45 cents off of it for the day. Lower to mid range for oil on its most recent move. Gold up $15. Silver, a bigger mover on a percentage basis, up 33 and change. On the earnings, you got Amazon, which was up 13 pre-market, only up 12 right now, and Apple, which was down $3 pre-market, down $4.50. Sadov, give me some words of wisdom.
I am taking off my Amazon position. Looks like it came in about $1. And your ratio spreads are pretty much unchanged. Yeah. Apple looks like it was a nice little winner. Let's see. Amazon's a winner. Apple's a winner. Let's see Intel. Well, Intel's got to be a winner. Intel's the biggest winner. So where are these calls? These puts in Intel.
These
looks
puts
like
in Intel.
Take a fill, 35 cents.
That's good. Sold them around 96 cents or something like that on average.
96, 97.
Mm-hmm.
Intel is the big winner. Winner, winner, chicken dinner.
Beautiful.
Intel, yeah. Yeah, we'll take it.
CBOE stock was up around was up yesterday going into earnings. It's down around $5 for those who play that.
What did we play? We played Intel, Apple,
Amazon. I think that's it that I can remember.
Intel, yeah. I think that's it too.
Mm-hmm. I'm sure our viewers will remind us in a moment with an email.
Yeah. I mean, I'm going to take off the Amazon. I don't see any reason to keep that position on. Goodbye.
And goodbye.
Goodbye, Amazon. All those ratio spreads were a scratch. The strangles in there worked.
Yep, pretty much. Well, we got the move. We thought it was going to be a muted move to the upside or lower, and it got an expected move to the upside. So, good strategy, wrong direction.
Agreed. The only adjustment that I need to make is to a little Boeing. Let's get this Boeing going. Let's take a look at anything else, see if we have any problem children. It's actually a good opening for us. Problem children, SPY, of course, and that's about it.
Let's see what some of these movers are. Even the S&Ps catching a bid. They're up another $10 off of their opening. Was up around 17 or 18. They're up 28 right now. On the downside, you've got RDDT. You notice Reddit down almost $5, $4.80. Apple down $4 and change. Netflix down $4. Carvana down $2 and change. Costco down $2 and change. Meta down $2.50. AMD down $1.80. On the upside, it looks like you've got Amazon up 13.5. CVX oil related and earnings related up $6. UNH up $5, helping the Dow. Marvell catching a bid up 4.5. Finally, something in Marvell to the upside.
Did they have earnings last night?
Not to my knowledge. Earnings are December 5th in Marvell.
Well, looking at our positions here, we're a little bit short overall.
Microsoft up 3.
Yeah, so I have a tiny leftover residual position in Microsoft from yesterday. I don't think these options are going anywhere fast.
TSM up $4, sounding off yesterday. Took a little bit of a beating, getting all that back and some.
Yeah. TSM's a stock that loves a little action.
It sure
loves
does.
to move. Yeah.
Yep. It's got a IV rank of 56, which is good, but its volatility is really where it's at. 45 monthly implied volatility, pretty good.
And it uses every inch of that. Let's take a look and see if there's anything else out here that jumping off the screen.
Man, they really annihilated Apple Premium.
Annihilated.
I had a December strangle in there. I think it's in by $3. Oh, sorry, it's in by about $1.50. I apologize.
Wow. I have that 4-way. Let's see where it is. Oh yeah, it's come in huge.
Yep.
I kind of think, yeah, it's coming a lot. I don't know. What are you doing here? You just hold it?
Yeah, you know what? I'm fighting the good fight in there. I'm just about even, maybe 50 cents away from being even. I'm going to stick with it. I'm kind of light on positions. I don't have a ton of positions going into the elections. I've been trying to put them on, and if they work, I take them off, and if they don't work, I kind of massage them. I'm gonna massage them a little bit. My thing in Apple is, do I roll down some calls? That's what my big story is right now.
I am thinking of just rolling down. I agree with you. I'm going to roll down a call spread in here, and I don't know. Let's see what else.
Play the game.
Question is, how much follow through will Apple have?
Yes, exactly.
Yeah, I don't know. So, but other than that, it's actually a good, today was probably one of the better earnings, one of the better earnings trades.
Yes, for sure.
All right. Well, I'm ready to start trading. Ready to get into our little Friday fast market.
Let's do it. Let's take a quick 90-second break and come back. We got fast market. You came to bet for us. Even the S&P is up 30. We'll be back in 90 seconds. Let's Tasty Live.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 million.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
team. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got the need for speed? No problem! On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, don't look now. Plunge protection team is back. Even the S&P's up 36, NASDAQ up 114, and the mighty Russell up 22, which is up twice as much as the rest of the indices, with the Dow up 288, and Sosnoff volatility in by 76 cents. Apple still down $3.
Yes. We haven't really, I just adjusted, I rolled some calls down in Apple. Premium was coming up real lot in.
Yeah. I think they pumped it in on the close too a little bit.
I think they did too. Mm-hmm. And one stock that premium really came in on is Coinbase. Surprised.
COIN on an uptick in Coinbase of almost $5.70. Yes, you are correct.
Yeah. Well, I'm trying to buy some stuff back in there. It's not that easy to buy stuff back, but they when you try to go buy stuff back, it's a little more expensive than it shows on the screen. But they definitely pumped some juice back into Coinbase. I mean, just they took some juice out of Coinbase. No doubt about it. All right.
You ready?
A little stronger than I thought today. I didn't think after yesterday's. After yesterday's sell-off, I didn't think they'd be this strong today, but we'll see.
I tend to agree with you with volatility expanding the way it did. I agree.
Yeah, I did not see this coming exactly at all. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. And thanks for joining us this morning. With the piece we do every Friday called Fast Market, where we take 10 trades from viewers all over the world. And these are like specific trades. So we try to get some new viewers in every week, so we'll see what happens. But you got to send in liquid stuff. Otherwise, it's too hard to do, especially in this current environment. So let's see what we got. A little AMD from our boy Harold. So with earnings out of the way, and implied volatility still elevated, how about a 10-point wide expected move iron condor? In case you're afraid of submitting this trade, hey, Bat, go grab Tom's doppelganger, Nick B. He's the real number one. I don't think
he really is. He really is. I agree.
But our AMD position is actually... Oh, we can easily do something on this position here.
You just bought back some coin.
Yeah, that was just covering some random strangles that we were short. They came in a lot. AMD. So Harold wants to do a 10-point wide iron condor out in December. I mean, the stock's totally on its butt. So let's do this. So if we went pretty wide here, you'd probably go to like the 25 delta, let's just say. 160 calls in that neighborhood. 130 puts, $10 wide on both sides. Collect about
pretty classic.
Yeah, pretty classic. You collect about 385, 386, 384. I don't know. Got to see. I'm at 385, nothing done. 384. Thought I'd get filled at 384, nothing there yet. I guess the markets aren't quite. I guess I was off a little bit when I first put it in. Now the mid price is 382. So let's see. All right, we're going to work it. Nothing done yet. We're working it, Harold.
Right.
380-ish, maybe. Let's keep going. Oh, 381 filled.
AMD, you are correct. 381 credit.
Aaron in First Solar. First Solar had earnings 2 days ago. FSLR. What do we have on in there?
Baidu volatility came in a lot too, Tom, if you're looking at that.
Baidu did?
Yeah.
So in First Solar, we have a ratio spread on. We're short. We're long the 150 puts, short the 140 puts, 1 by 2. And we're up a tiny little bit of money on that trade. On each one lot, we're up about 15 cents. So it's kind of, I'm going to leave that trade on. What does Aaron want to do here? Ivy rank is still above 50. He's right. Sell the Dees 155, 270, 155, 270 strangle in Dees. For 880. What am I? Well, it's 910 right now. No, it's actually like 905. Take it back.
Yeah. Well,
they pumped in some vol yesterday. So let me see what we got here, Aaron. Maybe it's 9. It looked a little juicy until I go in there to sell some premium. Then it looks like it's at. So nothing done yet. I'm working it. I think you might be right. I think you might be closer to right than I am, Aaron. First Solar is not my favorite trading stock, just so you know.
With the price of the spread you're talking about, yes.
Yeah, I think it might be around 880. It was showing up as a mid price of higher, but I can't get filled anywhere close to that. Now they dropped the mid price down to 885. I'm sorry, 855. We're still away. I'm at 885. Not loving this one, man.
With the way you walk in this order down, do you think it's really a tradable product?
It's not. I thought it was going to be higher. I'm at 880. I'm going to leave it there. I don't think I'm going to get filled. Let's go to the next slide. Aaron, First Solar, by the way, is a very tough stock to trade.
Yes.
And usually when you get spreads, it's okay. But, nothing done yet. Still working it. Nick from Hartford, Connecticut. Vol still bidding coin after earnings. Classic 16 Delta Strangle. Yeah, we just took off a coin position 2 minutes ago. Only because so I'm not going to put this on, Nick, because I just took one off. But just so you know, we have the 150-240. You want to do the 140-250? We just have the opposite position. We have the 150-240 instead of the 140-250. It doesn't make any difference. I just closed 20% of my position.
Beautiful.
So I'm going to pass on this just because I just took it off. But the only reason I took it off is because we took a lot out of it. That's all. Let's go to the next slide. Pete from Portage, Indiana, right around the corner from us. Wells Fargo, sell the 57.5. We rarely ever trade Wells Fargo. It's a lifelong embargo on Wells Fargo.
You're a rapper now, Sosnoff.
Well, that
rhymed.
We definitely have not been a fan forever. This is a pretty tame strangle at $1.16. That's kind of mid-price right now. Filled.
I mean, Strangles at $1.16.
I know you hate it. I know.
I do, but you just can't manage it at 50%. This is like, a 25%er, in my opinion.
Yeah, we'll see what happens. I haven't done anything in Pete. I haven't done anything in Wells Fargo in so long. I just wanted to do it. So filled. Let's go next slide. Here's another one this is from your cousin Gator Barista, but Dell is another one that is very challenging for fills. First Solar was one, and Dell is another one.
Yeah,
it looks better than it is.
It does look better. I've had Dell positions. You put them on, they're hard to get off. They're hard to get on.
They're hard to adjust. Yeah.
Yeah. The disseminated prices aren't good mid prices.
So
because of liquidity.
Gator, here's my issue. Stock, you want to do a Jade Lizard? It's a bullish play. Stock's up $5 $4.50 this morning. I'm not going to do a bullish play. Just with the stock, it's already had a monster rally as of late. I got no problem doing something small in here, like I'll sell some $2 options on both sides. Like I'll do the 160, 105 for 415 just to get a little strangle action on. It's not my favorite stock, but we'll take a fill at 425.
426 actually.
426 makes no sense above the offer. I don't get that. That's a weird fill. Maybe somebody just came in to do the other side or whatever. But
mid price is 424. Sound enough?
Okay.
You got filled at 426. I mean,
for Dell, that's good. Okay, yeah, we'll take it. All right, Gator, we'll give it a shot. See what happens. Let's go to the next slide. Matthew from Naples, Florida. Coke's getting extremely close to its long-term support level of 65. We haven't traded Coke in a long time. Even though support levels don't mean anything to us, Coke is on its butt, no question about it. I think Matt's right. What does he want to buy here? 60, 70?
Yeah.
Stock 65. I don't like Coke enough to spend a lot of money in there. But
you're a Pepsi guy, yeah.
I'll buy the 62.5, 67. It's just, if you sell the 70 calls, you only get 20 cents. It's not worth it. The 62.5, 67 is 284. The 60, 65 is 394. That doesn't make sense. So I'll go 62.5, 67.5. Mid price, like I said, is 284. I don't know where this thing trades. Maybe 286. Coke doesn't trade a hell of a lot. 286.
You're correct.
All right. Let's go to the next slide. I'll give it a shot, Matt. It's all right. No harm, no foul. Chinese stocks, Sean from Hong Kong. Chinese stocks were a hot topic 3 weeks ago, but now the buzz has faded. It might be a good time to sell KWeb Premium. Let's take a look. Haven't traded KWeb in a bit. Stock's 32. IV rank still high. No earnings on the horizon. All right. Sean, we got to support a little Hong Kong Sean.
You're still nursing that cold. You're still nursing that cold, huh?
Something like that. I mean, either the 30, I think the 30, 37 for $1.60, $1.61, Sean, penny off mid price. All right.
Got it.
We'll take it. Let's go next slide. I can't argue with this logic. Maggie from Liverpool. Maggie, we're going to be all over England. We're going to be in Manchester. We're going to be in Birmingham. We're going to be in London. Hopefully you'll get a chance to come on out. We're not going to make it to Liverpool. But 6B, Wide Iron Condor.
Wow, way to let it down. Nice.
The story of my life.
We're going to be all over London. We're going to be everywhere. We're not going to be in Liverpool.
Except we're going to be all over the UK. But I have a history of disappointing women on lots of levels, and here's just another one.
You're no exception.
Welcome to my world, Maggie.
Well played, Sosnoff. Well played.
Wide iron condor.
I, on the other hand, am an overperformer, Maggie, just to let you know.
Said nobody ever. 127 and a half, 125, let's kind of find something that's 132, 133 and a half. 127 and a half, 126 on the put side, 132, 133 and a half on the call side. It looks like it's 56 bips. I'm going to leave it in for a second, Maggie, see if we get filled. If not, I'll reduce it by a tick. But I just want to see if it fills first. It's hard to sometimes get a read on British pound. Got to leave it in for a second. Let's go next slide. Ron from Pittsburgh. Slightly bullish. I agree with you. I'm slightly bullish. Sell the 140 put and the same month call spread. No upside risk in Boeing. We just rolled up. We rolled up a bunch of calls in Boeing this morning. Our Boeing position is slightly bullish right now, Ron. I'm agreeing with you.
He wants $3.
Yeah, D. Sell the 140 put and the 165.70 call spread in a classic. Jade
Finish your
Lizard.
thought in a classic.
Jade Lizard. Let's just do this really fast. There you go. And let's go to the last slide.
Beautiful. Look at you flying through these.
TLT. Thinking about a skewed strangle small bullish bias. I love it. Let's do it. TLT. Skewed strangle small bullish bias in December. Let's sell the 90s and let's sell the 96s. Small bullish bias fits our position beautifully. Take a fill.
That was easy. Got filled at 264 also.
Nice. And I just got filled on the British pound. Condor. Yes.
Nice hold there in the British pound side of waiting them out. You're too good at this.
Okay. You do the wrap up here. I'll be right back.
You'll be right back. Okie dokie. We got AMD as a fill. FSLR we could not get filled. Coin we got filled. Wells Fargo we got filled. A rare Wells Fargo fill. Dell we got filled. A rare Dell fill. 9 out of 10 here. Coke we got filled. KWeb /6B. Boeing and TLT. And as Tom likes to say each time at the end of the segment, John, you did an amazing job, my friend. An amazing job. But we're going to take a quick 90-second break and come back. We got more Tasty Live with a market measure next. We'll be back in 90 seconds. With or without Tom. I think he had to go pee-pee.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I'm serious though. No, this is all seriousness. Go on you have Amazon, right?
Oh my God.
Stop. Well, it's a legitimate question from Tom, because Tom doesn't have Amazon. Tom doesn't have Amazon. It's a legitimate question. I don't have Amazon. People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure.
I'm ready.
Let's do it. Sponsored by the CBOE.
Yeah. We'll get to the market measure in a quick second. Talk about some things that are a little bit weird to me today. So the bonds did not hold that rally. They're down 7 right now, and the notes also, which were up all the way up to 29 or something, they're back down to 13. I haven't reloaded yet, but that's the big turnaround for me on all the different things.
They're all mid-priced for the day, and they're all mid-priced at basically unchanged to lower.
Yeah, Apple's rallied back a little bit. It's like 225, 224, so it's come back a little bit.
A lot, actually. It was down over $3, so it's taken half of its rally back. But even the S&Ps have rallied too, from up 18 to 22 to up 36.
Yeah, totally. The VIX one day is down 8 points, it was a very high close, granted, but it's had a huge sell-off. And and the only other stock that's kind of weird on my board is SMCI, down another 27. Down to 27.5. It's the weird thing about SMCI here is I have not traded it yet. And I thought somebody would put a trade in on Fast Market, but they didn't. There's some juicy premium in here, man.
There are earnings on November 6th also. Take a look at what's going on with SMCI here. IV rank of 104. About as high as it's been, Sadnov. Even higher than yesterday.
I hate buying this thing. but I had to sell some 20 puts at 240.
You were compelled?
There was something in there. Yeah, I was
By
compelled.
by the trading powers
Small.
that be, you were compel you?
Small.
You reduce your size. I gotcha.
Yeah. Amazon was a okay winner last night. Apple was a decent winner last night. Intel was the big winner last night. And other than that, I don't know.
Huh? I mean, if you don't know, I don't know. Sadnov, I don't know. That 1-by-2 ratio spread is in by 50%. If you want to, you closed it already. Sorry, you didn't wait like I told you. Never mind.
I'm out on the opening, Johnny. That stock can easily be
I know.
206.
I know. Mm-hmm.
I don't pay attention to it.
I know. You don't have 30 minutes for a friend. I got it.
Nope. I need instant gratification. I'm not sitting around waiting.
That's why they hate you. That's why they hate you, because all you are is about the instant gratification for yourself. You're just not a giver.
Who hates me?
The women, because you're instant. That's the thing. They're your instant gratification. You're not, you're just selfish. That's what it is.
All right, let's do it. Oh, I'm sorry. Before we do it, I forgot. Tomorrow we'll be in Dallas. If you've been, I don't know, hiding under a rock, haven't listened to the show in a while, but you are in the Dallas area, we'll be at the factory tomorrow morning, and the whole team's heading out this afternoon. We'll be in Dallas. Doors open at 8:00. Show starts just a few minutes after 9 tomorrow morning. Can't wait to see everybody. Can't wait to grab a little Texas barbecue as well. And we will it's our last complex portfolio show of the year. We're super looking forward to it. And we'll see everybody at the factory tomorrow. And
very
exciting,
good. Tom,
Mr. Batista.
Tom, why did you leave the show? Did you have to make a big boom boom?
No. I had an issue, had to be addressed. I addressed it. It's fixed.
Okay.
Don't you worry about a thing.
I gotcha. Gotcha. You just came in. You didn't say anything. So I figured you had to do a big boom boom.
No. Anyway, so this is what we got coming up tomorrow, and looking forward to seeing everybody in Dallas. That's it for today. All right, let's do it.
I'm ready.
It's only 9:07. We're early.
Well, we usually do it at the top of the hour, but yeah.
Yeah, it's early. A history of scary moves. Where do you think the team's going with this one, Mr. Batista?
I have no idea. I really don't.
I mean,
unless they're looking at the 5 to 10% moves. I don't know.
I mean, it is Thanksgiving themed, so, but a history of scary moves. Let's take a look and see where the boys are going with this one. So for new traders, large moves in an underlying can result in the stuff of short premium nightmares. Yeah, like a 50-point up move in the S&Ps today after being down 100 yesterday. That's not the stuff that I love. But experienced option traders know that it's unexpected moves that are really scary. To help us decide on strike placement, implied volatility times the square root of time until expiration gives us expected moves at any time scale. How reliable have the expected moves been, and does the answer depend on what time frame we look at? You want to tackle that?
Oof, it's a tough one here. I mean,
okay,
how reliable can expected moves be? I'm going to say 80. I'm going to say 75% of the time.
How reliable have expected moves been? I'm going to say very.
Yeah, sure, and 75 or higher. And how reliable? Go ahead.
Does the answer depend on what time frame we look at?
Sure.
And yeah, sure. I'm going to agree.
Yeah.
So I'm saying they're very reliable, and it does depend on the time frame. Mm-hmm. I think the shorter you go, the more accurate it is, and the longer you go, the less accurate it is. But the best way to take advantage of it is somewhere in between. That's like that 45-day thing. I think if you go out like a year or something, it's really hard to, to know what the expected move is. And if you're going out one day, that's reasonable. But, again, it's harder to profit from that. Let's go to the next slide. So we did a study using 20 years worth of data. We observed the realized SPY returns at the daily, weekly, monthly, and annual scales. Using the VIX derived expected moves for that time scale, we checked how many times the expected move realized the moves turned out to be. And we observed how frequently the realized move was at least 1 time, 2 times, or 3 times the expected move. In Black-Scholes theory land, these frequencies would be 32, 4.6, and 0.3. That's 1, 2, and 3 standard deviations. Okay, fair? 1 times, 2 times, and 3 times would be 32, 4.6, and 0.3. All right. Next slide, please.
Let's see where we go.
Okay. So on the daily moves, and again, remember, you're comparing this 21.9 and 0.3 to 32, 4.6, and 0.3. So the realized moves and then the frequency of the expected move, obviously the daily moves, it's going to be way under because it has to be. Okay. And that stays in line with everything we talk about in the show. Let's sell the daily premium and hopefully we keep the difference.
Sure.
Let's go to the next slide. So we go from daily moves to weekly moves. And in the weekly move world, the numbers are even, we would argue the numbers are even better. So you go from 32 to 17, from 4.6 to 1.6, and from 0.3 to 0.4. That doesn't really matter. But you're talking about, again, on a weekly basis, the realized moves are a fraction of whatever the expected move is supposed to be. So it fits the scenario that we talk about all the time. Let's go to the next slide. So now we look at monthly moves. And monthly moves are not that much different from the weekly moves, not that much different from the daily moves. And at 16, 1.5, and 0.4, we're kind of daily, weekly, and monthly all make sense for the Tasty methodology, right? There's nothing, nothing scary about this. You're going to have outliers that bring everything into line, but that's the nature of the business.
Sure. Otherwise, there'd be no premium to sell.
Otherwise, there'd be no business. Yes.
Yep.
And let's go to the next slide. So as soon as you get to annual moves, remember how I said before, when you go out to like an annual move, it's much harder. I can't predict something a year from now as well as I can predict something a week from now. When you go out to the annual moves, you can see that the difference between theoretical, which is 32, and actual, which is 30, is not that great. And the difference between 2 times the expected move, between 4.6 and 2.4, that's still okay, but you don't get a lot of 2 times expected move. That's that's kind of the regulatory threshold. The real one is on the 1 time expected move because that's where we set up most of our trades. We're not doing our trades at five deltas and 3 deltas. We're doing our trades at 16 deltas, 20 deltas in that range. So one of the arguments for not going out to trade to short premium and leaps is you just don't have that much of an advantage.
Exactly, because volatility has so much time to change.
Yeah,
so much premium built in. Yeah.
John, if you go back to slide number the first one of these slides with the daily moves, yeah. So you can see that the daily moves here, at least 1 time the expected. The daily moves are at 20 and 1.9 are less attractive than the weekly and monthly moves. If you go to the next slide again. No, this is the monthly. Can you go to the this is the yearly. Yeah. So when you look here at the weekly moves, this is very attractive compared to the daily and the annual. And if you go to the monthly, which is the next one, which is how we calculate most of the things on Tasty, this is the best. And that's why we go out to 45 days, because it's just over that 1 month period. And this has the lowest frequency and the best numbers all around.
Right.
And this is where we live. You know, why would you do the yearly when the monthly is twice as good?
Seriously, I don't know. Like, why would you? Why would anyone?
Right.
I mean, if you see this.
No, I understand.
But you know what they think? I'm going further out. There's more premium to sell, that kind of thing. Why do it every month? Let me try to do the easier path. Sometimes the easier path is not the most economical, I guess.
Yeah. No, listen, I completely understand. I think that this is just an interesting, it's an interesting discussion. And I think that it explains a lot. Let's go to the last slide, John. Do the takeaways.
Mm-hmm.
So all the daily and weekly levels, the VIX did a consistent job of overestimating market moves. Since the VIX is compiled from the 30-day option prices, it makes sense that looking at outlier monthly told a very clear story of 2008 and 2020. For all three, realized moves surpassed expected move far less frequently than Black-Scholes theoretical or so-called IV overestimate and overstatement. So at the annual timeframes, the market clustered more closely around one expected move, only breaking 3 times the expected move during the beginning of 2008. So essentially, just arguing that the annual is just so much more difficult. This plays into why long-term leaps are unappealing for retail sellers, because they generate very little theta for their buying power, and the strikes at the expected move, lack significant implied volatility overstatement, only 30% instead of 32%, and the other ones were down to 16%. So it's just a study that says, hey, this is why we do what we do. In our world, we have to be less right to be successful.
Great. Good job. Good job by you, Seth. I like the way you navigated your way through those slides. But look at this. E-mini S&P's up 54. NASDAQ up 200. Dow up 400. Russell up 27, Sadnov. Plunge protection team doing just fine.
Me no like.
We're going to take a quick 90-second break. Something you're really going to love here, Sadnov. We got Mr. Scott Sheridan coming in the house. He's going to answer your questions, Sadnov. Did you know that? 855-238-2789 or 855-BE-TASTY. Phone lines are open. I'm going to open the phone lines right now, Sadnov. So if you call in, you could be first in line. I got 4 or 5 lines open. So please give us a buzz. Sadnov, we'll be back in 90 seconds. You can go back to the bathroom. We'll be back in 90 seconds with Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Move with the rhythm, shake it clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
If you have any questions, feel free to toss them in the chat.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Tomas, we are back, my friend, and you know what that means. Enough out of you. Tasty Trade World Headquarters, your friend of mine, Rabbit to the most popular man at Tasty Trade, Mr. Scott Sheridan for the Scott Sheridan Studios. Take it away.
Rabbit is correct. Tom, are you finally getting on board with the Rabbit?
No, I'm definitely not on board.
Well, I know he's not getting on board with the Broken Wing Butterfly and SPX that paid another quick $1 for my fans on Option Trades Today every Tuesday and Thursday, wherever you find your podcasts.
Your fan just wrote in and he said, nice job, first winner of the year.
Hey, Tony, I'm proud of you.
Thanks again, Scott. Really appreciate it, man. That's why I feel you, brother. I feel you.
I appreciate it. Tom, I got to go to an expert.
Wait. Chris, I'm calling my wife. She's an expert on everything. Hold on one second.
Got to go to an expert. What do you think of the White Sox hire?
Who'd they hire?
You don't know.
Oh, you don't know? Venerable, no. The guy, he's been the guy. He was the Cubs, like a first base coach for the Cubs. He's been around.
I don't know.
I know.
I wanted them to hire. My choice was for them to hire somebody fiery like AJ Przinsky, but I don't think he was in the running. I wanted them to hire AJ.
They said they looked at they claimed they looked at 60 people. Is he coaching somewhere?
No, he's announcing.
He's announcing. Yeah, he'd be good.
Yeah, I wanted AJ. I would have taken Ozzy again easily.
Oh, Ozzy's a little old.
Not that old.
How old's Ozzy? He's older than you. He's older than us, isn't he?
He's not older than me.
Hold on. He's
60 years old. He's younger than all of us.
That's it?
Yeah.
Oof.
Yeah.
He doesn't look so good.
I would have taken Ozzy again, but I much would have preferred AJ. And I mean, I wish they just would have brought somebody in like that had some White Sox history with some firepower.
Well, hopefully.
I think AJ burnt too many bridges, but I think
with what?
Just with he's outspoken, but I think that all the White Sox fans would have wanted AJ.
So how many bridges have you burned if being outspoken burns bridges? Has anybody told you what bridge you're not allowed on?
I don't ever bite the hand that may one day feed me. I burn a few bridges,
Tony,
just from
Tony. We were just insulted.
Yeah, you're not kidding. We were.
Right. Ouch. Ouch. That one hurt, actually.
I don't really burn bridges. I'm not saying this to be negative, but you're much more.
I mean this in the nicest ways. Go ahead. Let me have it.
You're more of a bridge burner than I am. Like, I don't actually, like, I never hold, like, I don't have grudges. I don't hold anything against anybody. I never,
do.
like, you do. Yeah. You do know
Scott,
that.
If you can't admit it, I'll admit it. I hold grudges.
You know that about yourself. And Tony's the worst of everybody.
Who do I hold grudges against?
Tony's the most realistic of all of you. Okay.
Okay.
Wait a minute. Hold on.
Do tell.
Go ahead.
So if somebody gets on your bad side, they're dead to you.
That's right. But I don't hold a grudge. I don't hold a grudge. They're just dead to me. Like, I don't think about
same
it.
thing.
No. There's a difference because I don't think about them. So I don't give them energy.
Okay. They're just dead to you. Right.
Yes.
Tony.
That's true. That's true. They are dead to me. I just don't hold a grudge.
Right.
Okay, he's off of you. He's gonna screw me now. Go ahead. Let me bend over. Go ahead.
Tony holds a grudge.
I don't hold a grudge.
You hold it just burns inside of him until he feels like he has a chance to get even. Like he's a road rager in disguise.
100%. See, there you go. See, it doesn't bother me, but I know if I'm patient enough, I've lived long enough that I'm patient enough that this SOB is going to come around. And when he does, like Scott, not only is he dead to me, but I'm going to show him how dead he is to me. Scott will just let it go and, won't even pick up his phone call, that kind of thing. I'm going to pick up his phone call.
Set the trap, and then
set the trap, pee on his cigar, give it to him, and let him smoke it. That's correct. That's correct.
Now, me,
here it comes. You're a lover of all people.
Nobody's ever dead to me. I don't have any revenge things. Nothing.
Yeah, I know. Yeah, yeah. I have pride. Scott has pride. I have pride. You have no pride. Is really what it comes down to. If somebody screws you over for a couple $1 million, you go, it's okay. He didn't mean to. That kind of thing. I get back into the fold. No, not with me. Dead to me.
I just got to bring up one topic, one question, because I don't think there's a little revisionist history going on here. Amex.
That's an object.
You can't count credit card companies.
I got to give him this one.
Yeah, I mean,
I got to give Tom this one. I agree.
This is about people, not about credit card companies.
Right.
Really? Because you were a little hurt ass. You were a little hurt ass about that one.
No.
Okay.
True.
All right. Fair enough. Hey, did you send the picture, the mashup? Did you send it to Christy?
Oh yeah, I sent it to her on Twitter. She saw it. She laughed. She loved it. She said she knew there was something that she liked about the two of us. She couldn't put her finger on it. Now she can. It also ruined her Thursday night, is what she said. I'm not sure about the first comment. Definitely sure about the second one. It's gonna ruin more than just the Thursday night. Like perpetuity. There was an old mashup of Tom and I, and it looks like Christy Ross's husband, Craig. I mean, that's what it looked. A bad facsimile of him, but close enough that you could see the resemblance. So yeah, she was not happy about it at the very end.
I got it. I appreciate it. All right, should we do some business?
Let's go. I got phone calls. Sure. Come on.
All right, let's do some business. Then we'll get to some phone calls.
Beautiful.
All right. Top 15 symbols going through the system. First 40 minutes a day, no broad-based indices or futures. Tom, for you, number 15, Boeing at a 62. For everybody else, Amazon at a 28, Apple at a 40, NVIDIA at a 50, Intel at a 68, Tesla at a 32, AMD at a 42. Microsoft at a 39, Meta at a 27, Coin at a 63, TLT at a 95, SMCI at a 105, MSTR at a 58, Google with an L at a 34, DJT at a 78, and number 15 for Tom, Boeing at a 62. Rounding out the next 10, TQQQ at a 54, GLD at an 80, PLTR at a 73, Starbucks at a 42, SOXL at a 45, BITO at a 32, and SLV at a 79.
Beautiful. Great job out of you, Scott, as always.
Appreciate that.
You're welcome. Let's go to our first caller. I got Kai in Canada, Vancouver to be exact. What's up, Kai?
Morning, gentlemen. And it's Cal, K-A-L. I'm a long-time Tasty. No worries. I'm a long-time Tasty follower and excited to be a Tasty Trade customer in the future. Will you ever offer paper trading or simulated demo accounts like you used to the environment?
Yes. There's some back-end work that is being done that will allow us then to proceed with creating, a practice site. Probably my best guess would be either probably early next year. That would be my guess.
Perfect. Thank you, gentlemen.
Thank you, man. Appreciate your time.
Thanks,
Thank
Cal.
you so much for your continued Tasty Live and Tasty Trade support. I'm going to go to New York City. I got Simon. Simon in New York City. What's up?
Hey, guys. I got two things. First thing is actually a pretty short suggestion, and thank you for everything that you do. I think one thing that would be helpful, you guys obviously have an LLM running with the Tasty bot, which is cool. But one thing that I think that would be really useful is if you took all of your videos that you have in your archive and you grab the transcripts out of that, which can be automated. You can just download that off YouTube, and you fed those into your LLM and had that generate descriptions. Because what I found when I've been searching through the archives, which was suggested to me last week, I was able to find things, but it's actually to find a lot of the things because there's no description on the videos underneath the video in the archives. It's actually, you have to kind of, be really careful and interpret what the title might be and then scroll through it. So that's kind of just one suggestion. And if you guys would like, further details on that or how I would do it, let me know. It's just one of the things that I happen to be doing with some of the things I'm doing. The question I have is around the difference between the future and the index, like /NQ and NDX. I've been enjoying the span margin, as you guys have suggested. And a while ago, I was asking you guys, well, how do you increase risk or increase or scale up? And you guys said, well, what you want to do is you want to increase your deltas, not increase your contracts, right? So when you do that, though, and you take a look at the difference between NQ and NDX, obviously it takes a lot, more buying power to do one contract in NDX versus one contract in NQ. But the span margin makes it so it's more efficient to go do the two contracts in NQ versus one in NDX, something like that, right? So I was wondering if you had any words of wisdom for me about that, because I'm having a hard time deciding, which way I want to do this, because you guys give a lot of information, and it's wonderful information. I'm just not quite sure how to apply it in this case. Is it worth it to do any NDX, even though it doesn't have span margin, because then it means less contracts? Or is it, you might as well just do 3 contracts on NQ? Thank you for everything that you do.
And you can send me an email. I'll take your advice and push it on to the team if you want to. My email is bat@tastylive.com.
Yeah, and just so you know, Simon, we already do our machine learning team, our data science team. They already do download all of the. They haven't finished everything yet, but they've been basically downloading or uploading every single piece in our archives that we've ever done into our learning model, so that exactly what you're saying, it's already in the works. They've been doing it now for the last month, and they still have a little more work to do, but because we just have so many archives, but that's all part of the process. That's in our AI bot. That's already in there. As far as the NDX question versus the NQ question, our preference, neither of those markets are great, but our preference would be if we had to compare apples to apples just based on capital required, we'd probably go /NQ, just because it's a little bit more liquid and it's a little bit more capital efficient. Even though there's, an additional, depending on how many contracts to get the notional to be the equivalent, we'd probably go NQ, just for liquidity purposes more than anything else.
I would also just throw out one other item, depending on whether or not you have PM, because that matters. Because PM doesn't impact span, but it definitely impacts, on what it would for NDX.
That's fair.
Yeah.
Yeah, my issue with NDX.
Yeah, but even with the. Sorry.
Go ahead, Simon.
So even with the span margin, even with the portfolio margin, it doesn't compare. The span margin on NQ using the kinds of trades you guys talk about, it's way better. So I think what you're saying is that it's better just to do more contracts as opposed to less contracts on NDX, more contracts on NQ as opposed to less contracts on NDX, even though, sometimes we talk about, don't do more contracts, right? But in this case, it seems like it's a better idea to actually just do the more contracts on NQ, I think is what we're saying.
Well, we are saying that only for liquidity reasons. And let me tell you something, NDX is not that bad, but unless you're really skilled at price discovery, that's going to be your challenge. Because if you're just learning, I would trade the Qs, because you're going to get good price discovery. The hardest thing about NDX is not actually getting filled. It's doing the initial price discovery. It's a lot of work.
Interesting. I'll have to look up your archives on price discovery and try to figure that out. Thank you so much for everything that you guys do.
You got it. Yeah. Price discovery is the hardest thing. Figuring out how far off mid-price you've got to go to get filled. And that's a skill. And if you use the Qs, you can figure it out super easy because you only have to move a penny. If you use the NASDAQ futures, you only have to move 2 ticks. In NDX, you might have to move $1, so it's harder to figure out.
Very good.
Thanks.
Awesome.
Thanks, Simon.
Thank you for your call. Appreciate it. I got a couple of lines open. I'm going to go to Denver. I got George. George in Denver. George, what's up?
Hi, good morning, guys. 2 quick questions. One for Scott. Any word on getting bonds on your on the website, on the app?
You're talking about T-bills.
T-bills, yep.
Yeah. I think Tuesday.
Oh,
ooh, nice.
Well, that was
we're in the. Yeah, there you go. So we're in the final stages. If it's not Tuesday, it's going to be next week. So, and it's really, it's awesome. Yeah, it's awesome. So really looking forward to getting that out on the platform. It's initially only going to be on the web from being able to place the trades, but you'll be able to see your positions, whether you're on software, web, or mobile, you'll see them. But if you want to place the trade, you're going to only be able to do it on the web base to start with. We will get it on the other platforms.
Okay, that's easy enough. Now, second question is, I called in last week and had a discussion on the Zebra, ended up getting short a contract. My question is on the buying power there. If you have a deep in the money call on the NQ, as an example, do you get any credit for that, or do you just have to have the same amount of buying power because of the short contract?
I don't understand the question.
Say that again.
Oh, okay. So just say if I've got a short NQ contract, naked, there's a certain amount of buying power that's held for that. Now, if I happen to have a long call in the money, do you get a break on the buying power for that?
Is the short option a call?
No, the short.
Are you putting a vertical on? Is that what you're doing?
No. I've got a long call deep in the money.
Yep.
And a short contract.
A short future.
A short future contract, yeah.
And this is in NQ, or I'm sorry. They're both in. Are they in the same product? Yes,
they're
you
in
would
the same
get.
Product.
Yeah, span. So the way span works, it basically takes everything, throws it into a blender, and then spits out a number. So yes, you would get some relief for that. It wouldn't be the cost if you're long the call and you just went to sell the future, the requirement would not be the full cost of the future.
Okay. That's what I was looking for. And you've answered the other question. And Tony, I won't give up what your response was when I told you about the TV device. Thanks, guys.
It's fair enough. Thank you, brother. We're going to go to Dallas. I got John. John in Dallas.
Good morning, everybody. I'll be glad to see you tomorrow at Dallas. And I have a couple of questions for Scott. I'll let you know this a couple of years ago, but I'm still getting that data that, like if I try to close one of my stocks or options, it'll show like profit of 30%, 40%, sometimes 100%. But when you try to close it, it's really like 2-3%. So I sent you some pictures a couple of years ago, but I still get that problems on a consistent basis.
John, I'm sorry. You have my email, obviously, Scott at Tasty Trade. Could you resend that to me? I'll look at it. I'm sorry, I don't remember what the situation was, but I'm happy to take a look at it and get it to the right people or person.
Oh, great. And my other question is, like, when you try to close an option, you will see like max profit, certain amount, and max loss, certain amount, but they're both the same. Why do you show positive on one and both positive? Why is that? Kind of misleading for me.
John, I'm gonna have to see the trade. So if you could send me a screenshot or a couple screenshots, I am happy to answer. It's going to depend on what the trade is. So I can't. It's not just a simple blanket answer to say here's what it is.
Okay. What is that little bit of yellow OC on top of that closing max profit, max loss? There's like a yellow OC on it. I don't know what that means.
Guys, I don't know what he's.
Okay.
I'm not sure what he's looking at.
Yeah.
Sorry.
You got to send me a pic. I'm not sure.
Send me the screenshots. I'm happy to take a look.
Okay. I don't want to create enemies, but they're the best.
No enemies at all. No, I mean, I'm sure we'll have an answer, or if they don't have an answer, I'm sure we'll get a fix.
Yeah.
Open call. I'm not sure what it is. Open call. I don't know.
I'm thinking order chains, but I think it's something tied to your order chains if you're routing that way. But just send some pictures and we'll get you an answer.
Could be. I don't know.
Okay.
Yeah. I don't know.
I appreciate that.
Yeah.
Awesome. Thank you, my friend.
Tomorrow. Sure.
Awesome. We're going to go to Michigan. I got Vince. Vince in Michigan.
Hey, this question is for Scott. Scott, on the platform, you have group by order chains and group by custom. And I was wondering, I get confused with this once in a while, whether you do a custom, then if you try to flip it to order chains, it changes everything. Is there a way that you can put like a, folder strategy where I can put all my underlyings under, if I'm doing a butterfly or verticals, can I just group them like that? I think Thinkorswim used to have that. Like
that's coming. That's in the works, but not now. But that is coming. And the answer, I'm sorry, I want to go back. OC is order chain tag. So Tim, who runs our product team, he just confirmed that. But yes, that is coming to be able to sort by strategy.
Okay, perfect. That's my question. Thank you, guys.
Yep. Awesome. Thank you so much for your call. Appreciate your time. We're going to go to South Carolina. I got Zach. Zach in South Carolina.
Hey, guys. Thanks for taking my call. And as always, thanks for the free info and teaching all of us while we learn. But I got a question for all of you guys. So I've been trading the Tasty Trade way for about 2 years now. And prior to that, I was more of what you guys would call a public trader, right? I was just buying and holding index funds. And I wanted to ask you guys about your market awareness when the COVID sell-off happened. I've been playing around with your backtesting software, and all the strategies do pretty well. Then 2020 hits, and they get their stuff handed to them, right? And I know some of that backtesting software doesn't take, being strategic and rolling trades into account, that sort of thing. But my question is, when that COVID sell-off happened, I remember when COVID hit, Trump and Fauci having a press conference in the market, dropping 5% in 20 minutes and getting halted and crazy things like that. Was there a point in that sell-off where seasoned traders like yourselves maybe said, we need to pump the brakes a little bit and sit on the sidelines and wait on this to cool off? Or, I guess my question is, what did you guys do during that sell-off? Because it was a lot different than, say, a 2008 or a 2022 sell-off, for example. It was so fast and so violent.
I'll go first. The 2020, the pandemic sell-off was brutal. There's no way to sugarcoat it. The Bat and I, because I can't speak for Scott as much because Tony and I did it on air every day, but we were like everybody else. At first, we weren't sure what was going on. None of us had ever experienced a pandemic before, so the whole concept was crazy to us, and the market was, essentially, and you're right, we were dropping some days 2, 3, 5%, and it was a 33 or 32% sell-off in 5.5 weeks. So that was violent as could be. We probably got long too early. We probably didn't go quick enough to the sidelines, and there's no question. I remember like it was yesterday, getting run over in some very big name stocks, and not so much in the indexes, but I think we got hurt the most in like stocks like Apple and other big name stocks that were very liquid, but there was just no end in sight. So if you're asking, did we navigate it better than we have in the past? The answer is probably not. We did everything we thought we were supposed to do. Like, seriously, we rolled down calls aggressively, but the problem was that volatility went from mid-30s in the beginning to mid-80s at the height, and there was no way to defend that volatility move. So even when we rolled down calls, it didn't help. It didn't help to defend our P&L. It defended our delta, but not our P&L. So we definitely took a hit in that part. The first part of 2020 was brutal for, that's one of those outlier periods where we definitely took a hit. And I don't think we navigated it especially well, but we also had never seen a pandemic before, so it was a little weird to us. Tony,
yeah, no, I think Tom summed it up. I'll just say one thing. The market went down 20% during that time frame, and forget about even the volatility, which is what really hurts us more than the 20%, because the strategies kind of help you a little bit there. But when did you buy the dip? Like, I bought the dip yesterday. It was down 1.5%, 2%. You do that and you go down 20%. When you don't ever know when the market's going to do that. So you got to keep
That's a good point, because if you remember when the pandemic hit, the S&Ps were at 3,300, and we didn't start even nibbling until 28 or 2,900. And at 2,900, I thought I waited over 10%.
You thought you were a hero.
I thought that was a good sell-off.
Yeah, right.
But they got down to 2,200, and that's an ugly, it was not 20%, Tony. It was more like 33% in total. We bought after 10% drop, but it dropped another 20% after that.
Mm-hmm.
Yeah, it was crazy. So it's kind of a once in a lifetime thing, but I just thought, I just wanted to hear how you guys navigated through that. We
didn't do very well. We probably did better than people that had no idea what they were doing, but we didn't
do as good as those people on the internet that said they made 4,000%. That's for sure.
No, we definitely lost money. We made it back in the second half of the year when they killed the volatility and the market rallied up a little bit. We made it back. But the first half of the year, that first couple of months, from March to June or whatever it was, March to late May, that was rough. That was rough.
Thanks, my man.
Well, yeah, thank you guys. I appreciate it.
You got it. We're going to go to Boston. I got Ragu, the big Ragu.
Hey, Brad. Hey, Tom, and so my question is, let's say for a $10,000 account, what is the ideal theta we're looking for? And given I know the VIX varies and all that, so let's say what's VIX today? Maybe like 20. So in this kind of VIX, what would be the ideal theta? And what's the ideal theta when the VIX is like way below like 10, 12, and when it is high like 30 or something?
Do you say a $10,000 account?
Yeah.
10, right? You said 10?
Yeah. Yes.
Yeah, I'd say somewhere between 1/10 and 0.3%, maybe a little, maybe 2+0.1% of your net lick.
So $2.
Oh, okay.
No, that's
10,000. No, it's 10,000. It's $10. No, sorry, $20. I apologize. $20.
Yeah, it's 20.
I'm sorry, 10,000. $20.
Yeah. So at least in that 20 range, max would probably be 30 to 40, low side 10 to 20, 20 plus you're talking about on your daily theta. It's about 0.2%.
Yes.
Could be as high as 3 or 4 max, but that's
Tom, does it matter? Does the research show? Does it matter once like an optimal number of underlines? So
no, it doesn't. The more underlines, the better. But what matters is the level of volatility. And when the VIX is in the 20 range, you're going to be up a little over that. So on a $100,000 account, you want to be between, let's call it between 1 to 0.2%, maybe 1.5, somewhere in that range. But on a $10,000 account, you're going to be a little higher. And with VIX this high, you're probably talking somewhere around 0.2% to, you could be as high as 0.4, but 0.2 to 0.3 would probably be more ideal.
And what's the correlation to that usage of buying power? How much
your buying power is going to be in a $10,000 account? Your buying power is going to be in that. On a moderate case, it's going to be around 40 to 50%. On a conservative case, it's going to be around 40. On a moderate case, around 50. An aggressive case, up to 65 or 70.
Good.
Mm-hmm.
Very good, sir.
Yeah.
Thank you.
Thank you very much, guys.
Thank you for my time. We're going to go to Jersey. I got Kevin in Jersey.
You always go to Jersey. You're a homer.
Hey, Jersey.
You always go to Jersey.
What can I tell you? What's up, Kevin? Yeah.
Hey, I have a spread that I want to run by all three of you guys for this infamous next week, January 31st, buying the 455 put and selling the 400 against it.
455. What symbol?
Buying the 455 put on SPY and selling the 400 against it for 97 cents, roughly $1.
Well, you got to be really bearish. I mean,
of course.
Do you think we're crashing?
So I like this. I like the trade because I have that trade on. Not as aggressive as you. I'm way more close to that money.
455 or 555?
455 with a 400.
Tom, that's 100. That's 1,250 spook points. You have that trade on?
Yeah. No. I have no. I thought he was up. I'm sorry. I'll tell you.
Buying a 5 delta option, selling a 4 delta option, 3 delta option.
Right.
Not a type of trade we would make. It's a lottery ticket. If you want to place that trade, go right ahead. I mean, it has a 1% probability of success, but go for it.
My comment is, if you think that's in the cards, do spend the same amount of money, do less of the 455s. Don't sell the other one, because if you think we're going there, why are we stopping there? We could, so if you really think that, I wouldn't sell a penny option. Just do less and hope, again, it's a lottery ticket.
I'm sorry, Scott. I have the at the money spread on. I have the 83.
I was gonna say, there's no way that you have 120.
No.
Right.
I have the at the money. The expected move, just so you know, for next week, right now, the expected move is 125 points.
Yeah, but he was going out to January 31st, where you got 38. Expect to move at 38.
Think about that. It's a 125 point move.
Yeah,
we had that yesterday.
Sure,
I know, but the expected move by next Wednesday is 125.
So that's effectively nothing. A 125 point move is nothing.
Well, we had a 94 point expected move this week.
But times are not like they used to be. Okay. I'm almost 70 years old.
Go for it. I mean, there's no look. I mean, go for it. I like Scott's idea. If you're going to pay 90 cents for this spread and you're going to do it 3 times, I'd rather see you buy one of the naked put and have the unlimited success
unlimited to zero. But if the market goes to zero, we're not going to be on next week. So good luck with whatever good luck with your position.
Yeah. All right, I just wanted to run it by you guys to see what you think of what your strategies are going to be for next week. So
I'm long put spreads just like you.
Yep. Sadnov, why don't I let you go? I still got 2 more callers we can take real quick. Does that work for you?
Yeah, I have to hop on a conference call, so yes, please.
Go ahead, but please stay on, Scott. We got 2 more callers. I'm going to go to Nashville. I got VJ in Nashville. VJ? Nashville?
Yeah, can you hear me? Yeah, can you hear me?
Yes, we can hear you, sir.
Hello? Yeah, hey.
Hey,
Tony, I've got to say, before Tom runs out, I've got to say, usually Tom is no match for your verbal skills, Tony, but you got him today with the comment about the English woman. So that was a good one. That was a good back and forth. So
thank you, sir. Thank you for noticing.
Yeah. Real question on the trade, Tony. I've had, before the earnings, right, I put on a call spread on Apple, okay? So it's a 245, 255 call spread, right? So it's a winner, right? Because Apple's trading at like 228, something like that. But now I'm not able to close it. It's showing it as a zero, like it's right now trading at like effectively a penny. So I'm willing to pay the penny, Tony, and close it, but I can't close it.
All you need to do.
My buying power is locked up, Tony. So what do I do?
VJ, it's really simple. All you need to do, you're short the 245, 255 call spread. There's no bid for your long. You can't trade it for under a penny. Just buy your 245s for a penny. If you want, you could even go. Is it for today?
Yeah, it's today. Yeah.
Okay, it's today, right? So you could buy the 245s for a penny. You could even, now there's no commission to close that, so you won't pay any commission on that. If you wanted to, if you thought there was, again, like the other gentleman wants a lottery ticket on the downside, you could go buy the 230 calls for the same penny. Now you're paying $1. You will pay commission on that, but now you are long the 30-45 call spread. I mean, the stock would have to rally $8, but who knows? So if you want to take a lottery ticket, but you could get your buying power back either way. Cover the 245. Now you have the 255 just as a lottery ticket, or the cheapest, the best option you could buy, the highest price option you could buy for a penny is 230, or just pay a penny for the 230, and now you got a vertical.
Basically, all you have to do is buy that short strike, and all your buying power comes back.
Correct.
Oh, okay. Well, thanks, guys. Thank you again. I really appreciate all the information y'all provide, and thank you.
You got it. We'll go to L.A. Braram is our last caller in L.A.
Hey, can you guys hear me?
I tried. Yeah, well, I can hear you. I tried. Sorry about the butcher.
Yeah, it's fine. Don't worry about it. So you guys had this thing. Bat would get this. Bat was 2 times 17.
2 times 17.
34.
34.
Exactly. What's twice that?
68.
We're getting set up for something.
So you move it 1 decimal point, and then you add it up. That's 17% of 42. It's easy. 71.4. one, right?
Thank you, my friend. Yes, you are right. The Tom
Wait, hold
Sadlov
on.
question.
Yeah, I know. The thing is, what's his name? Jacob. Jacob comes in. One of you guys are on my server. You see me talk about fractional code. He comes in and says, "Oh, fractional Brownian motion is this and that," and he's wrong about a bunch of things. And no one there challenges him. The dude thinks he's so clever. So if this thing could give you to Jacob in a follow up, try doing the drift, and I bet anything you'll get it wrong. Also, if you guys could do the futures options of futures, so I don't have to call in if I want to sell calls on I don't know, Bitcoin or Ethereum futures against them. I have to call in. It'd be great if I didn't mention
Bitcoin options.
Yeah, well, Bitcoin futures, and if I can do it, the only one I can do it on is the oil and the micros, right? The Nasdaq and the crude oil. You can sell calls against your futures 2-for-1. For the rest of them, there are options, but I got to call in. There's a bunch of leverage ones. You guys, Robin. Robin had have them. So
I'm sorry, I'm not. What do you?
A lot of them, I got to call in. It'd be great if I did. But also, I like you guys. It's just Jacob.
Wait a minute. I'm sorry.
Julie too. She's yeah. Go ahead.
I'm sorry. What do you need to call in? What trade do you need to make?
Right. Okay. You know how the micro futures, some of them have options.
Yeah.
Yeah. If you want to trade those options, you got to call in.
No.
Mine is micro Nasdaq and micro oil.
What's
For example, Bitcoin or Ethereum. Yeah. No, MNQ works. I'm saying the other ones, you got to call in. Say you want to, even if you want to buy premium, you got to call.
Could you call our desk? No. Something doesn't sound right. We don't have anything on the platform, any futures on the platform where you need to call in.
He's talking about
the options you got to call in.
Right, but I'm saying the options, no, something's wrong. Please call 888-247-1963. Something's wrong.
I think I know me. Yeah. Okay, I'll call.
If they really do me a favor, whoever you speak to, if they say yes, this is factually correct, you do need to call. Have that person reach out to me because I need to know what's going on. There shouldn't be any futures options on the platform that we require
if this is news to you, they all are like this. It used to be like this a year ago, but that was a couple months, and then after that, it's been every option it's closed only, except for
wait a
oil
minute.
and.
Whoa! Stop! We did go to closing only on some products. That's factually correct because there was no liquidity.
Yeah.
You didn't say that.
Right.
I'm sorry.
No, but it was fun when it was not. Is it that much? Okay, so. But if there's no liquidity,
we're not allowing forced orders anymore. The product just doesn't have any liquidity.
I know.
If and when liquidity comes back, we're happy to take a look. But it's for customer safety that we don't want people putting trades on. You know, Tom earlier was talking about price discovery,
and I might get that. Thank you.
Yeah.
No, that makes sense.
That's why. Yep, sorry,
right,
I wasn't following. I apologize.
No, and I'm kidding about the guys, but if they see me say something, at least say, "Hey, man, we saw this guy's thing, and now it's my skinny on options math." Don't just.
You got it, my friend.
Jacob. Thank you.
Thank you, brother.
Bye.
All right,
appreciate it.
Thank you,
Scott. Thank you so much for hanging in there. Thank you, sir. Scott, thank you so much for hanging in there with me. We're gonna take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events. 6 must-know skills for active traders and 6 option strategies every trader needs to know. Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. We made it to Friday, Jenny. Woo!
We made it to Friday, and I want to give you a big shout out. Happy early birthday! Everyone, give Liz a happy birthday shout out. Your birthday is tomorrow, so
Do you know
usually it's on.
Do you know whose birthday it is today?
Who?
Scott Sommer.
Oh, that's right. Happy birthday, Scott Sommer.
He's one of our viewers. We were birthday buddies. Scott Sommer, if you're watching, big shout out. I'll always remember we were birthday buddies.
Yes. So I usually, 5 out of every 7 years, your birthday's on a show day. Day.
We usually drink champagne.
Right. Usually we've got our champagne or our prosecco, and we are celebrating. So your birthday falls on a Saturday this year. It's kind of weird.
It is kind of weird, and it's so bizarre that my birthday falls on a Saturday, and I'm not whooping it up. I'm whooping it up in a motherly sort of way. I'm going to be at another place, so it'll be fun. Yeah, I'm excited. Can we talk about? We've been talking about this live on air. Tell everybody what you acquired yesterday.
Okay, so it was a miracle, and I owe it all to Vanetta. I got 2 tickets to the Taylor Swift concert in Indianapolis, so I will be there tomorrow. And so while you're at the play and relaxing on your birthday, I will be at the Taylor Swift concert. I'll have to bring your birthday gifts when I see you in studio next week.
Tuesday. We'll be in Tuesday, I think. Tuesday. Okay, so listen to this. I'm just going to say this because Tony Batista says it all the time. If anybody sees one Jennifer Andrews at the Taylor Swift concert and sends me, Liz, at tastylive.com a picture, I might send you a cherry sticker.
No one's going to find me. There's going to be, I think the workers, I'm on all these chats. And again, I say, I owe it all to Vanetta, because in order to get in these different chats that told you when the tickets were going to drop, you had to answer questions like, what is Taylor Swift's middle name? What is this? What is that? And the only reason I knew all these answers was because of Vanetta.
Allison. What year was she born?
1989.
Good job. Those are the only 2 I know.
So this is totally last minute. Got the tickets last night. Going tomorrow, super last minute. I don't have an outfit planned. I don't have any bracelets made. I don't know what to do.
Okay, here's what I think you should do. Number 1, get in your car, drive to Vanetta's, pick up all of her bracelets because she's been making them for a long time. She will give them to you. Number 2, the outfits are amazing. You've got to dress like one of her songs. That was like the biggest. It is hands down the nicest people in the entire world. Like I said, my daughter, we've gone to 5 of them, no matter where you are. This is, you know how if you go to a concert and you're bumping into people, sometimes people are like mean. Like we almost got accosted at a Pat Benatar concert. Like if you bump into everybody, people are like, oh my gosh, I'm so sorry. Would you like a bracelet? It's like the greatest thing ever.
I've got to get my hands on some bracelets.
Yes, you need bracelets.
Okay, talking about like if someone's mean. Now, I don't. My husband, he's not like Mr. Friendly. Do you know what I'm saying?
He's very nice. He's just very quiet.
Okay, so I answered the door for every trick-or-treater, like, hello, happy Halloween.
You look adorable. Yes, I did the same thing.
Then trick-or-treating ended at 7 o'clock. So at 7 o'clock, I started putting dinner together because trick-or-treating was over, and then I could finally get in the kitchen and start putting dinner together. I hear the doorbell ring, and my husband go to the door, and all I could hear is like some kind of altercation going on outside, going on at the door. I'm like, what is going on? It's this little kid, and he came after trick-or-treating hours ended, and he said, trick-or-treating is over. Can I have the rest of your candy?
Come on.
Which I would have been like, sure, you're doing me a favor. Where my husband's like, what? Like my husband was really pretty mad about that kid at the door.
You didn't give him the rest of the candy?
No.
I would have been like, give me your bucket.
I know.
Johnny, I almost ran out.
What do you mean? Oh, ran out of candy.
Yes, to the point where like, so we had the full-size bars, but then I had 4 bags of like the little bars too. At the end, I had to ration and be like, I'm sorry, I only get one. We had so many people, it wasn't even funny.
Oh.
Well, and I didn't want to say that, but my son was handing out candy. I was like, JD, don't like pump the brakes a little bit. We're running out. And so then now when kids would come up, he's like, I'm sorry, we're rationing. You can only have one. It's like, stop saying that. Yeah, but Halloween's over. I'm 100% taking down all my Halloween decorations, and I'm putting up all my Christmas stuff tomorrow.
We have a Halloween party here tonight at our house. 25 teenagers. After the show, I've got to go make a photo backdrop or something, photo spot, whatever they want to call it.
Be fun. Is everybody coming as
costumes?
Costumes. Love it. Super cute.
Tonight. Yeah.
Super cute. That'll be fun.
All right, so let's go into the platform because yesterday was exciting, kind of fun. Spoos down 100, a little bit fun, kind of, maybe.
Depends. Wait, can we talk about this? Frank the Great was texting me while I was walking, and we both said it together. Jaju!
Liz texted me. I'm going to look at this text. I'm going to look at this text and let me see what time it came in. Liz texted me. It just said Jajun. And what time did it come in?
Well, it was late, but Frank's got hit. So I was walking the dog and Frank's got hit. So Frank's got hit.
2:49.
Yeah, Frank's got hit earlier. Frank's got hit at maybe like 12:30 or 1. And then ours got hit right under the wire. And then the market fell out of bed. So here's my thank the GTC gods for having it in.
At 2:49, it says Jajun, exclamation point, the streak continues. Oh, that was funny. Okay, so let's look at some of the earnings trades we have on.
And let's talk about that too, that Jajun trade real quick. And I know we're going to put it on probably again, but number one, we're playing with the house's money. Number 2, when we put it on, the spoos continued to fall out of bed and then wound up being lower than they were when we put it on, but we got out for a small win. That's a very aggressively managed trade.
You know what? Want to know what was exciting this morning? Now, we're up $58, but this morning, the 217 Apple calendar was up about $87. I closed mine for about $87.
Wow. That's fantastic.
No, you have it on?
No, I do not. I'm bullish Apple.
Oh.
That is a bearish trade.
Well, I thought you put on the 217 calendar. Yesterday, we put on the 217 calendar in honor of your name. I'm surprised you don't have it.
I have 217 and everything else. I had a residual 217 call, and that's why I was like, I'm leaving this. You know what I mean?
Okay. Well, it's up $50 now. It was up about, like I said, I think I closed mine for like up 87 this morning. And okay, something we've talked about is, does it make sense to do both sides? And I think it depends. It depends on the product. But in Amazon, do you remember how cheap these calendars were yesterday? I don't know if we tried to put one on, didn't get filled, but the calendars in Amazon, like expect to move downside and upside, were $1 or $1. So I thought, whatever, I don't know what Amazon's doing. So I threw in the puts and the calls, $1 and $1. And it ended up like net up $70. So if I paid $1 and $1, paid $2 for both calendars, I closed one calendar for $270.
And then so
it did. We think like, oh, one side washes the other, but it actually
didn't.
It like one side made more than the other lost. But I think
I think that's because you have such inflated volatility now. I don't know. I mean,
in the 7-day, I think because the 7-day has such inflated volatility. It's not a typical earnings calendar because that 7-day going through the election has such a boost.
Yeah.
I hope we're back up 100. I hope we erase yesterday's move.
I am answering some tweets if you don't mind, because this is from Ben, and he said, why wasn't the closing Jajun trade on the Traders tab platform? So I will tell you, that is shame on us. I see it get filled, but I didn't have access to be in that account at that time. I saw it because it popped in on my phone. So I just pushed that through now, the closing one.
Okay. Oh, did you push it through the follow page right now?
I just did it. Yeah.
Yeah, sorry, we don't. We're not in, like, when this show ends at 11. We're typically only in this account from 10 to 11.
Correct. So that's why we'd like to have it closed before we leave. I just wanted to address that, but I think you're right, Jenny. Kind of going back to the Amazon, it's that 7-day that's holding its volatility. I think that's why you made more on the one than you lost on the other.
Right, because that 7-day has so much in it. Like I did a lot of calendars yesterday for earnings, which just is a low risk. I know we had the question yesterday, like, why aren't we selling iron condors on earnings? It's just a weird time right now with the election coming up, and we're getting these big moves in the market, and we've seen some moves outside of their expected move, quite a few more than usual. Usually it's like 85% of the moves are within the expected move, and this earnings cycle, it hasn't been that way. I don't think. It seems like a lot of them have been bigger moves, so we haven't been doing those. So instead, I haven't.
Did Amazon go outside its expected move? If you had the calendars on, did it blow through it?
No.
Or was it straight to it? The expected move? Like, what were your strikes?
Right to it. My 200.
Okay, so it is right to it. Okay.
So this 200, where I would have to buy this back and sell this out. I did it already. It's probably worth more now. Now it's worth 307.
Yeah, but you don't know that. You're better off just doing it.
Whatever. I mean, I sold it for like 280. Doesn't matter. But it went right to it. So that was right around the expected move, 200.
Yeah.
Okay.
I also want to say too, we were talking on the open. I know you didn't do your SPX morning trade. I did mine. Today was the greatest. I mean, now granted, this is better luck than smarts, to be honest with you, but I put it on right at the open and I was out 8 minutes later.
Because you just sold the put spread. And
I almost just sold the put spread, yeah.
And so then we got up and you got right out. But I do both sides. I'll sell both sides. This morning I was hesitant. I thought I'd open it up 828, 829, got ready to sell my iron condor in the open, and I was afraid, Liz. I was afraid. I thought we had such a big move yesterday. What if we have a big move today? And I couldn't do it. So I didn't do it today. I was just nervous.
Yeah, I get it. I do get it. It's easy when you're doing the one side. It is. It really is easier when you're doing the one side for me mentally.
So I want to talk about Intel. They had earnings. This is a little frustrating. After hours yesterday, or Intel got up to almost 25.
It did?
Yes. Yes, I was watching it. And I thought of selling some in the extended hours trading, but then I was like, I'm going to let this baby run. And then this morning, it was only like 22.5 or something on the open. It wasn't, it kind of stinks now. I was much more excited about Intel yesterday afternoon watching it. But you can always do that, even if you have a long call. Like if you have, here we have a long call. In the after hours trading yesterday, when I saw it trading 24.50, or I can't remember exactly how high it got, but it was close to 25. We could have in extended hours sold 100 shares and then just locked in the profits between our call and the shares sold. And then today we'd come in long this call, short 100 shares. We'd close it as a package.
Yes. Right. That's true. It is good. It is nice to be able to do something in extended hours when you need to.
But then again, you could have closed it at 20. You could have sold 100 shares at 25 in the extended hours, and then today it could be 27. You never know.
Right. No, for sure. It just does lock. It does lock in the profits, which is kind of nice sometimes to do in the after hours. I like that you're like, I'm gonna let it run.
This is just a start.
But we have to address ours. We made $100. It's pretty good. You know what I mean?
I know. So we have to. So this expires today. We're gonna close this. There's a lot of vol in next week. Next week, nah, not enough.
I mean, but Jenny, I agree with you. 70 cents or 90 cents in a $20 product isn't bad.
No, I really don't mind that 90 something cents. You're looking at like $1 on that 23.
I don't mind going near term. You got 50. You got a 54 rank. I mean, I'd rather get $1 in 14 days than go out 52 days. December's so far.
I'm going to just close this. 310 is mid-market. 305, 315 closed at mid-market. So we could look at this as and just compare. If I sell the 23.5, kind of like a synthetic covered call, whether you get 65 cents or 70 cents, I like a little bit of extra profit potential. Uses
Agreed.
$463. Not terrible.
No, that's not terrible.
If we went to November, we'd get 91 cents on the 23. So on the just out of the money, if we wanted it a little more profit potential, we can put it at the 23.5. Which if we get and I don't know what's going to happen next week, but let's say we get a massive run in the market, we're better off going out a little bit and collecting a little more.
Going farther on time. Sure. Yeah. No, I know what you mean.
I don't know, but who knows? The market might bounce all over the place. Who knows?
Yeah.
And all the way out to December, you're getting $1.56 on that 23.
I don't know.
I am sticking short term because I kind of like it right now.
Part of me says we should just let our puts put one in November and one in December and call it a day.
Oh, 123 put is the 7-day. And do we want the 7-day?
Sure. I was going to say 14-day December. Let's do 14-day, and then we'll go a little far. Like you can say, and go to the 21 and like the 21 in December.
Yeah, or the 22.
There you go.
Okay, 207. Excellent. Good compromise.
Yeah.
So then that's our intel position.
Then we're following the rules, going with our one lots in this account.
I was going to say we trade in one lots in this account, and that's all we have. One in November, one in December.
All we have is one lots. So there you go. It's so funny.
All right. What other earnings did we play?
Yesterday, I don't think we did much. I mean, we have to address the Chewy because there's a little in the money button.
Okay. And Boeing, we sold these puts 10 days ago. We're up 25%. But they have taken heat, and they're only in the 14 days. So we should close those puts. And if we want to keep a put going in Boeing, we move it to December.
Sure. Let's take our profits. And then, so that is going to smooth everything out through the election, too. You're smoothing out your deltas by rolling out in time.
So 145, look at that, 420.
Woo, that's actually pretty good.
Yeah.
I like it.
Is that all right?
Yeah, that's great.
Or do you want to go to the 140?
No, I mean, I like to be a little bit more aggressive. You got a 60 rank still in this.
Yeah. I mean, if Boeing ever gets back down to the 135, which is where my short calls were 10 years ago, I'll be shocked.
I mean, you can't be that shocked. You've got a 30% chance of it getting there.
And, the news lately doesn't sound great.
For Boeing? It does not. No, it does not.
No, it doesn't, right?
It doesn't even sound remotely good. So
I know. But I still have a bullish position in Boeing. I just have a covered call going in there. Let's be a little conservative. We'll go with the 140.
Sounds like a plan.
For $1.34. I mean, we're buying back the one, selling out the December. That's the mechanics. Moving to these.
Yeah, for sure. And that's good.
Okay, so that's out. Liz, you mentioned Chewy, which we have a diagonal here, 14 days, now 0 days. We just have to move that. We can move that put out a week.
Yeah, we can. And you want
or
to.
We could close it.
You could, I mean, honestly, I don't care to keep anything going in Chewy. Let's just close it.
I wonder what we're net up or net down because.
Here, I'll tell you. Because
one's been on 30 days, one's been on 23 days.
Chewy, our year to date in Chewy is down to $112.
I just want to look at what you would get just because we've said there's decent premium in the election week. If we moved it to the same strike, we get 66 cents credit.
Sure. Just ship it. We're taking in a credit. We're taking risk off the table.
Yeah, I mean, I don't mind it. So then we have the 30, we still have the 30.27, but we just took in 66 cents.
Yeah, that's good.
Okay, coin getting $10, going up. We need it up.
Yeah,
did we add this put spread on yesterday? Yes, yesterday. Oh, we rolled it. That was the roll. The roll.
Yes. So that one's good.
Anything else with the red in the money sign?
Not that I can see. I'm kind of in our account too. That was it.
Are you shocked that TLT is down 66 cents?
I am. Can you go to the map? I love saying this. Can you go to the map in TLT? It's going to be forever called the map now that you called it that.
Okay.
I think it was up a ton today. If I remember, hit that. Okay. And then read that for me because it's red.
As high as 92.52, so $1 higher.
Yeah, that's higher. And then it just fell out of bed. Like, what is happening?
Yeah. I know. What would this pattern be called? What do we got going on here?
Wait, where was our abandoned baby yesterday?
Was it Meta?
I don't remember. No.
It wasn't this?
No, it was much bigger of an abandoned baby. It was like a wild abandoned baby. I don't think we had a trade in it.
Microsoft?
No. I don't know if it was earnings.
I don't know.
No, because it was abandoned baby to the upside, and then we were trading down significantly. And I was like, what does it mean? Are we going back to the baby? Do we go back to pick up the baby? How does
I want Microsoft to go back right up here because, again, on earnings, after earnings, it was up in after hours.
Oh,
come on, Microsoft. All we need is $15 more, and we're right back to 430.
Yeah, I think we're going to get a lot of movement in the next week, to be honest with you.
Yeah.
In both directions.
Okay, so I don't know that we have much else to do. We adjusted our Intel.
Oh, did you check Amazon?
We don't have Amazon.
No, I think that was the abandoned baby. I think that's what Chris King was trying to tell me.
Because they just had earnings today. That's up $13. Yeah.
Yeah, never mind. That's not the abandoned baby.
No, I don't know what it was. Oh, maybe it was this. It was this.
It was the abandoned baby, and they go back to get the baby. That's what's happening. Thank you very much, Chris King. The baby's right there. And I was like, does it mean we're going to continue to go down, or do we go back to pick up the baby?
Oh,
Thank you.
Shot back up. And it's no longer an abandoned baby.
Well, I think that's what it means. When the baby's abandoned, they go back to get the baby.
Do you think so?
I'm making it up as I go along, but I think it sounds right.
All right, let's see what's going on Twitter. I posted this. Happy early birthday to the amazing Liz Deerking. Enjoy your birthday weekend. Because this is one of my favorite pictures of you on the road.
Oh my gosh. Thank you. It's one of my favorite pictures too. I loved that.
Yeah.
Where were we?
What city is this?
I have no idea.
I don't remember either. It was crazy because I was trying to find this picture and I was searching like Atlanta, Phoenix. I was searching cities that we've been to multiple times. Could never find it by searching cities. And then I thought we were there in 2018. I think that's it. So I searched 2018 and I found it in the year batch.
Oh, you found it in the year batch, but it doesn't say where it was taken?
Well, I didn't look.
Oh.
I could.
This was a cool venue, wasn't it?
Yes, I wish I could remember where we were.
I don't know.
Oh, I feel like this was like Omaha or something.
Yeah, it was a cool venue. It was a smaller venue. I will give you that. You're right. It was a smaller venue.
It was a smaller venue.
Yeah.
And it was more of like a rock star type concert place.
For sure. It was a cool thing.
So I love this picture of you.
Thank you very much, Jenny. I appreciate that. And we're going. Tom is leaving today for Dallas for the last building complex portfolio. Oh, thank you, James.
Good to see you.
Thanks, James.
Happy birthday.
I love Mickey and Minnie. 1 week and I'll be there.
Yeah.
Actually,
and Mikey.
Mikey, yay, the Polish warrior. I still have your cheesecake. I'm waiting for Jenny's. I'll send it on Tuesday when she gives it to me.
Mikey, I'm going to put it in my car right after we get off the show. The cheesecake form. Because Liz is sending, Liz will package it up and send it to you. And I would send yours too, but since she offered.
Oh, yeah. And I already have my Christmas cards done because I'm super early this year. So I'm just going to package that up with a Christmas card.
That's what I was going to say. You're going to get an early Christmas card. I have not done them. I don't have a family picture. I cannot find one picture of the four of us from the entire year. So I don't know what I'm going to do.
Yeah.
I mean,
it's okay. I mean, sometimes people skip, and as kids get older, you've got a college kid. I've still got mine home. You know what I mean?
And look at Scott. Appreciate the birthday shout out.
Yes, Scott Somer, happy birthday! Scott Somer's our international man of mystery. Remember?
Yes. I'm glad you remembered his birthday.
Yeah, I do remember his birthday.
So now look, now I heart it, and now it turns red.
Do you know what I think, Jenny? I think it might be whoever logs in first.
Oh.
Because we're logged into the same account. Because sometimes it happens to me, but maybe you're in before me. Do you know what I mean?
Mm-hmm. And Jeff, two great ladies, both having great Saturdays. Happy birthday, Liz. Enjoy Taylor Swift. Thank you, Jeff.
Oh, yeah. Taylor Swift is going to be awesome. You're going to have so much fun. I want pictures.
So talking about how I have a college kid and he's never home, and that's why I have no pictures of the four of us from the entire year. And maybe this happens to people. Next year will be his last year of college. He's going to be a senior. And I can't even get a hold of him these days. He is out doing something every minute of every day. All I can do is look at Life 360 to make sure he's still alive. Like today I said, is my son alive? Haven't heard from him in days. I went on Life 360. He's on the golf course. It's
but
like,
Jenny, but he's going to be 21 in January, right? He'll be 21 this January. Is that correct?
Yeah.
So, and I knew you when we were 20 and 21. I don't think there was a second we were sitting still.
I guess.
There wasn't a second. It was always like, we're going to meet here, then we're going to do this. Each day was filled with like 5 different things. Be like, I'm meeting these people for brunch, then I'm going to go for lunch with these people, then I'm going to go visit the marathon because somebody's running it, and then I'm going to go out for dinner, and then we're going to go dancing. Like, you're doing something all day, every day when you're in your 20s.
And if I call, he'll be like, I'm with these people or these people are doing this or doing that. And then I'll say, okay, call me when you have some free time.
He doesn't have any free time.
No, apparently not.
He doesn't have any free time. Okay, Jenny, it is now 10:31. Exactly 10:31. Spoos are up.
Oh man.
Does Jaju know that we talk about him this much?
I don't know. I wonder if Jajun calls his mother from college.
I bet he does.
I bet he does. I bet Jajun calls his mother from college. I used to talk to Logan every day when he was a freshman. Every year it's diminished.
Well, I think that kind of helps. You know what I mean? It helps instead of him just leaving and then not calling you.
He slowly has distanced himself.
He's slowly distancing himself.
All right, 270. Oh, he'll be back for help when he needs me.
Wait a minute. One of my computers is not updating. Oh, there we go. 270. Yeah, we're good.
320. 270, 320, and sent. We will see. Can we? What are the chances we're up 100 by the end of the day and erased tomorrow's move?
I'm not gonna lie to you. This world is so bizarre that I think there's a possibility of us being up 100, or there's a possibility that we're unchanged on the day. I have no idea, Jenny.
I don't know.
It's a wild ride we're in right now, and I think it's going to continue to be wild through the election.
DJT down again. No hope for my 50 butterfly.
No, today there is no hope for your 50 butterfly. I mean, do you want to, can we, hold on, I know you're in DJT. I was just pushing things through. So do you want to put something on for next week?
In DJT?
Yeah.
No, what?
We can't do that. I was going to say, do you want to do massively wide upside and downside butterflies?
Yeah, but they're going to be expensive.
Let's look. Can we price them out? Only because guess what? We don't have anything else to do. So let's just price out some butterflies. Go right, like so let's 30,
say I go like 30, 25.
25, 20. Yeah, let's do that.
Oh, I thought they'd be a lot more.
Well, it might be more expensive on the upside. Yeah, whatever. Let's just have some fun.
Yeah. Okay. This will be the end of the week next week. Or should we do like 0 or 80?
Well, I mean, you could make it really wide. Like, let's make it super wide. Why don't you go 30, 20, 10?
30, 20, 10.
And see how much it is.
270. That's too much.
No, I like our original. Okay, go back to it.
But don't you think this is either going to be like 0 or 0 or...
You could do the calendars. But I don't know.
The $17 expected move is pricing it to be 13, right? 14, either 14 or back to 50.
Yep.
So let's just go the expected move and wrap our butterfly around that.
Sure. 15, 10,
20, 15, 10.
Oh, this will be cheap. It'll be 60 cents. Do it.
So we're going to the expected move. We're going to see how accurate is this market, is the pricing the expected move. So I'm going to go to the expected move, put in a $5 wide on both sides, and next week, at the end of the week, we'll see how far this stock is from the center of our butterflies.
Love it.
Okay, that one's in. And now at the top, 50, right back to 50. 45, 55.
That's going to be cheap too.
17 cents.
Ooh, put in like 6 of those.
Let me see. I'll just make it wider.
I think
I'm going to see 40, 50, 60. You know, when vol's high, butterflies are cheap. And I think there's, is there like the higher vol up on top?
I think so.
81 cents. 81 cents for 40, 50, 60.
Oh, press that button, Jenny Andrews.
I mean, we could just have thrown away $140, but whatever. Whatever. All right. Now we know in 7 days, okay, the expected move on this Friday was saying it would either be up to 50 or down to 15.
Those are our short strikes, right? We know when we'll put a mental note in there that our short strikes are at the expected move for the cycle.
Yeah. Okay. Okay. Now what?
Okay, so we looked at DJT. Are you in it or was it me? Hold on. I was just trying to push some trades out. Let's take a look at TLT.
Okay. I had to glance at my phone. I just had a text from my daughter, and she's in school, and usually she doesn't text, but she's having this party tonight, and I sent a message. I sent a message maybe an hour or so ago, and my message said, I want everyone out of our house by 11 p.m.
You said that or she said that?
I said that. I said that. Because then it was the last time where when I was like, okay, party's over, everybody out, that some kid just like stood on my street corner until his mom picked him up, and he stood out there for a while. Now, I didn't know that happened because I would have called that kid back in the house. So she's texting me because I gave the end time ultimatum. Everybody out by 11.
Okay, and so she can drive, but nobody else can.
Oh, half the party can drive, probably.
So then they will leave. That's the hard part, is when a lot of them can't drive and then they're sitting there. Do you know what I mean?
And they're waiting to be picked up.
Yeah.
Did you hear Vinny didn't go trick or treating? He went to a party instead.
I think he went to a girl's house, not a party.
I'm assuming it was a party. I'm assuming it wasn't just him and one girl on Halloween sitting by themselves.
I think he had a date, is what I got out of it.
I got out of it. It was a party at a girl's house.
Oh, I don't know. But, you know, Tony, his appropriateness, I'm pretty sure he's like, he's my boy. I was like, he had a date on Halloween.
Okay, so you want to go to TLT. We've got
nothing. Oh, yeah, we do. TLT.
Yeah, we have a lot. But what we don't have is, which I prefer using right now, like in addition to my TLT. So, and I'm going to look at this for a second. Okay, so TLT, this says.
Why are you backslashing?
I didn't go back far enough. TLT, you've got 20-year Treasury bonds, right?
Yes. Okay. Yes. ZB is
30-year.
Yes.
Now I have
ZN is 10-year.
Is 10 years. So right now I have TLT positions, but I also have ZB put spreads, short ZB put spreads. Now I heard Tom say today, 21 days, you got to roll to the next cycle. So you can see here, this 117.05 is taking this price, the current, this price here. But then when you go to 56 days, 117.14.
It's not that a little bit higher. It's a little bump, but not that much higher.
But I don't know. I have my put spreads in the 21 day. I thought I heard him say roll. I don't know if I really have to.
You don't have to do anything you don't want to, Jenny.
Damn it, I'm not rolling those put spreads.
You don't have to do anything you don't want to. But can we look at our TLT position? Because I want to see if we need to. Because I think we have a zebra. I would like to reestablish. I want to continue to be bullish TLT. It's a position that I do not mind carrying.
I know, but it's right in the middle of our zebra, so we don't need to reestablish until this ends up at 90 or below. So it's right in the middle of that zebra, and then we have an iron condor around the zebra.
Well, let's close that call spread.
Do we need to? It's going to be 10 cents.
Yeah, it will be 10 cents. Okay.
Yeah.
And you can't close anything of it, huh? So we can't close the iron condor or the other thing. Okay.
Mm-mm. No. And our put spread's still out of the money. This iron condor could be a full win. We just have to hope TLT stays above 90.
14 days. The TLT is very confusing to me. I was listening to Jamal's This Week in Stocks, and he was even saying, he's like, my favorite play on the board is to be long bonds.
Well, and again, Tom keeps saying it. A lot of people keep saying it. Who knows what's going to happen? But I will say you can easily, you know how we were up $1? We were up $1 higher today. So on the open, TLT was up 50 cents. Now it's down 80 cents. If you want to, I will take daily shots. Like, you're only giving up 7 cents here. And I don't want to say daily shots, but let's say I'll go in and buy a handful of these. Like, I'll throw $250 into this, and I'll buy 5 of these and think we might be up a little bit by the end of the day. I've been doing that in TLT a lot.
So if you were up, so that's just what I'm saying is this is cheap, and this is going to go almost 1 for 1. So if it reverses and say you're up on the day, you're going to make 80 cents for every one lot on this. Ish.
Yeah. We were up 50 cents in the morning, and now we're down 80 cents. So if this reverses at all, I've been doing these day to day and just like throwing some on and maybe taking $100, $150 out of it, because TLT has been seeing movement in both directions during the day.
It has been.
Mm-hmm. Yeah. It's kind of like my Jajun trade. Because in the 0 day, you're not paying a lot of extrinsic value. Now, next week, there is a lot of extrinsic value in next week because you've got the whole election baked into this. You can't go anywhere and not pay extrinsic value in TLT.
You can't go. There's, I think, a lot of things that have a lot of extrinsic value baked into it for next week.
Yeah. So anyway, that's just something I've been doing, the dailies in TLT, just looking for quick moves on the day.
Can we take a look at our natural gas position? We didn't put it on yesterday.
We didn't put it on, and I think it's down again today, right? Yeah. Down again today.
Yeah.
So if we want to get into natural gas, look at that.
Yeah. So like I said, that's what scares me slightly, is that this kind of has, natural gas is number 1, a big vehicle. Number 2, it stays in motion sometimes.
We were looking at the center strike of 230 and not taking too much risk. We were only getting 50 cents. Today is 60 cents.
It's still not that good, because when we were doing it before, only taking $500 in risk, we were getting $1.
Yeah, but I think we were bringing it up. Like we wanted it to we wanted it to pin our strike, and I think we brought it in.
Oh,
like
maybe
here
you're
we're
right.
getting $111.
That's not bad risk. I don't mind that, Jenny, because I just want to make sure we're getting something. If it does go up, then we want it to pin our short strike. I'm fine with this. 245 is a short strike. Now, keep in mind, where were we last month? It was 230, I think, right?
230. Yeah. So I don't know. But we're getting $100 here. Your break even is 2.
I liked 110. Now we're only getting 90. It is kind of getting away from us.
But you got another move down in natural gas.
Yeah, look at that.
But again, are we just going to come right back down to 230 and we'll be where the last future was?
Yeah, maybe.
And instead of saying the last future, would I say the past?
You're very introspective.
Instead of saying, well, we're heading right back to 230 where the past was. How do you refer to the previous future?
So you're talking about the general pop. I understand what the last future means, but if you're talking to a general pop, you'd say the previously traded futures contract.
I'm just gonna call it the past. What was it? It wasn't Z. What was it?
X.
I'm just gonna call it X.
X, NGX.
So yeah, I don't know. Maybe we wait, because maybe we know it's heading right to 230.
We don't know anything. We don't. We still know nothing. But you're in December, Jenny.
I know, that's where we have to go.
No.
I think 24. Oh, okay, you're right. We were looking at the 24 day yesterday.
Yes, I do not. Don't ever want to touch a broken wing butterfly in natural gas with 52 days to go.
It's the same price here, December, $60 on the 235, 230, 220.
Yeah, but we can't. You do not want to do a broken wing butterfly in December in natural gas. I don't know. Maybe you do.
If I bring it up one, we're getting $80.
I mean, I'm cool with that. I just don't like having $1,000 in risk. $80
is only $420 in risk.
Yeah, ship it. Let's do it.
What the heck?
Well, and full disclosure, Jenny, we made over $580 in the last one, so we're playing with the house's money.
I don't like that. I get that. I get that. But I don't like that. I don't like to throw that around, like playing with the house's money. I know we say that, but I think it's bad because how does that make people feel who are trying to dig themselves out of a hole?
Oh, I've been there. I say all the time.
know, right?
I've had to scratch and claw my way out of a hole for years. So
let's say there's someone out there who's
but you have to be able to, but you have to be able to trade both sides, right, Jenny? So like a true trader has been scratching and clawing, and they've been playing with the house's money. Those are two terms that only traders understand.
But when it's hard when you're in the hole to keep trying to dig yourself out of that hole. And it's discouraging then. Like, let's say you're trading and you're
that's experience, Jenny. It's everything that you're describing is just the gut feeling of experience.
I just don't want to discourage anyone out there who's like, well, I'm not playing with the house's money. And none of our trades are trade recommendations, but I don't want to discourage someone from trading if they're like, well, I'm not playing with the house's money. Maybe I shouldn't put a trade on in here.
Yes, I would discourage you. If you have those feelings, then don't trade, because if you feel at all apprehensive, don't trade. You have to be able to be confident in your trades.
No, I'm just saying if I don't want it to think like, oh, we're only placing that trade because we're up in natural gas, because even if we weren't up in natural gas, we could place that trade. We probably would place that trade.
That could be, but I would like to say, warning, Will Robinson, natural gas is a very large, very violent animal. And Frank the Great always says that in the chat. Careful with natural gas. And natural gas is very dangerous.
We defined our risk, so it's not going to be so dangerous. Our risk is $400. The danger in that trade is $400. So I understand like the Jejune trade, because that's kind of like I'm going to say a low probability trade. That is not a high probability trade, the Jejune trade. So I get that. Like that's kind of like those ATM trades or where we're like, okay, we are playing with the house's money on that. We'll keep going with it. But this trade, we'd put this on no matter what, whether we had it or not, whether we're up in natural gas or down in natural gas.
Yeah, for sure. But I was just going to say, we pinned the strike. So 9 times out of 10, I trade natural gas a lot. I do this a lot. It's always in my position. And I do it. I have it naked. Not a lot of times you're not pinning the strike. What I'm saying playing with house's money is we pinned the strike. We took a credit in and we thought what you're trying to play for is just that credit. That's luck pinning that strike, because you can technically. Yeah, you can technically make $580 with this trade. No, we're never playing for $580, but last month we hit it. We pinned it like almost to the T, which is rare. Very rare.
Now this is just Z I'm looking at. How do I get do you remember how I get the full, all of it?
$?
Do I need the / first?
I don't know. I thought it was $/ natural gas.
Wait a second. $.
No.
Might be. Waiting. Yes, there we go.
So it's not nearly as low as it looks.
Yeah, right.
That was my point about, I think that a body in motion stays in motion with natural gas. That's why with this account being defined risk, it was a little bit apprehensive for me to put it on until.
That's why I wanted to see last time, the last cycle, how low it did get. We pinned it to 2.3, but it got as low as 2.2.
Yeah, and we pinned at 2.3.
Right. These were the good old days.
But I still, it's still fun to trade. Just keep in mind, futures options are different cycles, because each cycle is different. So when you just type in natural gas, it does look like it's very, very low. But this is the one that takes into account everything.
I I was popping into Twitter just to make sure we get to these tweets. Alan Miller, our favorite retired United Airlines pilot. Happy birthday, Liz. You are like fine wine, more beautiful with age. Have a great weekend.
Thank you, Alan. He is our favorite pilot. We love him. Oh, hibachi. I love it.
Here's our virtual handshake. Yes, Hibachi and Liz made up a handshake at one of our road tours, didn't you?
Yes, we did. Yes, we did. We totally did.
In honor of Alan, let's take a look at you all. How did the airlines fare yesterday? How bad did they get hit yesterday? Because I know they're up a lot today. Okay, you all's up 280 today. Yeah, so it didn't come down too much yesterday, like 78 handle, 78.12.
Yeah, you all was not bad yesterday. It was one of those that kept its wings up.
And I saw Delta was up a lot. Delta's up $1.84 today. Are all the airlines, they're all like crazy high. American Airlines.
So I think it was Delta and United that have been crazy high. Yeah, this one isn't crazy high. Neither is Love, neither is Save. What is Save doing? What is your little Save doing?
It's not good. Don't ask.
Oh, it went back down.
Yeah. So the high, 330. How high did it get? Is that the highest it got that day? I guess 330. I guess it's not that bad.
No, it's not that bad.
It's not that bad. It puts a ding into my account though.
It's off its lows of 1. I don't like which direction the SPX is going because we put it on when SPOOs were up. What, 58, 56, 60?
You're right. Yeah.
Yeah. So this is going to be. We're going to have to sit on this one.
Yeah. Okay. And you mentioned Love. I don't only 51 cents today. No, this does not look like all the others.
Well, no, I mean, the only ones that are high are Delta and United.
Yeah.
Everything else is, kind of like AAL just kind of looks like it's in its range.
What do you think of that 30 put?
In Love? I don't know.
Get your break even to 28.80.
I mean, honestly, if you covered this up, I would say do it. I'm not a huge fan of Southwest Airlines anymore. But if you covered it up, and I don't know, you got a 25 rank, you got a $30 product, I would say sure. It shouldn't matter what it is.
What are you flying to Florida?
United.
Yeah. So ever since your husband started really traveling overseas, you're just more of a United flyer.
Yeah, he's got a lot of that. But just because I watched that whole documentary on it.
Oh, tell me the documentary.
I'll ship it to you. I'll ship it to you.
Everyone else might like to watch it too. What is it?
Oh, I mean, off the top of my head, I can't. It's if you probably go into YouTube. It's a 45-minute documentary about Southwest versus United versus Delta, and about how Southwest is clawing and scratching its way out of a mess that they created. And I think but sometimes that kind of stuff will skew my opinions of things. It's long though. It was like an hour and 20 minutes. Well, in what was going to save them is their like open seating plan, all this stuff. That's why they were such a good airline for a long time.
And now that they're going to have assigned seats,
they're getting rid of all that stuff. So I don't know what that's going to do. Maybe it'll be better for them. I have no idea. And I shouldn't be skewed by documentaries. I really shouldn't. Do you know what I mean?
In American, it's had such a rally. It's hard to sell puts in here because you're so close, and it has had quite a rally.
I mean, I have no problem going to Love. Like I said, that kind of stuff shouldn't skew me in one direction or the other because everything is, and this is, I think, hard for people to hear too. I think the markets are the most efficient. I mean, selling a high probability trade is a high probability trade.
Now so you've got a 26 rank in Love, and you could sell the 30 put for $1.20, and it's using $500 in buying power. You all has a higher rank. UL has a higher rank, 55 rank. You can go to December and sell, the 70 put for $1.30. That uses, similar buying power, and you've got $10 in the room.
It just looks like there's so much more to fall. It's hard.
I know. It's just hard. It's hard to do that.
Yeah. So let me just tell you.
We don't have to force an airlines trade. We can wait until after next week too to see what the market does.
Let me just tell you where my call is in UL. I'm long stock and short a call.
It's like the 57.
It's 49.
No.
Yes. And I just left it, and I'm actually selling around it. It's stupid of me to even be holding on to it, but.
That's fine. You could be like, it could be like David Poon. I think it was David Poon who had the comeback with the Apple 205 calls. Do you remember that?
Yes. I mean, that's just leaving. That's actually just dead money sitting there right now. Do you know what I mean? Because it needs to fall back down so much. But I don't make her lose anything when UL goes up.
So let me just show people so they know what we're talking about. So in UL, are you in November?
I mean, I will actually tell you exactly where I am because I'm just kind of waiting till it rolls off. So I'm not giving you misinformation. Yeah. It's the November 49 call.
Okay, so Liz sold the 49 call against her UL stock when it was below 49, so not that long ago, probably around here.
Oh, no.
Yeah. In September, she sold the November 49 call in UL against her stock.
Yep.
And it's run so far through it, but we know a covered call is like a short put. So it's as if
I just leave that because in my account, it just kind of I'm not holding up that much capital with it, just the way that my account works. But I've just been selling weekly puts against it, hoping to get back in, and then I'll just close the whole thing.
Yeah.
But I've never, once I start selling weekly puts against things, I never get put the stock again.
Oh, well that's a high
class problem. So,
yeah.
Speaking of, let's look at, so Royal Caribbean is down today.
Is it?
I mean, it's down $1.
And it's weird. Disney it's down $1.50. That's not much. Disney was up yesterday. Disney was kept its wings up yesterday when the market was falling. Disney never really fell. But today the market's up so much and it's not right. And it's not going up at all. It's just sitting here.
Yeah, it is.
Mm-hmm. Kind of weird, right?
It is kind of weird.
All right, we are just about out of time. I'm going to make sure that we got to everybody today. And
I love all of our viewers. Everybody's so nice.
Gilbert, happy birthday, Liz. Happy birthday, Liz. Love that.
I love it. Thank you very much.
Is this a giant purse or is this just did you see that?
It's Ariana Grande and I think it's a giant purse. Isn't that Ariana Grande?
I think you might be right.
Yeah. I can't wait to see her in the new Wicked.
Oh, I know. That's coming out soon. I can't wait. Oh, looking for shows? Diplomat season 2 came out last night. That is one of my favorite series. I love The Diplomat.
Ooh, it came out last night?
Mm-hmm.
Oh, God, I've got The Diplomat. I've got Reacher. Got all the stuff that I got to watch.
All right. Spoon's only at 46.
I know. Do you want to go over what we did today? Because I think we're out of time.
Sure.
And then
we're still working natural gas.
Yeah, we're working natural gas and we're going to leave our SPX in. What are we out in SPX? It is working. It's $1.60. What did we do? $2.70. So it's $100 loss right now.
Yeah. Do we close it and take the $100 loss?
I mean, we could. It's up to you.
Maybe. Yeah, we paid $2.70 and it's trading for $1.45. But then on the other hand, you're like, oh, well, I only have $150 left to lose.
That's how I feel.
And I'm already, so just leave it.
We had to wait until the bitter end yesterday. I thought for sure yesterday's was going to be a full loss, didn't you?
Yesterday, I don't know. I put in a Jajun trade. And I ended up scratching it because I thought this thing's never coming back.
Oh, you did?
Yeah. Yeah, I didn't think we were going to get that bounce.
Scratch isn't a loss, though.
Whatever. I mean, no, it's not. Okay, in Apple, we closed our 217 calendar. In Intel, we bought back we sold a put. We sold out our long call. And what the? Oh, I was like, what did we do? We did laddered puts. Sold a put in November, a put in December. And in Boeing, we rolled our put to December. In Chewy, we sold another put against our diagonal.
Yep.
In SPX, we did the Jajun trade at 1031. And in DJT, we put on 2 wide butterflies at the expected move for the end of next week.
I'm not gonna lie to you. I think that we could. That actually could be a total donation, and it might be. But I like those trades.
I'm going to put them on as soon as the show ends. All right, Liz. Have a wonderful, wonderful birthday weekend.
Thank you so much. Have fun at Taylor Swift. We want pictures. Pictures. Okay. Everybody out there, have a wonderful weekend. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you on Monday.
See you on Monday, everybody.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Thomas, and it is Westwater Wednesday on Options Trading Concepts Live. Nick is on couch duty with a delivery window of 8 a.m. to 12 p.m., and I can almost guarantee you that it's being delivered right now. That's just how life works, right?
Lovely new couch. Yeah. Can't ask for more.
Yeah. I've done shows remote before, and it's like I'm expecting something to be delivered in a similar window, and it's always during the 11 a.m. hour.
That's how it works.
Yeah.
It seems.
Yeah. How you doing?
I'm doing good. I'm a little cold.
It is freezing.
If you see
here.
me shivering over here, you know, we've got AC blowing on us.
Yeah.
It's a beautiful day outside, but in here it's a little chilly. So
that's how they get you.
Yeah.
That's how they get you.
But this global warming, it's like 80 degrees out in Chicago in the end of October. So
yeah,
can't complain.
I watched the movie Twisters.
Ooh.
On the plane.
Heard that's good.
It's decent. Yeah. But that's what I think of when we get this like unseasonably warm plus 25 mile an hour winds. I look around, I'm like, this is how it starts. This is how it starts.
You know, the original when the cow flew by, when I was a kid, I thought that was the funniest thing ever.
Didn't put two and two, like, oh, this is not a good scenario. You're just like, oh, a flying cow.
Yeah.
Markets are relatively calm today. E-minis up 12, NASDAQ down 27, a little difference there that we rarely see, but Bitcoin losing a little bit of steam, down 600 on the day, but certainly surging higher, especially those high gamma stocks like MicroStrategy and whatnot. But yeah, we did have some earnings releases come out yesterday. I did place a couple of trades. I'm going to pop over to the follow page right now. I had 3 different trades. 2 of them I adjusted. So Google was the first one. That was a nice one. Closed a $515 winner there with the call diagonal spread. Starbucks sold off a little bit. So I moved the 102, or no, sorry, that's for today. AMD sold off a little bit, and I rolled down the 175 call to the 165 call for next week. So I turned it into a calendar spread for next week with the short option, collected $1.18 there. So that reduces cost basis a little bit. And then Chipotle was the other one that I did to the upside. So I bought the 60 December call, sold the 65 weekly call against it. This one I'm not going to do anything with, just because moving the 65 to a 60 for next week in a calendar spread is like 20 cents. So I'd rather just see if we can get a reversal and close this trade for a scratch or maybe a small win. But that's pretty much it. Pretty much it.
It's a big week for earnings. I mean, we got Microsoft, Meta, Coinbase, Robinhood, Roku, Starbucks after the bell. So a lot of market cap reporting after today. So
indeed,
be interesting.
Yep. So yeah, Coinbase I placed yesterday. I did a 240, 250 call diagonal spread, long December, short the November monthly. That one is, we'll see what happens tomorrow or today after the close on that one, but down a little bit given the recent sell-off we saw there. And then Starbucks, I did a similar upside trade, bought the 95 call in December, sold the 102 in the weekly. That one's up a little bit, but that one could be a big winner if it does end up rallying above 102, just because IV is so low there. So we'll see. But yeah, just playing everything to the upside in this crazy market. And AMD definitely did not work out, down 15 points. And that's the one I rolled to a calendar spread. So we'll see if we can get a reversal, chip away at that one. But yeah. It is Westwater Wednesday, so we've got some futures content for you. Talking about lean hogs, which is a little off the wall.
Yeah, you know, it's been going crazy. Pigs are flying, I guess.
Especially in the twisters.
Yeah, so this rally is, you know, it just keeps going. I think I talked about last week I wanted to do lean hogs. Last week I was going to do a long idea. I'm kind of on the short side this week. I think we're going to get some profit selling. I think some data we're going to look at. We could go through the trade. Decent volatility in there. I think selling a call spread might be an option to do right here. Now it is accelerating the past few days. We're really getting up there, so that's kind of why I expect some profit taking to come in. But it's had a really good month. Lean hogs up about 15% for the December contract, and that is just pretty wild. So you don't see huge moves like that too much, especially in lean hogs. So it's interesting. And I guess we could go to the slides and talk through this.
Let's do it.
A couple things to keep in mind. China is a huge consumer of lean hogs. They consume about 40 to 50% of the world's pork. The economy there, as we know, it's been doing pretty poorly. So they've also been they also are a huge producer too, but they've been producing less. Production in China is about 3% lower year over year. And in the slides, we're going to look at how U.S. production is doing as well. So if we go to the first slide, we'll see that, the light blue line is commercial hogs slaughtered this year. The dark blue line is last year. So hogs slaughtered is pretty much a proxy for supply, pretty much. The pigs are slaughtered. Butchers do their thing, cut it up into different cuts. Those cuts are, delivered FOB for the prices to the market. And then, demand has been kind of subdued also in the U.S. But if we look at this blue line, it's been trending lower throughout the first half of the year. And then since June, we've had an uptick. Now, the past month, we had a small pullback too, but the trend is pretty much rising higher from the summer. We're catching up to these 2023 levels. So, higher supply, all else equal, is going to lead to lower prices. So kind of a good thing to see there. If we resume the past 2 months of increasing supply, excluding this recent month in September, we can expect that supply will increase more. Now, China's talking about stimulus measures. They're still talking about it. They haven't actually pulled the trigger. If they did that, it would be a tailwind to prices. But until they do, we just have to speculate that they're going to keep on talking about it and, under-deliver. What's the term? Over-promise, under-deliver. That's what they've been doing. It's probably what they're going to continue to do. But anyways, we go to the second slide and we'll take a look at the positioning in these contracts. Now the orange line is the net position for non-commercial traders, otherwise known as speculators. That's people in the market, hedge funds, trading firms that are speculating on the price. They're not producers. They're not trying to hedge their cost, etc. So this orange line, we're seeing it rise up to levels that it was last in April. And the continuous contract for lean hogs we saw topped back then. So prices, kind of a negative divergence going along with that positioning right there. And the market very long right now. It's come out of a net negative position for positioning. We're now most net positive since April. If history repeats itself, we could do that April sell-off into May, into June, into July, and keep on selling. So yeah, that's just kind of the view on what speculators are doing. If we go to the next slide, we'll kind of take a look at the technical aspects. We have a pretty solid RSI divergence here. So the prices are at the highest they've been since April, March, and actually, yeah, April. And if, the chart we just looked at, that's also when the positioning topped out as well. So we got this RSI. It's lower than it was back in April when the prices were also at that yearly high. That's called a negative or bearish RSI divergence, showing that the momentum is not as strong as it was in the last rally. A lot of technical traders, they see that as an indicator to sell, or that strength could be waning. So just looking at that technical signal right there, it's a good reason to sell, or at least take a neutral stance on prices. The one caveat, I guess, is that this rally could kind of eat your face. But I do feel confident that we're at levels that are kind of exceeding the fair cost and considering the market fundamentals. So yeah, I think selling a call vertical in the December, you're 44 days out, so you got a decent amount of time on it. Guess you could do the short around 87, somewhere around there, which is right at the 30 delta. The long call, either 88, maybe 89 to get a little more profit out of there. You're pretty much risking 1 to lose 3, or risking 3 to make 1 on the trade. Probability of profit, you can get around 60, 65% on that. So I think it's a fair setup here, considering the fundamentals and technical aspects of it. And yeah, if I went with this trade last week, it would have, definitely not worked out. But we're up 2% today, this month 15%. That's by far the biggest monthly gain for this December contract. And yeah, I'm kind of hoping that profit takers step in here. We have overall market volatility. The Fed is announcing next week. We have the elections, things like that. Some risk coming off in the market now. That doesn't correlate as well as it does to equities, bonds, things like that. But nonetheless, we could take that into consideration there and put this trade on and hope that it plays out.
Yeah, I think definitely staying defined risk here into this big rally makes a lot of sense. Short call spread, I like it. You could even do a long put spread too. There is still value in options that are slightly out of the money, like the 80 strike or 81. So looking at that, you can really manipulate the position pretty easily. Short call spread, it's more of a see what the extrinsic value is and take it or leave it, where a debit spread on the put side, you can adjust to your risk profile a lot more easily. But yeah, what do you...
Pork in the summer, a lot of producers loaded up. Prices were pretty low in the market for those delivery prices. So we had kind of the demand taken out for a little bit, but the thing is the supply was expected to rise a lot. A lot of these industrial reporters expected supply to increase. That actually did not come to fruition as much as we saw. As we saw in the one chart, September, we saw a drop in hogs slaughtered. So that kind of reflected it. But going into the end of the year, forecasters, analysts, production reports are a little more positive. So supply increasing, we could possibly get, some of that fear taken out here. But yeah, I think the prices here just don't really justify the fundamentals too much. So I think this is really more of some over enthusiasm has gone into the market. Hopefully there's not too much more enthusiasm there, but we'll also get another positioning update from the COT on Friday, or the CFTC, which puts out the commitments of traders report. It's also interesting to note that open interest is also near a record high. I believe it's right under that. So the amount of traders also in this trade is pretty elevated. So if there is a pullback, if there is profit taking, that could lead to a bigger pullback than expected if that open interest was lower.
I like it. I'm going to go into the December cycle, HEZ4, and I went in and I bought the 87.80 long put spread. So the 87.80 long put spread, if we look at it here, gives you a max profit of $1,600 if we get down to 80. The risk is $1,100. So the risk is similar to if you did a wider credit spread on the call side, but the max profit is significantly more because you have the long debit delta that would increase on the way down. So I like the ability of like trying to just get a big chunk to the downside, take a couple $100 out of this thing, and then leave it. But yeah, either way, keeping the risk around $1,000 max is kind of our wheelhouse here. And regardless of whether you do short call spread or debit spread, sticking with that 44-day active cycle is where we would land, because the next one available is 107 days out. It's just too far out. But yeah, I like it.
Yeah, this is the first lean hogs trade we've done on Westwater Wednesday, so hopefully it plays out.
Yeah.
If it doesn't, I'll never bring up long lean hogs again. So
one and done. Yeah, maybe we can get some beginner lean hogs luck, we'll call it. How about it?
From the bacon on this one.
That's right. But yeah, I'll post that to the Taste Trade follow page. Long the 87, short the 80. The break even's right at the current spot price, pretty much. Collecting $250 in extrinsic value in the short option at 80, and getting that longer delta, or I should say stronger short delta on the 87 long put there. So we'll see what happens, but I like the risk reward, especially with the break even being pretty close to the spot price.
The seasonality too is pretty weak right here. There is a little bump usually in October, November, and that's wholesalers loading up for the Thanksgiving and Christmas holidays. You know, lots of people buy those hams. You gotta have some hammy on Christmas, but then after you fall off. So seasonality kind of here works with the trade going into it. The strongest seasonal time is like June, May, July for hogs. Of course, everyone's out barbecuing, doing that kind of stuff. So maybe when it comes around to the summer, we'll look at a long trade if we could do that.
Love it. Love it. All right. We've got the trade in. Long the 87, short the 80. Downside play in lean hogs, trying to catch a little chunk here. But yeah, this has been a crazy rally. From the beginning of September, pretty much. Gone from 70-ish to 90 or 84 where we sit here. So big volatility there in a product that has 20% IV.
Have you done anything in oil lately?
I have not. It's down at 68. Wow.
Yeah.
Gave up that huge rally, huh?
Yeah, we got a little bump the past couple days, and that's kind of OPEC saying they're going to possibly push back these production, pulling back on the production cuts that they did do. So December, OPEC was slated to raise 180,000 barrels per day. They've still got a lot to unwind after that. They're going to do it in increments, but pushing back, they're doing it because prices are so low, and that's reflecting the global economy. So how much can OPEC influence that? We're seeing it right here. It's a little bit, it's not too crazy though. I guess you can't fight the global economy that much. It's going to be interesting to see how oil reacts to the election, and everything like that. A lot of people, there's this belief that gas prices mainly will come down for consumers if Trump wins. I think the polls are getting stronger for him the past week. Betting market's obviously stronger for Trump. So if he increases supply or creates an environment conducive to where producers can pump more, that would lower supply. But CapEx decisions in the oil industry are usually done on decade time frames rather than years. If you're a big producer, you're not necessarily going to start pumping more right away just because one administration, because your time frame is 4 years, right? And then you don't know after that. The next administration could flip-flop every 4 years. So it's really more prudent that they make these decisions based more on their long-term forecast and things like that. So, while I don't see it as a huge factor, I think it will be interesting to see the reaction in the market on election night. In oil, of course, equities, bonds are going to be the main ones that are kind of giving me signals for it. But I think it was the last election where we dumped for a while, or the first one where Trump won. You dumped, and then you woke up and everything was back up. It's just like the market's telling you it doesn't really matter too much at the end of the day, but we'll see how it goes. Both candidates wanting to deficit spend, doing it through different ways, but the next week is going to be interesting.
Yeah, I would say. But yeah, the first time Trump won, I remember it was like 4 hours before the announcement was made, and the market just started selling off aggressively. And I remember posting about that. I was like, if the market knows anything, Trump has already won.
Yeah.
And then the next day it was completely reversed, which is hilarious. But and that was a big move. That was like a 150-point move in either direction, both directions, I should say. And that was when the E-minis were not at 6,000 or close to 6,000. But yeah, I think even if you're not in tune with the election, on an election night, tune into the futures and you can see what the futures are doing. And the market knows all. Like, the market will react before the public knows what is actually happening, or at least has the final idea. So it'll be interesting to see what's going on with oil, Bitcoin, bonds, E-minis, NASDAQ, but they will certainly be flying around. And we are doing the election unspecial. Yeah. And when I say we, I don't mean me. I will not be doing it. But we'll be on air for a good chunk of that night as well on Tuesday. All right, popping over to the YouTube chat now. James Bond, is the Aussie dollar, or does the Aussie dollar have a high correlation with gold and silver? What are your thoughts on that, if any?
I mean, so the Australian dollar is a risk-sensitive currency. You know, it's linked to China. The RBA, I believe they were looking at hiking. Now they're looking at cutting. Inflation's been running pretty hot there. But yeah, it's correlated a lot with the Dow, actually. With gold, I mean, obviously the Aussie dollar is down a lot the past couple months. Gold is up. So I think that correlation, if any, is broken right now. I'm not sure what kind of trade signals you take out of that, but of course, lower Australian dollar, lower Japanese yen means a higher dollar, which usually is higher dollar is usually bad for gold. But I think a lot of stuff is playing out with the election right now. Deficit spending by both candidates are planned, so you got inflation potentially coming up in a structural way. Fed looking at cutting. So short term, you have Fed looking at cutting. Medium term, you have possible higher inflation through deficit spending. So it's pretty much a Goldilocks environment for gold right now. So I think maybe you don't look as much as what a single currency is doing. You look at what the dollar is doing. You look at what rate expectations are. You look at what real rates are. You look at things like break evens. And, gold is pretty good bet right now, I'd say. Interest rates coming down, less people getting interest from their money market funds, certificates and deposits, so more risk-adverse investors, where are they looking to put that money? Gold is a natural, store of value, especially if you're in the older cohort and, you got a lot of money, you want to put it somewhere where you see as a safe or safer asset than equities or bonds. You put it in gold. So I think gold, I can see it continuing to rise at least through the first half of next year.
Yeah, gold's the chart of gold is wild. From the beginning of the year, it's up almost 30%. Crazy. All right, Smack Lovin', sitting in a Meta 600 call calendar that I bought a week ago for a debit of $271. I'm inclined to hold, but the big swing up in Meta has me wondering if I should manage. Let's see what this thing's trading at. So yes, you are getting what we call a pre-earnings pump in Meta. It's gone from 560 to 600 in the last couple trading days. All kidding aside, I mean, you're going to see chop regardless prior to earnings, but you've got the 600 call calendar. You're exactly where you need to be. Let's see. I mean, the problem here is you bought it for 270, it's trading for 380, and it's exactly where you need it to be. The issue is there's a 50-point expected move in either direction, and if this goes in the money or out of the money, you basically need your 9-day long call at the 600 strike to exceed $300 of extrinsic value after this week. So I think you'll have a pretty decent time doing that. But if you look at a move greater than expected, so if you just look at the deep in the money calls that are 90 plus delta, so if you get an 80-point move or a 90-point move, that's where you're going to be put in the realm of potential losses. If you get any kind of move inside of 50 points, I think you'll be okay here. But you really need to hold this through the 2-day cycle and get all that extrinsic value out of the short option. What we can do is we can just look at this and synthesize the earnings announcement. So another thing you need to consider is the 9-day option cycle has 73% implied volatility. All these back ones have 40% So we're gonna have to, if we're gonna synthesize this or analyze this, we got to crush that implied volatility in the long option cycle. So if we push this to November 1st, and then look at the Theo P&L, looks great on November 1st, but we got to crush this 30%. So this is kind of what you're looking at. Like, this is not, if you do get an IV crush down to 50%, like your P&L here is not too crazy. So just something to keep in mind. You really need an inside move, and you need to hold this to Friday. So for me, I might just close it. You're up $100, and you're likely going to get a pretty decent move in Meta. And then it just comes down to where it is when you are at expiration this week on Friday. Maybe you exit that and you turn it into like an iron condor that's more long dated, something like that. Long soybeans, what say you?
Long soybeans is, we're at the lows right here. We've kind of done a double bottom from the swing low back in earlier this month, around 960-ish. Come off there, so it's a good little technical bounce. The problem is things like soybeans. It's had a good harvest. Soybean meal is also pretty much at the lows. Oh no, it looks like a decent place to go long with the double bottom here. We're back near the August swing lows. I'm just not too confident in it yet. I think it's not a horrible idea if you want to get long. I'd like to see more conviction come in, maybe rise above 1,000, consolidate a little bit, back in that zone of consolidation that we were in through most of September. But I don't know, the world has a lot of grains. Brazil, Russia, Ukraine, they've all done pretty well. There's been problems here and there with weather, but overall there's a decent amount of supply in the market. So I'm just not too confident in a long.
Fair. If you wanted to get involved here in like December or the November cycle, you can sell a narrow put spread or something like that, and the risk is pretty low. A 10-point wide here is a $5 wide spread when it comes to real monetary risk. So like a 950, 940 in December, collecting $137, risking 360, something like that if you wanted to take a little shot. But it's looking a little weaker in the 23-day cycle at the same strikes, collecting 80 cents on $400 of risk. So you'd have to bring that in a little bit to get a similar return if you wanted to take a more neutral to bullish stance there.
You also got kind of an election angle. One of China's favorite things to retaliate with the tariffs back to us during Trump's last term was on soybeans. I believe they raised it to 35%. It kind of decimated soybean exports for a while. They did come back a good amount, but not to where they were. So you have to take that into consideration as well.
For sure. How would you go neutral on Uber going into earnings? Thinking of an iron condor in December, but would a calendar or something similar suffice as well? Uber has earnings tomorrow before they open. $80 stock, $5.50 expected move, so pretty high there. Iron condor in December. So if you're just trying to encompass the earnings move, it would be about $5 out of the money. You could go to, let's see, something like the 72.5, 70, 87.5, 90. It's more like a chicken iron condor. You're picking up half the width of the risk there, almost, in December. Calendar spread, let's see. If we were to go to like 74, just go to the expected move and see what kind of value you can get. Let's do 75.85. Yeah, I mean, it's not terrible. You're collecting in the short options with 2 days to go, you're collecting about a third of the value that you're purchasing in December. So if you wanted to lean a little directional, doing a 75 put calendar or an 85 call calendar is probably where I would go. Neutral, completely neutral, I would just go to the 80 strike because that's where most of the activity is going to be. But yeah, I don't mind it either way. I think if you're in December, you're going to have to wait a little bit regardless because there's not too much of an IV crush priced in there. 43% in December relative to the low 40s in the back month. So the IV crush is really in the 2-day cycle and the 16-day cycle, and those cycles near that. You kind of get out of that IV crush as you go to December. So it's tough for sure. But I think for a neutral trade, don't mind it. You just got to be patient with it. Let's see. Thoughts on Carvana into earnings? Feels like an SMCI 2.0 in the making. Previous history of fraud and accounting. I mean, you got to wonder, why is a car vending machine company just ripping to the moon? Yeah, I mean, it's definitely, the market is telling you that they are expecting a lot to be released in terms of potential movement here. $212 stock, $26 expected move in the 2-day cycle. I think this is the biggest I've seen this earnings quarter thus far. Well over 10% of the expected move relative to notional value. That's what I'm looking at. So generally with most products, you see between 5 and 10%, which would be between $10 and $20 of an expected move. This one's at 26. So huge expected move for Carvana for earnings, which could mean bad things, could mean good things, but either way, the market is not expecting this thing to just chop around 212. So yeah, if you wanted to play to the downside, I don't mind a downside diagonal, downside crab, or a short call spread even. There's plenty of IV that's going to be taken out of the 16-day cycle. You can see 95% in IV there relative to the high 60s, low 70s for the back months. So even a put diagonal spread, let's just see how expensive this is. Wow. Yeah, you can get a lot of value here. The 200 or 210 190, 210 190 for $15 or 210 185, something around the expected move is usually where I go. Even the 210 200, there's so much value in this short option that you could even do something like this, 10 points wide, pay $11 for it, but it's not really going to matter if as long as that December option holds over $100 of extrinsic value, which would be the case. As you can see, the furthest out of the money options at 310, 100 points out of the money are still trading for $1.50. So yeah, lots of potential there. If you're looking for like a straight up vertical spread, I might go to the November monthly cycle, 16 days out. You still get exposure to IV there, so you can reduce cost basis. Don't really like doing debit spreads or credit spreads in the 2-day cycle because you don't have any time for that to work out in your favor and get a reversal if you're wrong. But yeah, huge expected move there. I will be paying attention to this one, that's for sure. Can we go further into deficit spending for both sides? Do you have a deeper explanation for each side?
I mean, so Harris is going to increase social spending, things like that. Trump wants to lower taxes. So lowering taxes is deficit spending, right? You're getting less in. You could either do one or two things. You could spend less or you can make more. So if you're making more from the tax base or making less from the tax base, that increases the deficit. Now on Harris's side, if you spend more, that also is increasing the deficit because you're spending more and you're making either the same or less. So I think that's kind of the high up view. There's specific policies. I know like the Wharton School of Economics has put out forecasts for both Trump and Harris's plans that are more on the conservative side, maybe not so outlandish. There's some estimates out there that are, way outside of what the Wharton School is estimating. So I think, if you look these up, you Google them, you could see, the various models, people forecasting what their agendas are going to do. But at the end of the day, both candidates are expected to deficit spend. The question's been asked, how long can we do that? And when you're printing your own money, you can argue that you could do it for quite a while. I guess the point is that what threshold is hit to trigger some kind of credit event. I don't think we're close to that, but most people say that we're on an unsustainable path. So I think eventually it will start to impact the markets. It's not yet, dollars rising yet. Treasury demand has been relatively decent, especially from international buyers. So there doesn't seem to be a lot of concern about the U.S. economy going into something like a default event or anything like that. But there's definitely a lot of information out there on all that you can look up.
Yeah, I like the call out of the Wharton analysis. That should be pretty easy to find if you search for it. But yeah, I mean, we live in a crazy world right now. Bonds have sold off aggressively. The markets are at all-time highs. Bitcoin's ripping higher. Gold's ripping higher. It's an interesting situation we're in. Then when you look at the FedWatch tool, we've got a 96.7% chance that we get a 25 basis point cut on November 7th, or it's announced in the meeting. So we are leaning aggressively towards that 25 basis point cut for November. And then if you look at December, there's a 73% chance that we get another 25 basis point cut. So 50 basis points through the end of the year is looking to be pretty priced in here, unless something changes, and that can certainly happen. We've seen these probabilities fly around like crazy.
Yeah, Wharton says Trump's going to increase the deficit by $5.8 trillion, whereas Harris would increase it by $1.2 trillion, both over the next 10 years, based on their conventional basis. So they have a page, it's called Guide to the 2024 Presidential Candidates Policy Proposals. They have a landing page that pretty simply summarizes all their stuff, but both candidates spending more, so.
There you go. And he's got an iron condor in gold. November 25th. Let's see. November 25th. 2635, 2690, 2800, 2815. November 25th. Okay, the last cycle that speaks to the Z contract here, 26 days out. 2635, 2690. Okay. Let's see. 2800, 2815. Okay, so you're right there on the upside. Your put spread's much wider than your call spread. So the question is, do you have this on as like a jade lizard or not? But either way, do I hold through the election or roll out? And when can I roll out to the next expiration cycle? Well, you can roll out whenever you want, but the problem is when you roll out in time to the December 2nd cycle or beyond, you're going into a new contract. You're going into the G5 contract, which has a completely different price. So the current price is $27.97 for all of these expirations up to 26 days, and the next expiration cycle, the new last price is $28.22. So I would just double check. I'm not sure if you have this on as like a jade lizard, because your put spread's really wide relative to your call spread. But either way, if you want to hold through the election, or if you want to hold and see if we get a little sell-off here into this rip-roaring rally, don't mind that either way. I think it's going to be tricky if you roll into the new cycle with a trade like this, just because the spot price is different. So personally, I would isolate the trades. I would just close it and then start a new one, readjust the strikes based on the new price here. Because if you roll into the next contract with these strikes, you are going to have an in the money spread. So I would just isolate them and have it, instead of rolling, just think about it as like, this is your one trade, this is a new trade. But yeah, I don't mind either way. Let's see. Any ideas for Meta and Microsoft? So Microsoft and Meta both pose the same problem in that they are expensive. Microsoft's $400 stock, and it is in the middle of its trading range for the last couple months. Meta is a $600 stock, and it's just really difficult to get into a typical trade that we normally would go into, like a long December, short the weekly, diagonal spread, or crab trade. A calendar spread is certainly on the table if you want to play it to the upside or downside, but even that, like a 650 call calendar spread to the upside, long December, short the weekly, is still a $1,000 calendar spread. So you got to have pretty strong conviction there with limited defensive mechanics for a calendar spread. And another thing is, if you're doing something like a neutral trade, like an iron condor, if you're going to December, 50 days out, the IV crush there is really not too great. It's 42.5% IV in December relative to 39 across the board pretty much for the next couple cycles. So it's really one where you'd have to kind of just set it and forget it. It's tough. So I might actually not trade Meta or Microsoft for these reasons. Microsoft is a little bit more affordable, but still, like, just doing a classic diagonal spread, it's still over $1,000, well over $1,000. What are you thinking? You trading any of these, or you're gonna see what happens?
I put out a earnings preview on Microsoft earlier this week. Pretty bullish on Microsoft, although you said it's trading in the middle of the range. Expected move, I think, is like 6 or 7% on the stock for the stock price. Oh no, I'm not going to trade it, but I think the AI spending is in focus. Data centers, you can see Microsoft, Amazon, even Meta is, some of the industry leaders for that. I think the overall vibe is getting more cautious for that, but we're still in kind of the gold rush phase. So I think if, they put out good numbers, we could keep going higher.
We shall see in just a matter of hours. Thoughts on Tesla price levels? I don't have anything on in Tesla, but this thing has been flying around, as you might imagine. It went from 200 to 270 in a couple of days, dropped from 270 back to 200 in a couple of days, and now we're sitting at 260-ish. So getting a lot of two-sided action here with a lot of gaps, which for me kind of takes me away from like a neutral trade. It's not something I want to see, like a 50-day option cycle in December with a $37 expected move in either direction. Then you look at a chart and you see 70-point gaps in 2-week time frames. Like, I don't know. It just doesn't scream something like an iron condor for me. I would rather be directional here. But yeah, if you have a specific trade idea in mind, but in terms of price levels, like the upside, we haven't seen it break 275-ish. We've seen it fall from that pretty aggressively a couple times. And on the downside, during the August market meltdown, you saw it go down as low as 180. But if you exclude that, you're kind of in that 200 range, 200, 210 range, where it seems to see some bullish reversal there. So I would say 270 and 210 if you're trying to capture a range. But again, December, the 270 strike is obviously much closer than the 210 at this point in time, but the 210 doesn't really have much value there. It's $3 by itself. If you define the risk like a 10-point wide put spread or a 5-point wide put spread, you're not really picking up that much value relative to the risk.
kind of like the short trade for that because, this gap between 230 and 220, we gapped down, then we gapped right above it. So there's not a lot of liquidity, obviously, there at 220 to 230. So if we move back towards that, that's where you could get, another gap where you're just getting a liquidity window that isn't going to fill orders very quickly, and you could get the selling coming in pretty fast there.
Yeah. But yeah, either way, I think defined risk, $260 stock, this thing's flying around. Just make sure you're comfortable with that risk parameter. Lithium. What do we think is going to happen with lithium going into the end of the year 2025? I have an LAC stock position from 225 and I'm gauging time horizon and opportunity cost. Do you have any thoughts on lithium?
I don't have too many thoughts on lithium. I know there's like an Australia project that just got taken offline. Probably some of the upside we've seen lately in the price, but I'm not too tuned into the lithium market, so I don't want to say too much on that.
Yeah, you've seen a pretty big rally. If you got it at 255, that was close to the bottom, so good trade for sure. But yeah, I mean, when I'm looking at just straight up stock trades, I just look at where it's been over the last couple of years or the last year, and you've seen it get as high as 7.5. So what I would do is look at that time frame, and I'm in the same boat. I haven't been trading lithium directly, but you could look in that March to April time frame when it was hovering at that 7 level, and just look at what was coming out around lithium during that time. There was probably some kind of news around that heightened level, and see what that is. See if you believe it can get back up there. If you think it can, then you could certainly hold it. It's a small product, unless you're trading this in massive size. It's a $4 product, but either way, nice trade from 2.5 to 4. Why does everyone rely on Delta for decision making? I would say because Delta, if you look at the different Greeks that we look at, Delta, Vega, Theta, and Gamma, Delta is not even close the biggest mover of your daily P&L and weekly P&L and monthly P&L. Like if you have your Delta wrong, you're going to be losing money, regardless of what happens with IV. Except for a very specific case, which is earnings, you could have situations where an earnings IV crush offsets your Delta. But outside of that, for every other trade, Delta is going to be the strongest mover of your options positions price, and it's not even close. Theta is something that is, you can see it, you can see what the theta value is, but because the other factors of the market are always moving, you're not going to really see theta come out day to day. It's going to be more of a macro like idea thing, where Delta, you can see it in real time. So that is why I would say Delta is what we focus on mostly. Let's see. What do we think about an 85 calendar in November, December for Uber? Uber. 85 calendar, November, December. Long. Is it long the short the November monthly or the weekly? Because if you're short the weekly, you're going to pick up $1.10. If you're short the 16-day, you pick up $1.80. So I would go to the November 1st cycle because there's a clear difference in value relative to time. You're picking up you're picking up $1.10 with only 2 days to go, and you're picking up $1.80 with 16 days to go, which is a lot more time, and you're not going to get that $1.80 overnight. So I would go to the 2-day personally if I was doing a calendar here, and just take the extra 70 cents in risk, knowing that I'm going to get all of that dollar and change in my pocket in the next couple of days. But yeah, I don't mind it. Don't mind it. Let's see. How would you manage a Roku December, November 1st calendarized put ratio? Ooh. 75, 70, 65. Long the 75, short the 70 and 65. So if this is a downside put crab trade, that's basically what this would be. Long the 75 in December, short 2 of the 70s in the weekly, long 1 of the 65s in the weekly. How would I manage this? I would, well, you have to wait till after today when they have earnings after the close. But ultimately, you're looking for a move in this range here, in the 70 strike range. And we can actually move this to November 1st. This is our risk graph here. We can crush implied volatility in the long option a little bit. Let's bring it down 10 percentage points, bring it to 60. You're probably going to get more like a 15-point contraction if I were to guess, just to align this up with the back months here. But yeah, you're ultimately looking for a move between 75 and 70. But if you get a big gap down below 60, let's say, I would just look at the value of this long put diagonal spread, the 75-70, in isolation, because your 2-day cycle is just going to basically trade for $5. You might be able to get out of this and secure close to max value on the 75-70, and then you can just pray and hope you get a reversal over the next couple days. But with a 2-day short option cycle here, there's not much to do. If you get a rally and you're not profitable, that's a different story, because you'll be able to close the 70 puts and the 65 put and then roll into the November monthly cycle, turn into a put diagonal spread, turn into a put calendar spread, pick up some more value that way. But that's pretty much it for these crab trades for earnings. Let's see. Let's do one more here. I've got a 165 put in First Solar in the November 8th cycle with a non-mover for earnings. Why isn't the premium coming off today? Let's see. Let's look at the change here. I mean, you did get a pretty decent IV crush or premium crush, just looking at the net change in these weekly options. 165 put in the November 8th cycle. It could just be the fact that First Solar, this is likely one that's holding on to value because it's in the election cycle. What would you say about that for First Solar?
Yeah, like that. I'm not too bullish on solar companies right now. I think we've seen some weakness in like things like EVs, solar. So I think a lot of the bullish story is kind of exhausted right now. There will probably be another big catalyst for the sector. But I haven't been playing the solar names too much. I used to trade Sunrun, I think it was a little bit, but not doing First Solar.
Yeah, I mean, you can see it here. The premium in the IV in the 9-day cycle is 115%. The back months in December are 72%, 67%. The expected move in the 9-day cycle is $26 plus minus, which is over 10% of the stock price. So this 9-day cycle is basically still being priced at like a binary event is in here, which it is. So that is why you're not seeing too much premium come out after this earnings release. So it's an interesting one to be sure. But the 2-day cycle definitely got vaporized a little bit here. All right, I think that's it. We out of time. That was a good one, fun one. We got a lean hogs trade in. I don't think I've ever traded lean hogs.
Yeah, I'll be watching that for sure. It's going to be a fun one to watch.
Yeah. So yeah, to recap, I got the 87 long put in December, short the 80. So a straight up vertical spread in the 44-day cycle, but the reward is about 50% greater than the risk here. Bought it for $11.90. It's trading for exactly that right now. And then I got filled on a Starbucks trade for earnings, long the 95 call, short the 102 call. Long the 95 December, short the 102 weekly. Playing it to the upside. We'll see if we can get any sort of bullish momentum with their new CEO, the shiny new CEO. But yeah, if you have any questions, you can reach us on Twitter. I'm a trader, Mikey B. Nick's a trader, Nikki Bat. Thomas is at FX Westwater. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then, but stay tuned on the YouTube channel as well as tastylive.com. Until then, peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. My favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace. We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you soon.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm. He likes it. 3.5 stars. He doesn't like it a lot. Is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
We are back. It is Friday, November 1st, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, happy last weekend before the election, post non-farm payrolls.
I like it. Let's coin it.
That is a mouthful. That is not a marketing slogan, nor it will be something we ever say again here. But it is the Friday of non-farm payrolls prior to the election. Yes. We have a big week of bond auctions next week. We, of course, have the Federal Reserve meeting. We're in the thick of earnings season right now, where 42% of the S&P 500 reported this week. So we've learned a lot about the economy, a lot about corporate earnings, and hopefully we will see the results of the election Tuesday night. But we have a lot to discuss here this Friday because it is a jobs report Friday, so we can head right on over to the slides here and start to look at this non-farm payrolls report recap. What's moving the market? Why was it a big miss? And why that miss may not be something to care about. First things first, headline number, a robust 12,000 jobs.
A big 12,000.
That's not a typo. Not a typo. The economy added fewer jobs in some than live in my little sleepy town here. north of the city in New York, against an expectation of 113,000. Now, the unemployment rate stays on hold at 4.1% because the labor force participation rate drops from 62.7 down to 62.6. But I think that top line number is worth digging into because this is a month where, at least according to how the payrolls are calculated, we have to take into consideration the strikes that are going on. When workers go on strike in America, they are actually considered to be off payrolls the month that they go on strike. And when they return on strike, they're actually added back to payrolls. So accounting for the strikes that are going on around the country, Boeing, for example, you're looking at potentially around 40,000 jobs off the payrolls there, according to various bank estimates. And then you factor in Helene and Milton, the two hurricanes that made their way through the Southeast, and that could perhaps be worth up to 70K. So absent these one-off events, the economy didn't produce a ton of jobs last month. But if we didn't have the strikes and we didn't have the hurricanes, then you probably would see a firmer number here, which is in part of the reason, I think, why the market's not reacting too negatively or positively to the data today. When we saw the jobs data come out at 8:30 a.m. Eastern, Ilya, it was kind of like a shrug. The S&P and bonds wiggled and jiggled a little bit, but I wouldn't say it was anything substantive like 50 points down, 50 points up. It was, what do we do with this? So Ilya, tell us, what do we do with these figures?
We spent a deep 30 minutes on Macro Money yesterday talking about how the risk to these numbers was not that they were going to be low for all the reasons you've just cited. The markets knew that it was going to be low, some amount of low. I don't think, obviously, they had 100K lower than forecast in their back pocket as a viable scenario. But for all the reasons you've just mentioned, the markets knew this was going to be a weak report, and there was nothing to really get worried about there. The real issue would have been if the number surprised higher. And we saw some evidence that that could be. We already saw initial jobless claims fall away last week. We already saw, and that's in response to what's going on with the hurricane disruptions. We've already seen that ADP surprised by a big margin, and lo and behold, we get yet more confirmation how good of an indicator ADP is. But nevertheless, you never know. Sometimes it's good, sometimes it's not. And this particular time, it was obviously awful, but it did give you a reason to think, well, maybe this means something. The PMI numbers told you that labor market conditions were better in October than they were in August or September. And so you look at those things and you go, okay, well, maybe there's an upside surprise. U.S. economic data has been surprising higher. That's not going to be good news because that'll mean a tighter Fed that you have to now think about in conjunction with the election because both are next week. Not great. This is right in line with what the markets thought they were going to get thematically, not number-wise, obviously, but everybody already understands that the top of the NFP number, especially in the post-COVID years, is subject to significant revision because the labor market is still trying to figure out where it is. After a very disruptive pandemic that accelerated aggressively the speed of baby boomers exiting the labor market and reshuffling its makeup. And then, of course, a rapid rate hike cycle immediately thereafter. So the top line of the labor market has, for months now, been kind of, okay, this is like up or down 100K, not a difficult revision over the course of several months. This could change fast. So people have paid attention more to the wages number, and they've paid attention more to the unemployment number. And both of these really undergird the idea that this is temporary. At wages growing at 4%, we just got PCE this week. It was 2.1% at the headline because let's be realistic, we're not Fed policymakers. We have to be people that do buy energy and food. So while the Fed can take those out and say, our core rate is higher and we have to tailor interest rates to that, the average consumer is not tailoring interest rates. The average consumer is driving and eating. So the headline inflation rate is 2.1%. That means wages are growing double the rate of inflation. This is not a jobs report that is going to tell you, oh no, consumption, oh no, growth. Consumption's fine. In fact, the cost of living crisis has been improving this way, faster wages than inflation, going back to the May 2023 at this point. So it's been over a year, almost a year and a half. So this is not a concern. The markets shouldn't be concerned about this in the growth sense. In fact, that we see yields higher at the long end today just tells you this doesn't upset anybody's reflation narrative.
No, nor does it suggest that we're imminently heading towards a recession. In recent months, when we reviewed the jobs data, we've had titles like "The Recession's Here" or "The Recession's Canceled." Today, I think we would actually say that without an asterisk, because this is now a month in which the SOM rule is not triggered any longer. We see here that the SOM rule now falls back from 0.5% last month to 0.43% this month. The condition for the SOM rule for the unanointed is that the three-month average. Sorry, here. I want to make sure I have this right. Yes, it is at 0.43%. Okay, now that that's confirmed, why do we care about the SOM rule? The SOM rule is devised by Claudia Sahm. She was a former Council of Economic Advisors policymaker. She worked for the Obama White House. She also worked for the Federal Reserve. This rule stipulates that if the 3-month unemployment rate rises by more than 0.5% from its lowest point over the past 12 months, then the economy is heading into a recession. Now, this rule more or less becomes public in the late 2010s and really catches on around COVID. And we start to look at it as an indicator because historically speaking, it's been very accurate. It's accurately predicted all of the other recessions that have occurred in U.S. history. Now, we really haven't seen it in a live fire drill yet. Everything's been testing within a sample size. So this is the real out of sample testing period, which is deployed in the real world. And so the past few months, we've had the SOM rule triggered. It was the basis of which you see that early August meltdown in markets, at least on the economic side. The ISM manufacturing report comes in weak on that Thursday. We get a weaker than expected jobs report that Friday. SOM rule triggered. Recession fears begin to kick up automatically. Today's a day where the SOM rule is no longer in that territory, though. It had spent the past few months there. It's no longer there anymore. I don't know what else people need to see. We just had a third quarter GDP report. We were at 2.8% in real terms, and now there's SOM rules untriggered. I don't know, guys. I think that at least in the short term, barring an outside event, a supply chain crisis, the economy has pretty good momentum here heading into the final 2 months of the year.
And by the way, let's not forget, that was the flash GDP report. That was the first look. That's going to get revised. It's unclear to this point which way it's going to get revised. And if second quarter is any indication, it's going to go up from the upper 2s into 3. And even at 2.8, even at 2.4. This is an economy that's for the largest economy in the world, which should be something of a prohibitive barrier. Size makes it very difficult to grow because 2.4, 2.8, 3% of a very big whole is in aggregate a lot of output. This is why smaller economies tend to just numerically grow faster. So when you look at the idea, which is what we live with now, that the U.S. economy, the largest in the world, is outpacing all of its nearby competitors, all of its economies that are a reasonable counter. It's outpacing the Eurozone in aggregate. It's outpacing China by a long mile in aggregate. We are in a situation where, frankly, even if you thought that U.S. growth was facing significant risks, what are the options on the table for you? There is seemingly no question, even with the slightly warmer GDP numbers out of the Eurozone this week, there's just no question that the U.S. is where, as a market watcher, you'd be looking for growth and multiple expansion and earnings and all of this, especially since, as we've talked about before, U.S. prosperity is not at this point spilling over because U.S. imports primarily goods, and most spending currently is on services. We see that in the in all of the inflation data, and really in the Fed's big, we got to make sure inflation comes down. We can't cut rates too fast. Why? All of the inflation is trapped in the service sector. Goods inflation is negative at this point. It's actually falling. That's why U.S. prosperity is staying in the U.S. People are spending in-house, as it were. So that should see U.S. markets outperform. It should see U.S. companies outperform. Unless and until U.S. consumers finally start spending on goods again. And in fairness, if you look at the relative spending on services versus goods compared to history, we're the most lopsided in favor of services in 2 decades. So there could be some correction here relative to historical average, but that's not bad news for the U.S. That's good news for everybody else, if it happens.
We're looking at a bounce back Friday here in stocks. On the other side of this jobs data, S&P 5776.75 right now here in the market. It's a gain of just about 2/3 of 1%. The S&P is not the leader. That goes to the NASDAQ today, which is up by 0.92. The Russell is up by 0.51. And we're not going to quote the Dow because we don't care about the Dow. This is a futures show and a futures options show. Ilya, there's no options on the Dow, so no reason to bother with it. That said, though, while it's a nice rebound from yesterday's significant losses, is this anything more than a dead cat bounce? We just crossed the 1 million contracts traded here on Futures Power Hour. So it's not exactly an unhealthy volume day. This is back to being a healthy volume kind of session, just like yesterday where there was healthier volume that we had seen recently, although kind of a monkey paw curls kind of moment where we were kvetching about no volume. And then when it comes in, it moves the market, at least against what I was trading. But This is not the kind of rebound I feel like where you're really feeling comfortable as a bull.
No.
I mean, 5730 was a nice level of support. It should have been support. It held up as support so far.
Yeah.
But I imagine, thinking about things through your lens, if we were to go down to, say, the 4-hour time frame and look at the level right around 5805, where we had resistance the 4th, the 8th, and then the swing lows on the 23rd, you're not exactly seeing something that screams confidence up here. So let me just resize you. And for the visually interested, there's your swing spot where we rallied into today and then pulled off of. So look, let's just take a step back here. Was anyone expecting a significant move or expecting a significant breakdown or breakout one way or the other today? It's the weekend before the election.
Not unless NFP went completely the wrong direction. If it did, you could.
If it did, you could. We haven't seen that. And quite frankly, if we're going to be completely honest with ourselves here, if the range that we were looking at before was 5730 to 5830 and we broke out higher, the measured move out of this particular flag would then be 5930. The market moved up to a high of 5927.25 on October 17th. That's pretty darn close, right? Technical analysis is an art, not a science. So then if you have a new sideways range that forms up here that's 100 points wide, then a drop from 5830 would bring you back towards 5730, which we more or less touched yesterday when we hit a low of 5732.5. So I see some pretty mechanical trading here. Equidistant range breakout, effectively touch the measured move. Break back down into the measured range, swing 100 points in the other direction. Hit the measured move, start to bounce back up. I don't know if you put stock into anything on a Friday where we have geopolitical risk raging again, I guess, because Israel and Iran, they just can't get enough of each other. They're like those two kids on the playground, Elia, who keep kicking each other. It's like
they just can't help it.
Maybe they like each other.
Yeah.
Well, they're not ignoring each other going into the weekend. We obviously had that missile attack yesterday from Hezbollah. Israel is about to respond. Iran is saying they're going to do a major retaliation. So you have that. We'll put that in the corner for now. We have the politics of it all. We have the Fed's blackout window. You had a rally this morning. People get back to 5,800. You get to this resistance zone. That's it for me today. Time to go home. It's 76 degrees outside on November 1st. Why on earth would I want to be sitting in front of my computer?
I mean, from the looks of it, I would concur. When you look at this situation, and I got to say, from the bearish perspective, which is where I sit with my current exposure, this is wonderful. Because you look at this and you go, well, you got this election on Tuesday. And you're not even going to rally it back up to even after yesterday's sell-off just to neutralize everybody's portfolios and reset. Okay, I get it. Yesterday was month end. You want it to square. Fine. You're not even going to put that back on to just get back to neutral? Great. That tells me that this market is shaky. And as I've looked at and considered why it's so shaky, because really the thing this week, obviously we've just been singing the praises of the economy. We've had very good reason to do so since late August, when the good data just started rolling in and rolling in and rolling in. We have talked about the solid earnings from the Mag 7, which are really the pillars 1, 2, 3 through 7 of the global stock market, not even just the U.S. So why are we doing this? Why this violence yesterday at month end? And I seem to be landing on the idea that it's the election, but perhaps not for reasons that people think. The markets like certainty. They know this is an event risk. They've gamed out all the scenarios, but they can't know which scenario to bet and how to allocate capital until uncertainty becomes certainty. Until you know which portfolio you're going to pull out. If it's Harris, go get the Harris portfolio. Put that on. If it's Trump, go get the Trump portfolio. Put that on. But until you know which one, you're out there confused in a world with 2 wars, in a world where all manner of economic policy experimentation is going on in China, the world's second largest economy. Maybe it'll work, maybe it won't. How it'll work, who knows? So you look at this whole thing and you say, I want certainty. And in this election, which is days away, one candidate is given to contesting any outcome other than his win. And in fact, given how tight the polls are, if he loses by a commanding margin, he's only likely to contest it louder. We've seen this before. We know what this is. So as we've seen, even just in the betting markets, and again over the past 24 hours, a reversion toward a coin toss, it's 55-50 on predicted at this point. It was 62 for Trump just days ago. So
yeah, Kalshi's probably the best place to look because it's U.S. based, overseas poly market, not a lot in the U.S. So Kalshi here, and it's the deepest, most liquid U.S. betting market. Which, I get it, folks. People talk to me all the time, like, what are you trading on poly markets? Like, I'm not on poly market. It's illegal here in the U.S. They're like, okay, but what are you really?
We couldn't be.
But they're like, okay, so what are you really trading on poly market? Like, I get it. People are using VPNs. I'm not doing that. I'm not going to risk my job here. So, but Kalshi is legal here, right? Predicted's legal here. Kalshi, I think, is the most because these are exchange settled. 65.2% on October 29th for Trump to 34.8% for Harris. That's narrowed down to 56.44. It's been basically a 20 or 18 point swing now in the past 2 days, which makes sense from a normalization perspective and makes sense from just how the market was structured perspective. We went into this on the prediction trade yesterday, Ilya. We tried to skate by it on overtime so we could save that content for later on. But the way the market's structured right now, there's a single wallet out there that controls 29% of the entire poly market presidential election race. And he's sweeping the floor and buying up all the Trump yes votes almost on a near daily basis right now. In one of his sweeps that he did a few days ago, he had to purchase $274,000 of yes Trump at 99.7 cents. So this market has been moved around a lot by, I don't want to say manipulated because that's not right, but by having whales in a relatively smaller pool, it's led perhaps to some price distortions. And heading into a weekend where when you look at Marist or Sienna or Atlas Intel, you could pick your pollster out of a hat. You're going to find 52 to 48 or somewhere right around there for either candidate, everything within the margin of error, where it could be a 1 point win for someone, or it could be a 5-point win for someone in some states. And statistically, that would be literally meaningless. So I don't think there's an edge here going into the weekend, but having a 60-40 market and financial assets totally predicated or at least positioned for what would be a slam dunk Trump victory, I can't help but see the last 2 days of price action as like a reassessment of that, with the month-end window dressing being a convenient excuse to rebalance the books before next Tuesday.
Well, and therein is the thing. You can say whatever you want about this or that candidate will be good or bad for the economy, whether that's a partisan perspective or an earnest economic analysis perspective that leads you to a conclusion. Either way, that's the premature discussion. The first discussion for the markets, which have already gamed out what they think about what this bouquet of policies will do versus what that bouquet of policies will do. And from my perspective, there's good and bad ones on both sides. When you look at that, you've been ready. Now you need certainty to deploy. And at this point, anything that delays certainty is risk off. So if the race on these betting markets that everybody's been staring at and the polls are normalizing to about a coin toss, then you go, well, really, forget policy. I just don't want uncertainty. I'm going to de-risk, because the closer they are, the more likely it is that there's a protracted contesting of the outcome, and we won't know for longer.
Just to put a bow on this election point of view here, on October 28th at 3 a.m., Trump was a 62% chance to Harris's 38 to win in Pennsylvania. As of right now, it's 52-48 on Kalshi. So perhaps we're seeing a sobering up of these betting markets as we head into the polls. And it's not the betting markets are perfect. They didn't get Trump right in 2016. They were right in 2020. They've missed things along the way. And the fact that they're overseas without U.S. bettors in them legally tells me a lot.
I mean, they got the red wave in the midterms completely wrong.
Right.
And that was the most recent big test.
Yeah. I mean, if you want to influence American domestic perception of how the elections are going, and it's an overseas crypto market, connect point A to point B, folks. It's not that difficult to make a story here. That doesn't mean money can't be made trading it.
The acronym you're looking for is GRU.
NASDAQ here, heading through October, we had outlined a bull flag, and there was a point, was that this week, where it looked like we were getting ready to burst through 20,750. We have since pulled back after those Meta and Microsoft earnings. Amazon and Apple coming to try to save the day yesterday. But what I find fascinating is if we were to just look at this on a day-by-day basis, that's a month-to-month basis. I said day-by-day here. We go to you first. And we see how this has evolved. The breakout comes in. It looks like it's appropriate to be bullish as we make our way through Wednesday this week now. We say, okay, hold on. We're back into the channel. The heuristic we always use is if you're exiting a consolidation only to return into it, you typically expect a return to the other side of the consolidation, which is more or less what happened, because by yesterday morning, we were trading into the lower part of it, and then it looked like we were actually breaking through it because we cleared out the swing low on the 23rd.
Yeah.
But the funny thing about this is that we are now back into the original consolidation that we were watching prior to the breakthrough 20,750. So there's a reason why we talk about this week being a week for no resolution or chop heading into the election. Are you really going to put more chips down on the table or just take profits where you can? If you think that Trump's going to win, would you really do any significant tax loss selling or shedding of your equity positions, knowing that perhaps next year the tax rates could be lower? Not really. So you're in a holding pattern. There's no real structural incentive right now to sell and deleverage unless you know what the results will be, which the election's not over. So we don't know what the election results will be. But in any case, if you were a bull, this was a trap. If you were a bear, this was a bit of a trap. This is a holding pattern. It still looks like a flag to me. It may be a little bit wider than originally expected or discussed, but this is still an area for patience. And going into a Friday with the geopolitics and the politics of it all, sitting in the middle of this range. If I have fresh capital to deploy, it is not being deployed here. I don't think it's being deployed in stocks at all, actually, if I'm putting on new trades heading into the weekend.
Quite right. I don't think this was a bear trap in that you had support that was very clearly broken, and now you're retesting that as resistance, and you're not getting back over. Yes, the 4-hour can get a little wick happy. It's a higher frequency chart, but nevertheless, lasting conviction, this is not. And the way I've been trading this is not to chase the breakout, but to be sort of tactically short near the top of the range, essentially saying, well, there's a lot more to go down than there is to go up from around 2,500, 2,600, something like this. And really the thing to do then is just to say, you know what, from a risk reward perspective, I have tactical put verticals here just because that's the more sort of tactically attractive structure. And if it breaks higher, it breaks higher. And then you aim for July's high. And if it doesn't, well, then it doesn't. But we like to talk about pot odds here a lot. That's really the crux of the logic. So would I chase this move down at this point? I don't think so. There's no reason, seemingly, to really jump out the window on this on a Friday. We're going to get a lot more from the polls that come out over the weekend. That's probably going to give the markets one last big rinse, one way or another. Positioning can melt up to reset us back toward the highs. Positioning can reset us back toward the bottom of the range, depending on what the polls have come Monday. But in the meantime, this is not screaming imminent new position called for.
No, and depending on how you slice the NASDAQ, we're still struggling to get back above the July and September swing high trend line. The uptrend from the September and initial October swing low, that's still broken, and same here for that later October swing low. I suppose if you want to draw it to yesterday, that's a little disingenuous, but there's still signs of damage. It's not the most compelling thing. Before we turn the page to bonds, though, quick check on the seasonality here for the S&P 10-year average. 3.34% higher, 20-year average 1.86% higher. For the NASDAQ, 10-year average is 3.29% higher, 20-year average is 1.69% higher. November is the month where, historically speaking, we have seen the biggest vol crush. The VIX declines by the most in November of any month during the year on a percentage basis, which I know that's kind of sacrosanct. Lastly, actually, before we go to bonds, real quick with the Russell, we are sitting still wrapped around the 618 of the recent 6-month high-low trading range. Somewhat instructive as we break the uptrend from the initial October swing low down to the September low. We try to climb through there today, and we failed to do so. This may just provide us a more ideal entry point. I'm not in it yet. We've long talked about this. This is one of Jamal's favorite trades. It's been working for us basically all year long. Iron condors, when the Russell is sitting at the midpoint of its 6-month trading range, that would be closer to 2175. The volatility is creeping up with an IVR in 48.7, although that's actually deceptively low because the raw volatility is at levels consistent with where we were back in late July when the market was going up, or the volatility was going up and giving us IVR readings of 90, 100. So the volatility is rich, is the long and short of it. The too long didn't read here. The Russell shouldn't be ignored. It has been ignored for a long time, but small caps outperforming their mega cap tech peers. We've discussed that all this week. Keep an eye on ASML, SMCI, and what this all could mean for NVIDIA, but lower rates, that should be a good thing for stocks, particularly smaller caps longer term. If those yields could only stay lower, which on a day like today, they're not. There was a bit of bond strength coming out of non-farm payrolls, Ilya, as you can see here in our chart, but that has become quite the ugly candle, and it is a time as old as, well, the past month. This past month, we have seen basically every single session close below our 1 week moving average, but for a brief 2-day window that we have here on the 15th and 16th of October. Today is another day where we try to climb back through the 1 week. We just can't do it. How do you catch this falling knife?
I don't think you do. You can't help but think the bond market has figured something out here. Almost in a similar fashion to what you saw when the bond market started to turn in September, but a bit ahead of the Fed. So if you look at where the absolute peak in the long end is, it is the day before the Fed, the 17th. On the 18th of September is when you get 50 basis points of a cut from the Fed, and the bond market goes, aha. This is reflationary because the economy is fine. Run yields back up. But you already see that the bond market starts to stall days before that. You start to see it begin to struggle, and in fact, it sets the spike high that it then never closes above. It tests above it, but it can't close above it on September the 11th. And if you look at what happens thereafter, yes, you test a bit higher, but ultimately they're inside tests. You don't actually break down. So the peak happens a good week before the Fed opines, as though the market by then has figured it out and said, okay, we're going to get the 50 basis point cut. We're going to get a dovish revision. And maybe the details are going to be fuzzy this way, fuzzy that way, but the upshot of this is reflation. And they start to march the bonds down. The upshot of this election is reflation too. Because when you look at the policies being put on display by either side, that's a consideration for after we get through uncertainty. You see that there are no fiscal austerity candidates on the menu here. One of them wants to expand the deficit by about twice the amount that the other one does, because at least on the Harris side, you have tax cuts for certain people being weighed against tax hikes for high income earners. I believe the threshold is 400,000 or something like this in annual income, but don't quote me. But in any case, at least there is a balance of some sort. On the other side, there are tariffs, which increase the cost of goods. And it's essentially a consumption tax, just a consumption tax on imports. And then you have lots and lots of tax cuts of every stripe. So there's every reason to think that there's going to be a big inflationary impetus to the economy with all of this fiscal largesse either way, and that what this means is that the Fed is going to have to keep rates higher. So all of this is reflationary any way you slice it. On top of this, when you move closer to a 50-50, closer to a coin toss outcome, and I'll be the first to scream it is ridiculous to consider the U.S. a sovereign rating risk or a sovereign credit risk, because I don't care what happens, you name it. If the U.S. is not, in your worldview, the most eligible borrower, you're just deluding yourself. There's the only way that you could look at a situation where that's not the case is to imagine a future of which there is no evidence and probably won't be any evidence on the foreseeable trajectory of 10 to 50 years. So there's none of that risk. But as a short-term incremental adjustment, you will see markets say, there's uncertainty around the election outcome and it's going to drag out longer. That's a bit of a knock. And you're going to see bond yields respond higher. There's going to be a little bit of an uncertainty premium there. This is maybe a market that sniffed out something and said, wait a second. We knew where the Fed was going and we knew where the bonds should be. And then when the Fed gave us the all clear, we said, okay, yes, go. This could be happening again now. The bond market could be saying, listen, whatever's going to happen here, I'm going lower. I need the go ahead, but I'm going lower. I know everybody's been waiting for me to bounce, and the answer is no.
Speaking of bouncing and the answer being no, that's more or less the story of metals here on Friday. Both gold and silver were trading higher. They have since come back in. Gold is now down by 0.10%. Silver is up by 0.52. It's a fairly feeble bounce, but perhaps it constitutes something of a meaningful turn now in the market. Insofar as yesterday, or rather on Wednesday, we did reach about 3% away from our more than 3% away from our 1 month moving average, which in previous run-ups, that has been more or less a stopping point for the market to come back in. We've actually seen that a number of times in the past 6 months. We saw it here back in mid-April, which happened to coincide with the reduction in Israel-Iran stresses, which we just have this week, more or less, a sign that maybe those stresses are disappearing, depending upon if you believe the news flow today or not. But you have another one of those here back on the 20th of May, more than 3% away. We see here back in July, more than 3% away. We have here on September 26th, more than 3% away from our 1 month moving average, which brings us to the 30th of October, where we find ourselves more than 3% away from our 1 month moving average. So this decline and this being overbought is consistent with the market that's been overbought with this level of performance since the summer. Now, that said, in terms of short-term momentum breaking, what we had going for us was October 11th onwards, we hadn't seen a close below the 1 week moving average. Yesterday, we did. Today, we're struggling to sustain ourselves above that, and in fact, we're falling below it. So if you're a gold bull, I would think that this is a good environment if you're trying to stay long in this market for an extended period of time. Duration is going to be your friend. And that's why I've since rolled out on Wednesday. We're out of the GCZ4, we're in GCG5. There's no reason to take risk getting close to expiry when the market runs right into your initial long strike. Mission accomplished. If you believe in the trend, roll it out. So that's what we're doing here. I find this price action to be really uninspiring, but not entirely unexpected, because if you thought that gold and silver were being used as geopolitical hedges back in April, well, we just saw that the potential for significant escalation here henceforth was perhaps reduced last weekend. Why did the reaction happen Wednesday, Thursday, Friday this week? That's a great question. It does poke hole in my theory here a little bit. So I'm not saying that this is the correct answer, and I don't even know if I'm convinced of it myself. But silver's move is the alarming part for me, as not just a silver bull, but as someone who's looking at the market structurally. We did have a potential sideways range, inverse head and shoulders pattern. Either way, the resistance, once you break it, you're not supposed to get back below it. And that's what we did yesterday, and we're finding follow through today. So Ilya, what's the move on silver? Market where now volatility is disappearing, something consistent with further price declines.
If you are long, I don't think you're necessarily defeated here, because if you look at where we've stopped, not only are you on top of where the trend line implies is the trajectory for higher highs and higher lows, but also you're sitting on top of significant former resistance turned support. Right around that 32 mark, you see those two hammer candles or shooting star candles form what starts to look like maybe even a head and shoulders, and is then invalidated with that push higher. So if you look at where you are structurally here, I don't think what you're necessarily looking at is a confirmed reversal lower. Let's say if you were to get under 32.48, something like this, okay, yeah, then you're looking at something that is starting to look the wrong way. But this to me is still in the realm of the corrective rather than a reversal. Having said that, you're right on the line. you have to hold it here. Now, if you don't already have exposure, would you want to buy this here? And the answer is an emphatic one for me. Absolutely not. Because you have absolutely no confirmation that it's going to hold here. Because you clearly just had a breakout higher. It clearly respected those prior levels that it has now taken back on the downside, because it very pointedly stopped there and hung out for a while before breaking down today. So it sees that there's a level. It sees that what this was today was a breakout that's failed. That's very clear in the way that the candle structure is telling you, look, there's a breakout. We're holding the breakout. We're holding the breakout. We're not holding the breakout. And we're retesting. Look at the wick on the very current 4-hour candle or 6-hour candle here. We're testing directly at the point that would confirm, yes, we know it's a failed breakout. So the price structure here, it's not confirmed that you're going to get a further breakdown, but it's definitely not a low probability sort of thing.
No, from the candlestick charting analysis perspective, right, this is as ugly as it gets. As if you're a bear in silver right now, this is more or less picture perfect. All week
You're
long,
just sitting there with your finger on the trigger now going, just get under that line. Just get under the line.
This whole week, we've been talking about the range that formed above 33.25 in SIZ4, and the condition was if you're long and you're playing the breakout, stay long unless you're below 33.25. Today, we see a move back to a high of exactly 33.25 here in SIZ4. I have up the 6-hour time frame, which I don't really look at, but just to emphasize, as we look to that former swing level right around 33.25, that's a bearish engulfing bar or outside reversal candle that you're seeing here in SIZ4 on the 6-hour chart. So clearly up into resistance, getting reversed lower with that big turnaround candle. It doesn't exactly speak well for the near-term path. If we do think that there's some support nearby, they're the highs that you have carved out in July and then here through the turn of late September into early October, maybe around 32.5, there's some support coming into play. This would be it. But something a little bit more is needed on a 4-hour, 6-hour, even an hourly basis, because that is a daunting candle and leads you into a weekend where maybe the saber rattling out of Israel and Iran right now, maybe it's just that. Maybe it's like the saber rattling that we heard after April 19th. Which ultimately never went anywhere because that was the end of that particular episode of tensions until, well, October 1st. We can see clearly, I suppose, that geopolitics is an influence here. I'm running out of things to say about oil and geopolitics, so I suppose the et cetera will have to be a good fill-in on this Friday. We talk about oil in this market right now. It had a big reversal higher today. It was up over 1%. The high for the session was in at 71.45. We are almost $2 lower than where we were this morning. Interestingly enough, when oil rallies today, Ilya, it rallies right back into that clear zone where we have support throughout June, July, August, and then it flips over and has been a magnet more or less for the past several months. What do you make of this market now? 54.7 IVR. We've tried to break recent uptrends. We have the geopolitics raging in the background or not, depending upon if volatility is telling you the truth. Either way, though, what do you make of oil here?
I mean, I think if you look at the bigger picture, 72 is still the axis, and you're holding it. So if you had to make heads or tails on this, I think you'd say, well, if I have short exposure, I'm not abandoning it. Because what this looks like is a very choppy series of lower highs and lower lows. We've traded through the recent sort of upward sloping support, suggesting that's the side that has the momentum. You're not setting higher highs. You're holding that axis at 72 on a test. Lower. And that's the way I'm positioned here. Would I initiate something new here? Maybe not. I have my opening for the put vertical a little bit higher than this, which sort of improves the risk reward structure. Would I do this also with essentially a day and a half between now and election in terms of market time? Probably not. A lot of this this posturing from Iran is it's very interesting on the eve of an election, because it almost certainly galvanizes a level of thinking from at least some voters going, well, which one of these candidates do I want to deal with this? Not necessarily this episode, but this issue. And that's one of the wedge issues in this election. So this will be very interesting indeed. And whether Iran is going to, in retrospect, think it wise that it wanted to scream loudly now as opposed to after the election and inject itself into the headlines now. We'll see. We'll see how this goes. They may regret this timing.
Ilya, natural gas is hitting a new low here, 50.8 IVR, which to me is not really worth even looking at on this chart. Natural gas is swimming in oversupply here in this country. We can't get rid of it fast enough. We're pulling so much of it out of the ground. There is so much supply that even the demand story of AI is not subsuming the other side of the equation.
Well, we just saw Exxon, right?
We had Exxon today. We had CVX.
Energy in this country is a bottomless well at this point.
America, there's a really funny meme that goes around online every now and again, but it's like there's a new technology that requires this commodity that only some autocratic totalitarian leader overseas has the supply of. And so, America's not going to be able to make its way into the 21st century until some farmer in Bumble, whatever, Arkansas stumbles upon the largest known supply of lithium in world history. And okay, problem solved. That's basically what we have here in the U.S. with energy. We have so much energy. Yeah. We're so independent. People really don't. I feel like a lot of our problems politically in the last several years are because we're bored as a country. I mean, like on a national sovereign level, sovereignty-wise, the best thing for us is to have a geopolitical foe like China. Russia was defeated. Cold War ends.
We need stuff to do is what you're saying.
We need stuff to do. We turned internally. We started looking at each other instead of people abroad. And natural gas is one of those stories where we are just consumed. We have so much of it. This is such a success story. Data center growth in the U.S. is up over 100% year over year. There have been a few companies this week on their earnings calls that have said that there is so much demand for the natural gas that they're producing just from data centers alone that the contracts that they have for the next 5 years have zero LNG going to any utilities in the country. It's all going to serve data centers. So the fact that we have this much demand for natural gas in this country and NG is still plummeting with the 50.1.4 IVR with no clear support in sight, I don't see any trade right now. And the 100% extension calls for move down to $2.43. So if I'm trading this, I'm trading it like momentum. Otherwise, I am not trading at all. And I'm certainly not putting on a natural gas honey badger trade on a Friday, the weekend before the election and daylight saving time, which is also Sunday. There's your friendly reminder. If you get nothing else from Futures Power Hour today, folks,
that's right.
Remember to set your clocks back on Friday. Ilya, this is our bull shared wheelhouse. We made our bread coming up in the world together in the world of currency. Yes. And so I know you and I enjoy perhaps sitting on this topic a little bit longer than maybe Sosnoff or Batista may like. But we'll delve in. We have 8 minutes here to run down the clock with the dollar index putting in a bullish outside engulfing bar key reversal kind of day. Not exactly, because it's not at the low. But it is a beautiful turnaround here for the dollar index led by what's going on in the yen. The yen's here seeing just a continued mess politically at home, higher yields, higher oil prices, not exactly bueno. The euro, furthermore to that point, also pulling back in, also giving us an engulfing bar, reversal candle against its 1 month moving average. Mm-hmm. So in terms of a rebound, the fact that you have a key reversal against the 1 month moving average, that's kind of like a what more do you want to see? The only outlier, though, is the British pound. Yeah. Pound that's been fading over the course of the day, and I would point out here now on the daily chart, below the 1 week moving average, and below the uptrend from the Liz Truss lettuce lows in October 23, the April 24 swing
the
lows,
lettuce lows,
the August 24 swing lows, and then the initial October swing lows here. So this is a really big trend for the pound. And so as the dollar is rebounding substantially, the euro looks like it's topping out. You have the pound failing to get back above that level. Is this pound outperformance today? Is this an outlier? Should we be looking at the 73.1 IVR here and saying sell call spreads against the recent swing high?
I mean, that's not how I'm expressing my short, but I am short. This is the place where I've started to lay back on long dollar exposure. As we've talked about, I'd been long dollar for weeks, and then I started to take it off a little bit last week and the rest this week because the euro stalled, the Aussie stalled, the pound stalled, and I'd been short for over a month. So I figured, you know what? Time to get nervous. Time to protect your winnings. Get out of there. Momentum is stalled. In the Aussie, in the euro, the story is still stalling for the most part. The euro made the most impressive attempt to rally, and today's candle overturns it. We're back to square one. We're back to oscillating. The pound made a big breakdown yesterday. Outside of any particular news flow that would have been impactful enough, outside of confirmation in other expressions, if you will, of the dollar. So it's not surprising that it's outperforming today. It had a Leroy Jenkins kind of day yesterday. It's digesting it. But to your point, we are not overturning this breakdown. We tried. We tried to come and retest it, and we're getting slapped back down, which tells you the market absolutely understands that it's crossed a threshold, and it's telling you, where I'm sitting now, I meant to do all that. I meant to clear it. I know what I did, and I meant to do exactly that, which to me is bearish.
Yes.
To me, it's bearish. So I've put this back on. I'm just short outright the M6B futures here. And we'll see. But I'm pretty happy with having long dollar exposure going into the election next week, actually. I've been thinking about which way am I going to put that back on, because, again, in my mind, I think you end up with a much more contested outcome than maybe people think. I do not think that we're lining up for a decisive Donald Trump win. I actually think that Vice President Harris is likely to outperform significantly, just based on my kind of philosophical theorizing about trading psychology and things like
Portola wine vibes, as Radigan would say.
Speculative sentiment index things. Right. So when I look at this and I go, well, the way that trading psychology typically works, this is a trade that people have had on since 2016, one way or another. They're either for this or they're not. The thing that they're buying or selling hasn't changed. It's the same offer every election. They bought it in 2016. They turned over the position. They've held it through 2020, 2022. They're not going to turn it over. That's my theorizing on the way retail decision-making works, based on observing retail traders for the past 20 years. You and I have been doing it together. You know exactly what I'm talking about. So when I look at that and I say, okay, more uncertainty, because Trump is going to contest any outcome in which he is anything but overwhelmingly certain to have won. Okay, that's higher yields. That's a stronger dollar. That's weaker stocks. And so haven demand for dollars on top of the higher yields. Okay, I can see that. That makes sense.
It makes sense I know for some people it doesn't make sense. Look, the United States is a special spot. If this was the euro or the pound, why was the pound pressured yesterday when the yields were going up? I thought yield differential is supposed to help currencies. Well, it was a fiscal problem. Maybe it has to do with the budget. The market doesn't really like currencies when the yields are going up for unsustainable reasons. Yeah. So let's talk about Monday's calendar. No, that's the whole calendar. It's only 2 events, right? There is an auction. It's the 3-year note auction Monday. That's not the big one. The 10-year note auction Tuesday, of course, more important than the 30-year bond auction on Wednesday. If it's the market looking for a read-through on the election itself or a precursor to the Fed, these bond auctions are probably going to be some of the more influential things that we see early next week. So keep an eye. But Monday's calendar is not the day. We're still in the Fed's communication blackout window. So I guess hug your kids, hug your wife, hug your husband, whatever you got up there. If you have no one, then pat yourself on the back before Tuesday arrives. What's next before the markets close here today? Well, we're going to do a brief education here, as we typically do at the end of every one of these shows. Bit my tongue. That's tough. Go to tastylive.com, top banner, learn beginner futures. To click on the link here at the bottom of this slide, it will take you there directly. Either way, though, there are 6 sectors commonly identified in the futures market. We don't really cover ag, although we have Westwater on Wednesdays, and when there are WASD reports out, we usually chime in there. Otherwise, energy, equity index, metals, interest rates, foreign exchange round out the other 5 of those 6. We pay most attention to ES and NQ. ES is the most liquid futures contract out there. Of course, you can look to bonds, gold, oil. One of the reasons that I like trading all these because you can play these macro events through very specific lenses, and the markets are open nearly 24 hours a day. Head over to tastylive.com, top banner, learn beginner futures to learn more, or click the link at the bottom of that slide. It takes you there directly. Ilya, we are done for today. A quick programming note. Monday's Futures Power Hour, only 30 minutes. We're doing some special testing because on Tuesday, it's the election on special, Tuesday night, 6 Central to 8 Central. I'll be there. Victor will be there. Tom, Tony. We have some special guests from Predict It and from Kalshi to join us. We're going to be playing some games. We're going to have a lot of fun, so be sure to tune in. That's Tuesday night, November 5th, the election unspecial. Go to tastylive.com and just look at the banner. Some great imagery of Tom and Tony up there. But Ilya, we're done. It's time for the weekend, so we're going to get out. We're going to make room now for Dr. Jim with From Theory to Practice. He's going to take us until Jamal. I guess it's going to be a good Friday here, and we'll see everyone later for last call.
Have a good weekend, folks.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the NFP edition of what it is that we are trying to do. Man, I still can't believe that this is real life. This is actually happening, and we made it through the most important NFP print of our lifetimes. I still don't even know what the number was, but the market apparently loves the number. You've got the risk-free instrument doing what risk-free instruments do. You've got the E-mini S&Ps looking pretty good, and you've got even the boomers looking pretty strong today. So welcome to the show. I'm very, very glad that you are here. So a little bit of housekeeping before we get into the nitty-gritty and the bitness of today's program. So number one, today is an extra long show, so we're going all the way to 3:15 Eastern or 2:15 Central. However, it's been said, for every gimme, there's a gotcha. So Monday, there will be no From Theory to Practice because the crew needs to get ready for the Tuesday night election unspecial. And so your boy got chopped on the bottom of the totem pole. No From Theory to Practice on Monday. You guys are going to get to enjoy all the amazing programs that we have on the network in addition to mine, but there will be no From Theory to Practice on Monday. We'll be back like normal on Tuesday so we can get all of our election trades on the program then. So we've got extra long show today. No show on Monday. And then number three, I am a little bit behind on emails. And by a little bit, I mean kind of a lot of it. So if I have not gotten back to you, I'm going to get all cleaned up this weekend. I'll get back to inbox 0 and we will be set and ready to go. By inbox 0, I mean inbox 2,500 unread messages. So those are the housekeeping things I wanted to make sure that we got to before we get into the program. But man, we have so many things to do. The expected move butterfly streak lives on. So let's go ahead. Let's pop in here. Let's see what's going on. And by the way, if you have a question for me, drop it in the chat box. The earlier that you get it in, the greater the delta that I will get to said questions. All right, so let's go ahead and let's see here. If we look at, so first of all, let's do a little market commentary. I mean, again, we've got an extra long show today. We've got super wide lanes, a Lane Bennett style. Like this is going to be, if you guys have ever seen it From Theory to Practice, extra long version, it's something to be observed. I'm not sure if it's good or bad, but it's its own animal for sure. So even the S&P is up 28.75 on there. Somebody let me know, by the way. What was the NFP print? I genuinely do not know. I legitimately do not know what the NFP print was. I'm assuming that it was probably in line with consensus. That would be my guess. Like I'm assuming it was not too hot or too cold. It's just going to be business as usual. And, now the Fed can cut, maybe another 50, maybe 75, maybe a full point, next week when they meet after the election, which, guys, by the way, that's crazy. Have you guys looked at the calendar? So next Tuesday, this is the most important election of our lifetimes. This is it. The most important election of our lifetimes. If my boy wins, then we're going to be good. But, man, if my girl wins, man, we are going to be even better. And so Tuesday night, the most important election of our lifetimes. But then after that, Thursday, which is weird. Doesn't FOMC normally report on Wednesday? I think it's Thursday. FOMC meeting 2 days after the election. So crazy week coming up. There's going to be lots of volatility in the market. I mean, the VIX right now is already over 20, over 21, even after getting slapped around a little bit today. And so, man, it's going to be something the next couple of weeks. But you got even the S&P's up 28 on the day. You've got the risk-free asset up 145, also known as the NASDAQ futures, extraordinarily high-risk product, up a boatload here today. You've got the boomers up 286, doing pretty good. And then you've got the Russell 2000 futures index only up 7. You got bonds down a point. That's where all the smart money trades. That's where all the sophisticated funds trade. That's where, that's where your Ilya Spivak's trade. That's where your Dylan Radigan's trade. That's where your Chris Vecchio's trade. Hey, shout out to the Overtime crew where, all the sophistication of Tasty is concentrated in one show. And so you've got ZB down a point. You've got notes even down a little bit. Got oil up 50 cents, whatever that means. And then you've got, got gold down 4. What's silver doing? Man, is silver doing okay? think silver's getting smacked around a little bit today as well. So silver, let's see here. Going to SI. Whew, yeah, down to 32.52 and a half. Oh, excuse me. That is not good, man. That is not how they drew it up. That is not how your Stanley Druckenmillers and your Paul Tudor Joneses and your internet all-star traders. This is not how they drew it up. All the long precious metal bros and bro sets, man, they're kind of, gold, I guess, is hanging in there after the shellacking yesterday. But silver got hammered yesterday, and it's getting hammered again today, down another 27 cents. So if I go to a chart of silver, yeah, tried to get on its horse earlier this morning, but it just couldn't do it. I mean, it was up to 33 and a quarter. So I mean, that would have been nice had they been able to hang on to that, but it just was not to be. And so here we are, silver at 32 and a half. And so I don't know, man. I mean, it seems like the conventional play going into the election is, maybe volatility in the markets, maybe a lot of equity uncertainty. So maybe you're selling some stocks, maybe you're getting rid of those high risk assets, and instead you're moving into some precious metals. Maybe you're moving into some gold, maybe you're moving into some silver, maybe you're moving into some platinum, or however you want to get your precious metal exposure. I'm not even sure if platinum is considered a precious metal. Platinum's like the bougiest of precious metals, right? Like if you got your gold, you got your silver, and then platinum's like way up here. I think it's in its own category, actually. But however you want to get some precious metal exposure, it's gonna be pretty interesting to see what happens. All right, so silver getting hammered today too, along with gold. Let's go in here though, because man, I do want to get to, man, look at you guys. I see you guys. I see you guys too. Actually, I see Theta traders in the house, man. Michael Flores in the house. Man, let's see. Miko's in the house. Anka's in the house. David Galmore's in the house. Paul's in the house. Kimberly's in the house. Man, you guys are amazing. So let's go ahead and let's see here. What if, man, lots to do today. First and foremost, I mean, like we should start any good show, which, by the way, if you're watching on the Tasty Live network, I would actually migrate over to YouTube. I would actually bounce on over to YouTube if it's real time. If it is Friday, right around 2 o'clock Eastern or just after 2 o'clock Eastern, 1 o'clock Central, you'll be able to join the conversation live. Like, you'll be able to hop into the chat and communicate with your brethren that are also watching the show. And it's a good time had by almost half the crowd. And so I would go ahead and do that forthwith. But let's go ahead. We've got to do Apple, obviously. We've got to talk about Amazon. And then after that, I don't know that there's too many things in the current portfolio that's going to require our current attention, but we might get a little, I mean, with the volatility, volatility still, even though it's getting hit today, of course, although the market's selling off a little bit now. Now you've got the NASDAQ, NASDAQ only up 120. I mean, it was up 170 or 160 or 150 to start the show. So we just gave up, 20, 30 handles. And then it was over 200 at some point earlier today. Not too long ago, I don't think, maybe an hour ago or so. I mean, we were, 20,250 or thereabouts. And so volatility being down today makes a lot of sense, being down 50 cents with volatility futures. And then you've got the VIX, of course, your spot volatility instrument. That's only down 70 cents now. So yeah, this thing was down. Yeah, that's interesting. So the VIX was down significantly more earlier. So you can see, we zoomed in a little too aggressively there. You can see that, I mean, the VIX was all the way down to 2116 earlier, and now it is rallying. It has gotten on its horse, and it is now all the way back to 2240. And so going into the election, you've got, volatility 2223 as measured by the VIX. And so we'll have to wait and see. I mean, if there's some, crazy stuff that happens Tuesday night, and especially if like the election results are like, if they're postponed for any reason, like if they're postponed, if they're challenged, if they're this, if they're that, then it's going to be, I have a feeling that's not necessarily going to be well received by the market from a volatility standpoint. I would imagine that means risk off. I would imagine that means, people getting out of equities. But, I've been surprised before. And I could indeed be surprised again. And so, because the market likes certainty, the market can rally on the right and the left, and it certainly has. And so the market doesn't, I don't know that the market really cares about, who might be in office per se. Now, of course, if you're staunchly on one side or the other, you probably feel very good about your side and maybe not so good about the other side. But I think historically, the data suggests that, I think it's pretty even. Now, I'm just kind of pulling this out of the air. This is just based on what I've observed as just being a citizen of this world. I don't have hard stats. I don't have data. I don't have a bibliography that I can present to you here today for those thoughts and feelings. So But anyway, we'll have to wait and see. I have a feeling VIX 27.28 would not surprise me. It would not surprise me at all next week. And so we'll have to wait and see what happens to the equities, what happens to, your precious metals and those kinds of things. All right, let's go into Apple though. Man, it's the expected move butterfly. It is the gift that just keeps on giving. Like, it is the gift that just keeps on producing. Like, I feel like we should just not do anything other than these and crabs. That's it. Like, I've done 2 crabs now, and like the first crab in McDonald's was like an easy winner, and now I've got this crab working in Google, which we'll talk about here in a couple of minutes. But it's doing pretty well. Although there are no mark prices. Huh? That's interesting. Well, I think Anton's off today, so that kind of makes sense. But if we open that up, wait a second, what's up with my Google? Yeah, that's weird. Okay, let me go ahead and let's see. Let's erase that. Oop, there you go. Let's erase that. Yeah, if I go into Google, this very much has a mark price. Like, if I were to go into, by the way, if you ever see, so sometimes when you have options that are set to expire, the mark prices will disappear. If they're like really far out of the money, they're not worth anything, then the mark prices are a legitimate nothing. Like, it's a legitimate, bout of nothingness from a mark price standpoint. But here, this is very much a whole lot of somethingness. Like, this is very much something that's still working. It's not set to expire. I would expect it to have some kind of value. So if you ever see something that looks a little bit odd, just open up the actual legs of the position and then just go in. Like, if I were to close this, just highlight both options, right click, close the position. Boom, there's your mark price right there. 388. So there you go. So you can kind of backslide your way into what the mark price, is or, should be there on the positions tab. And so that gives us some kind of feeling. I know we've paid about, maybe $4 for this, maybe a little bit less now, actually. Hang on. This is, what have we paid for this? Because I know that we did the crab originally for like $5 maybe. And then we just sold premium against the long put. Since I'm on this now, I'll stay on this and we'll keep talking about this. I was gonna, and this might even allow me to make a little bit more money in Apple, as the market continues to fall. Nasdaq cannot catch a bid here the last couple of minutes, and you've got Apple now down 372. So I'm looking at that right over here in the corner. Apple down 370, and so man, that's not good. Amazon did pretty well though. Amazon doing pretty well for itself. And so, Amazon up, Apple down, market, kind of going back and forth. It's up right now, but I have a feeling that the next hour and a half, hour 45, could be a little crazy and just a little bit chaotic. But if I go into Google here, let's bring up our chains and let's see here. Yeah, okay. So here you go. So the chains are correct, I believe. So here we've got, here you go. Perfect. This is the original crab. All right, so there's the original crab trade on 10/29. We did that, so that would be just a couple days ago. And happy month anniversary to you guys, by the way. Man, I can't even believe I didn't lead the show off with that. That's crazy. Like, that clearly shows you I'm way off my game. Maybe I do need Monday off just so I can regroup and maybe hopefully come back better and stronger and just kind of ready to go. And so happy month anniversary to you guys. But anyway, 10/29, we did this trade on 486. Or 486, I should say. We bought back the short puts that were essentially worthless on Halloween, so that was just yesterday. And so then we just had our naked long put on, and I was like, hey, let's get some premium coming in against this. Like, let's kind of diagonalize this position. That makes a lot of sense to me from an adjustment protocol standpoint. For the different things you could do with this position, I'm not even going to pretend that it's the only thing that you could do. I'm not even going to pretend that it's the best thing that you could do, but it made sense to me in the moment. And so we went with this. So on 10/31, after buying back those short puts, we went ahead and sold out another put for $1.26. So now we have on, if you add up these numbers, let me grab my diet strawberry here. If you add up these numbers right here, so actually not all those numbers. Hold on a second. Let me grab my teal. If you add up this number and this number and this number, those three numbers, they should amount to that number right there. That's what I'm guessing. Right now, I'm no Jacob Perlman. I'm no Julia Spina, but I'm going to trust the chains here and have the chains ever let you down. Like, when you really, really, really got a hankering to get after it and it's leg day, has Rooster ever let you down? Of course not. That's a rhetorical question. We know the answer to that. Has Wood ever let you down? Of course not. We know that. That's a rhetorical question. And so I'm going to assume that the 369 is my basis on the trade. So when I look at the credit that I could collect for taking this position off, I'm up a couple pennies. I'm up a couple shekels here. And so I'm going to leave it on for now, just so for no other reason, we can at least kind of see how this thing works. Because the McDonald's thing, man, like it was in and out. Like it was real quick. It's almost like it never even happened. I'm like, well, wait a minute. I kind of want to learn a little bit more about these crab strategies as we move forward. And so I'm interested. I'm intrigued. I am eager to learn. And so Google, we're not going to do anything. And those are the 3.5 reasons why. So now let's go back to Apple. Is Apple still going down? Yeah, down 366 now. I actually think it went up a little bit from the last time I looked at it, but let's go ahead. And we just close it. Obviously, there's nothing to do. There's nothing to talk about. Amazon's going to be a little bit of a different story because that's a longer term trade. Maybe we take it off. Maybe we leave it on, right? You got to watch the next 8 minutes of the show to find out. Plus, your boy needs that watch time. And so Apple here, there's no time left. You've got expiration today. We ended up making about $2.50 on the trade. So it's a pretty solid trade. For an expected move butterfly, of course, we want to hit home runs. Of course, we want to hit, triples in the triangle. We want to do all those things. But sometimes, you can only get, just a quick little 100% return on your money. Like sometimes all you can do is a double. Right? Sometimes that's all you can do. I know that your Tom Sosnoffs and your Tony Bobistas are hitting the triples and the Grand Slam home runs, Freddie Freeman style. But for us mere plebes and peasants, we have to pleasantly just accept our doubles from time to time. That worked a little bit, I think. So let's go ahead and let's close this guy down. And then we'll be done with Apple. Nice little trade. We're in a little bit of a hot streak here with these expecting move butterflies. So I think winter's coming fast. I think this polar vortex, it's right around the corner. Shout out to all my Chicago peeps, because I know y'all are expecting some flurries at a minimum later on today. So let's go ahead and let's see. If I do 535, let's see if we can get filled here really quick. No takers at 535. I got my summer berry. By the way, I got my summer berry Waterloo, right? Water from the loo, which of course I learned from y'all, so thank you. And it's not that great. It's honestly, we got filled while we were yammering on about this. It's not that amazing, but it's a little bit better than just like a straight water. Like you just got the straight H2O here, and at least it gives you a little something, just a little kind of kick in the pants for something a little bit different. So that is Apple. We're over and done with. Let's now talk about Amazon. Ooh, NASDAQ only up 100 now. Yikes. So Amazon, this was a strangle that we put on for earnings, and we decided to not necessarily, try to make the hero move, not necessarily try to really, do something in the front week and take a directional stance and just kind of, maybe, hit an expected move butterfly, even a crab trade, whatever. Just kind of kept it a little bit more buttoned up, kept it a little bit more, kind of tried and true. And so we just sold the strangle in the December cycle here. We still have 49 days to go. Now, there's going to be some differences of opinion here in terms of what to do. And this really comes down to, what your own personal philosophy is when it comes to managing winners. And if you've seen the show for any length of time, I'm going back, we haven't talked about this. It's been at least a couple of weeks. So, if you've followed the show for a long time, or even just the last few months, hey, thank you so much. I appreciate you. It is only because of you guys that I can do what I do and we can all do what we do. So thank you guys so much for all the support. It's really, man, it means the absolute world to me. I'm so humbled that so many people watch all the different shows that we have here on the network. It's really, truly amazing. If you have followed the show for any length of time, you kind of know where I stand on this. A lot of traders will look at this situation, and the Tasty research backs this up, no doubt. They'll look at this situation, they'll say, hey, wait a second, I'm up over $1 on the trade. It was a good trade, right? It's still inside my strikes. Everything is working. The volatility collapsed, the volatility crushed, blah, 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 blah. But I'm up over $1. I'm going to take it off. I'm going to move on. I'm going to take it off, and I'm going to ring the register, and I'm going to redeploy that capital somewhere else. I think that's fine. I think that's a great strategy. I think that's a great strategy because A, it's a great strategy, and also B, I believe that's Tom's strategy, so I'm contractually obligated to say that. So it's a great strategy. On the other hand, I like to be a little bit more patient sometimes with, the trades that are working early on. I'm not necessarily, looking to jump at the chance to take it off. I'm like, hey, we've got a nice little Kickstarter moving closer to our 50% of max profit target. And I'm like, hey, let's just let this thing keep working. Let's just let this thing keep cooking, especially when with my own personal bias in the market over the course of the next couple of weeks, I think it could be a little rocky. I think the terrain could kind of have some barbed wire on it, maybe some booby traps and some obstacles. And so if it does, like we have a lot of room to the downside in Amazon. Like, you can see the stock has rallied up to 198. We have our 210 call strike. And so we don't have a ton of room left on the upside. We've got a little bit of room. Like, it's not like we're snuggled up right on top of that strike. So there's a little bit of buffer. But, man, we can go all the way down to 165 on the put. And so I like the fact that we're kind of, we have a downside skew. We have a little downside bias kind of baked into the cake here. So I'm going to sit tight, and I am going to not do anything with Amazon. So we sit tight. We let it cook. We just kind of see what happens. And then you've got AMD. This is a similar situation to Amazon from the standpoint of sitting tight. We're not profitable on the trade, so it's an easier decision to sit tight. But, some people say, well, Jim, why don't you take the 200 call and either A, buy it back, or B, roll it down? And both of those are good options. They're very good options. Let me answer the second one first. When it comes to, my strangles, again, this kind of just goes with my personal view of the marketplace. And that's why I love what we do here at Tasty. Like, I love what we do. We've got the research, we've got the data, and we've got the same 4, 5, 6 universal principles that we all agree on. Like, for example, selling high volatility over low volatility. We all agree that that's a better situation, right? Selling premium to begin with rather than buying premium. We all agree that that's, a great situation and kind of the foundation of your portfolio. And a few other things, of course, focusing on theta as opposed to, delta, focusing on, time over direction. But how we actually implement that, how you actually see us execute that, it's going to differ. It's going to be a little bit different. And so that's what I love about what we do, honestly, that, we're all kind of able to do that and express our opinions in terms of how we want to do specific things. And then you guys can kind of choose what makes the most sense for you, your risk appetite, your experience level, your account size, your personal relationship with Tom, Tony, etc. And so take all those things into account. But for AMD, I'm not going to roll the call down because from my perspective, as long as the options are out of the money, the trade is working. It does not require any babysitting from me. It does not require any active adjustments from me. It's already working. I don't like to get in there and mess with the situation because it's just happened to me too many times in the past where I was aggressive with rolling untested sides when the other side hadn't even been tested yet, but I'm balancing out deltas, like I'm trying to neutralize my directional exposure, and then I just get whipsawed. Like I just get whipsawed on the other side, and I'm like, man, if I had just done nothing, I'd be in a great spot. Now, that could very well just be a skills gap. That could very, very well just be an inability of my skill level to actually handle those situations. In fact, that's most likely what it is. So again, you've just got to know what what are you equipped with? Like, what are you ready to do? Like, where is your skill level? And so for me, it's more hands off. It's more laissez-faire. It fits better with my own personal feelings about the market. And I just, I like not doing anything. Now, you could make the case, well, Jim, why don't you just go ahead and buy back that call? I could do that. But right now, there's still 37 cents in that call. And so now, of course, it's 37 cents. Like, we talking about practice. Like, I got it. But still, it's not 10 cents. It's not 7 cents. It's not 3 cents. Like, you start getting to those levels, it's like, okay, you got to do something. Right? But at 37 cents, I'm like, man, let's let some more time tick away. If this thing drops to 15, 12, 8 cents, whatever, then we'll kind of revisit it at that time. But AMD, I'm not going to do anything. And those are the reasons why. And then, we got the diamonds, iron condor, nothing to do here. This is very much a sit and just kind of chill. And then you've got TLT. I mean, we're back to normal, guys. TLT down $1. Like, this is it. Like, yesterday it felt so odd. TLT being up. I'm like, we're green on TLT? There's no way. But now TLT is down, so our naked long call is getting hammered. But again, remember, if you're just picking up the show for the first time, welcome aboard. I hope you stick around, and can continue to check out this show and all the other great shows we have on the network. But the reason why I have this on is this was a poor man's covered call from yesteryear that I bought back the short call when it wasn't worth anything anymore. And then I wanted to trade this in a manner, in a way that's going to be similar to how many of you out there are trading your covered calls on like passive stock that you intend to hold kind of forever, where, the stock drops and the call dries up, you buy back the call, but you don't really want to sell premium because you're like, hey, I don't really like where the stock is right now. For me to get any kind of decent premium, I've got to bring this thing too close to my basis or too close to the stock price, and I don't want to give up my upside. I don't want to give up my upside potential, and I'm okay if it takes me a quarter, couple quarters, couple years to realize that upside potential. I am trading this in a manner similar to that. Now, of course, there are some differences and limitations. This is not static stock. It does have an expiration date, which is actually fast approaching. It's 49 days away now. I remember when this thing had like 60 or 65, and it just kind of melted away. And so we're going to trade it in that manner, though. And then just kind of go from there. So, all right. So that's TLT. Man, we did everything. MES, the strangle, but there's nothing really to talk about there. You've got the stock. Up $28 today, 28 points, I should say. And you've got, it's nicely centered between the strikes, 5,400, 5,970. I mean, it's just, there's nothing to do there. I mean, if I'm not going to do anything with AMD, that's kind of close to the put strike, and I'm not going to do anything with Amazon, that's kind of close to the call strike. Like, you can bet your bottom biscuit I'm not going to do anything with MES. I mean, this thing is 200 points away from the call strike on the upside, and 270 points away from the downside. And so we'll wait and see what happens, next week, of course. But that's kind of a sit and do nothing. All right, so what I want to do though, we've got, next week, Tuesday, obviously going to be crazy. I'm excited to trade the election. It's always fun, in my opinion. Last year was crazy, or not last year, but last election was crazy. Like, I don't know what Tom and Tony are talking about. And again, if you don't know either, you're going to get to tune in Tuesday night and hear more of things that may not make any sense to you. But last election, they're like, nothing happened. It was quiet as a mouse. Quiet as a mouse. I'm like, are you crazy? Like, the NASDAQ was moving 40, 80 points. Like, when different, results came in, and this came in, and, this district reported, and, that precinct did whatever. It's like, man, this thing was moving, 30, 50 points a clip. It's like, yeah, maybe in the end it didn't do anything, at least that night. Because I remember, man, hold on a second. Hold on. We got extra time today. Now I'm going to say this before I look it up. Maybe I'm wrong. Maybe my blueberry game is off. Now I'm eating, the hormone pumped, the GMO blueberries. Maybe I need to get those wild caught blueberries. Maybe that's the problem. Because the blueberry game's been pretty strong. So I think the memory's on point. But I'm pretty sure that the next morning, the morning after, because we went to bed election night and nobody knew. It looked like when we went to bed, it looked like Trump was in the lead. Then we woke up and then Biden kind of won, but we still didn't really know. They still had to figure out what's going on in Arizona, what's going on in Georgia. There was still a lot of uncertainty in the market. And so I actually looked at that first. I remember waking up. I was up super late, kind of watching the results come in, whatever. And then I got up pretty late the next morning. I think the market was already open. Maybe it was 10 o'clock or something, because, I was up to 5 or 4, something crazy. So I got up 10, and I'm like, you know what? Before I even look at the market, I kind of want to see where's the election now? Where are the results? Because we were kind of waiting on what was going to happen. So I saw the results, and all I could basically see was uncertainty. I'm like, we don't know. It looks like, it flipped from Trump to Biden now, but we still don't really know. There's really no certainty. So I'm like, the market's going to be getting crushed. And it has nothing to do with Biden or Trump or whatever. It has to do with the uncertainty. I'm like, the fact that we don't know, I'm like, there's no way that the market is going to be up. There's no way. If I'm not mistaken, the market was up a ton. If I'm not mistaken, the market was just screaming green. And so let's go in here. Hold on a second. Let me go into let's go into SPY. Let me go to a daily. Let me do a 5-year daily. Can we go all the way back? Yeah, let's go all the way back. Quiet as a mouse. No chance. But where is 2020? Let me think here. I don't know. We should be able to figure it out. Which day was the election? There's 2021. Okay, so it's right. Oh, there it is. Here it is. It's coming up. Look at this. Okay, November 4th. Was it November? Oh, so now I don't know. I got to know. I guess I got to know which day it was specifically. But it doesn't even matter. Actually, no, it doesn't even matter. Look at this. Are you guys crazy? Are you guys crazy right now? Quiet as a mouse. No, man. Not only was the intraday or intranight action crazy and whippy and just totally bananas, but then there was a huge rally the following morning. You see it right there in the tape. I don't know which day it was. It was November 4th, 5th, 6th, whatever it was. And so, yeah. So if you want to hear a bunch of untruths on the unspecial, make sure that you tune in on Tuesday night for Tom and Tony. I'm sure Tom's gonna have some doozies for us since it is the election. And so anyway, let's go in here. And Tom doesn't watch the Friday show, so I'm good. I should be pretty good. I don't think he watches the Monday, Tuesday, Wednesday, Thursday shows either, and so I should be extra good. But let's go ahead and let's see here. Where was I? Oh, I want to do MNQ. Man, we got so much time. It's amazing. And so let's do MNQ. We've got volatility is up over 36. And that's pretty good from a premium selling standpoint. And so volatility up, or a volatility rank, I should say, IVR up over 36. Let's go in here. And again, I think, let's just keep it buttoned up, man. Let's just keep it real straight laced. Right. Again, all the wheels may fall off next week. Things may get totally crazy. I think we just go in here and I think let's just sell a strangle. Like, let's just stick with the Betty Crocker recipe. There's no reason to jank with it. I mean, it's been the tried and true for 350 years. And so you've got MNQ at 20,165. Man, what if I sell a 20 Delta Strangle? That's going to be like an 18,700 put. And what is my 20 Delta on the call side? 21,400. Wow, that's crazy. Man, look at this. The expected move for December 20th, 2024, that's 48 days away, is another 1,250 points in the NASDAQ. That's the expected move to the upside. And to the downside, it's about the same. Maybe it's a little bit more. But and so there's a little bit of volatility skew kind of baked in there. But man, that's crazy. That's crazy. I remember it wasn't that long ago that we were trading like NASDAQ 16,000, and we thought that was crazy. Like we were trading like NASDAQ 17.2, and we're like, this is bananas. Right? And now we're at NASDAQ 20,000 after getting shellacked yesterday. And we've got the expected move topping out at 21.4 on the upside. That's pretty, man, that's something. Let's go ahead and, all right, let's put this guy on though. I think we sell, let's do, look at that. We got an 18.7 and a 21.4 for a 374 point credit. You've got to remember that in the futures options world, you're dealing with points. You're not dealing with dollars. And so you have to then apply the proper multiplier, which for MNQ is $2. For MES, it's $5. For NQ, it's $20. For ES, it's $50 for my shooter McGavins that might be watching the program here today. And so 374, I really like this. Again, just gives us a little bit more premium going into the election. I mean, you could make the case that maybe we should wait until Tuesday to do this, but I kind of like doing it now. And of course, I mean, nobody knows what's going to happen. Maybe the NASDAQ dips under 20,000 early next week and the IVR is 50 or 55. And, maybe we'll layer on another strangle. That's another thing that's amazing. I just cleared that away. I did not mean to do that. That's another thing that's amazing about MNQ specifically. Let's see, 18.7 and 21.4. Let me do that really quick. Look at the buying power effect on this. It's only $1,300, $1,400. I mean, that's like 4% of the account, 4.5% of the account. That's great, right? That's absolutely, I mean, from a sizing standpoint, from a trading small, trading often, like keeping your position sizing in check to where you can do everything objectively the way that it should be done and the way that you want to do it. This is just, it's really, really, really nice. Whereas again, and we've looked at this a bunch of times, but let me just put this on really quick and let me show you the difference with, QQQ. Like if you wanted to go in, if you wanted NASDAQ exposure and you maybe didn't know how to use or weren't familiar with the futures options, which is one of the things I've been trying to kind of, highlight and illustrate for all of us probably the last 3-4 months, I would say. If you didn't know how to do that, you go into QQQ, you're going to have a really, really hard time, fitting in a naked position, like fitting in that naked premium where you have that, that unfiltered exposure to, time decay, volatility contraction, et cetera, maybe direction if you're taking a directional shot. So let me put this on really quick though. Let me just do, we'll do like 370, 372, 75. It's fine. And so, NASDAQ, the MNQ, I should say, the pits they're not the most liquid in the world. Let's do 371, 75. See if they'll give it to us. All right, so we got filled. All right, let me go into QQQ though really quick. And then we're right about the halfway mark of the show. So I'll get to y'all's questions, man. I see you guys. Let's do it. QQQ. If I were to do something similar, right, I go into, in fact, I'm going to set up the exact same trade. I go into the December. It's going to look different because it's a different price on the index, of course, QQQ. You've got the stock at 487. So obviously I'm not selling, 20,000 strike puts and calls. But if I go into December 20th with 49 days to go and I do a 20 Delta strangle, just like we set up. So let's see. I mean, I've got a 19 Delta on the put side. That's the 450 strike. I sell that. And then I go down to the call side and I sell a 520. Right now, look at that. Look at that difference, man. That's crazy. Now you're getting a lot more credit than what we just got. Maybe not a lot more, a couple hundred dollars more. But look at the buying power difference. It's like 5x. That's like 5x. That's a big difference, man. That's a huge difference. Now, futures options the buying power can expand a little bit more rapidly than the equity options, but it's not that significant. Like, it's not like your buying power is going to 2x, 3x, 4x, 5x when the equity option buying power wouldn't have done something similar. And so, the acceleration might be a little bit more quick, but it's not going to be so different that it completely kind of washes out the benefits from the buying power relief that we get using futures options. So again, if you want some naked exposure to like NASDAQ or S&P 500, MES and MNQ are going to be great options in terms of the options that are available in there, pun intended. So all right, so we did MNQ, we did Apple, we talked about the rest of the stuff. Man, let's do it. Where are you guys at? Happy Magenta Friday, by the way. I also forgot to mention that. Yeah, I need to get these wild caught blueberries like forthwith because we are off our game for sure. All right, so Paul says, good afternoon to all. What's going on there, Paul? I appreciate you, my friend. I appreciate you so much. Thank you for being a regular part of what we do. You you're the reason why we can do what we do, man. So thank you. Thank you so much. You and everyone like you that just invests so much time and attention into our resources and our content and the archives and the YouTube channel and the live stuff and the pre-produced stuff and the live shows. It's amazing. It really, truly is amazing. And so thank you so much, Paul. I appreciate you, my friend. David Galmore is in the house. Let's see. Dr. Jim, on the crazy short butterflies that you got me hooked on. Yes, you figure those out on your own because I'm buying butterflies. You're the one that's selling butterflies. I'm buying the butterflies. But you said I am up $9,500 since July 25th. I closed 32 trades, all profit, including two green scratches. A green scratch. That's like a jumbo shrimp, right? That's like a plant-based keto diet. Like, you can't really have those two things together. Like, that doesn't really make any sense, but I like it. For your mental records, man, you do whatever you want. That's the beautiful thing about it. Like, you get to record that in the manner that you deem to be the most appropriate. And so a green scratch, nice. I'm going to start saying that for sure. But that's awesome, man. I'm very, very happy for you. And it's awesome to hear that you're doing so well with that. And of course, I'll take partial credit or even full credit if you want to give it to me. But that is not my strategy. You're the one that's selling the butterflies. I'm a butterfly buyer. Usually, Kimberly's in the house saying CMG is warming up to 80 or T equals 80, wherever that means. I know Kimberly's got a lot of different variables. She's got a lot of high-powered stuff working. So when she says T, that may not, I'm interpreting the T as P, Kimberly, and so I'm sure that I'm wrong there. But man, if CMG went to a P of 80 or a T of 80 or anything of 80, that would be pretty crazy. And so you got Chipotle at 58 right now, up $2 today. We even need a few more of these. We're going to need a few more, sales of the old, fresh, out of this world guacamole paired up with the 2-day-old chips. Like, that's what you get every day. 100%. Like, there's no scenario where that's not 100 Delta. You guys know what I'm saying? Like, you go in there, the guacamole, it's going to change your life. Like, it is going to change your life. You cannot find a better store-bought guacamole. You can't. Which, that may lower the bar significantly, which I understand. But the chips, never fresh. Not a single time. It's kind of amazing to me that they haven't just lucked their way into sometimes having them fresh. Like, it's got to be part of just the process. Like, it's got to be in, like, the system's manual. Like, all right, listen, we make chips on Monday, we put them out on Wednesday. Like, we make chips Tuesday before we leave, we put them out Friday before we close. And then they're ready to go for Monday. Like, I have to imagine this is the way that they're being trained because it doesn't matter who's there. It's always, the chips are never going to, I'm still going to get them and you're still going to get them because I need some kind of vessel for the guacamole, of course. But, yeah, man, I don't know. So Scramble Everything says, David Galmore, that is a good job out of you. I agree. I agree very much. And then Kimberly says, AAL got a T of 16. Is that American Airlines? I think it is. Wow. Yeah. So, again, I'm not sure what the T means, but the P is 13. So, okay. All right. I'm actually flying, and I do not feel good about this at all. So speaking of American Airlines, Delta's my go-to. Delta's the tried and true. Delta's my jam. Like, Delta will be my number one. United is a number two. It's a solid number two. It's a solid backup. I'm usually fine with United. It's a Joe Flacco. Like, it's gonna be fine. American Airlines though, man, I'm really hesitant. I have to fly it on December 6th to go to Phoenix, which is the next stop on the Where's Bat tour. There were no direct flights going to Phoenix in anything other than American Airlines. And so I'm like, oh, man, this is not good. I mean, the Delta that I get there on Friday, it's not over 50. I can assure you of that. I think it's positive, but I don't know that it's over 50. And so I don't feel too good about that. But I appreciate you there, Kimberly. Anka's in the house. Happy Friday. What's going on there, Anka? I'm pretty sure I owe you an email, maybe a couple emails. That's very possible. And so you're not the only one though, Anka. So it's nothing against you personally. And so Trey, sometimes I just get bombarded, and it's hard to keep up with the flow as it comes in. But Trader 1986 says, "Hey, Dr. Jim, with the IV spike on SMCI, yeah, SMCI has fallen on some hard times, I think." Let's see here. SMCI. Wait, that can't be right. $26? Oh, they must have split or something. Because I remember when this thing was like 1,000. They must have split. I'm assuming they split. If they didn't split, then, whew, man, this is really something. But I'm pretty sure they did. So, but Trader 1986 says, with the IV spike and the IV rank above 100 in December, right, which is correct. You can see the IV rank right here is 122. You can get a put ratio buying a $20 put, selling two $15 puts. Don't mind a shot with max risk of 975 if Super Micro goes broke. Yes, let's take a look at this. You may have found something that looks kind of nice. So you're in December, you said? Okay. Oh, they have earnings. They have earnings on November 6th. I wouldn't normally do this. Normally, when I see earnings coming up, I wait for the earnings day to put my trades on so I can get better strikes, and I can just get something that is going to be a little bit more appropriate for that time based on, what's happening right before the earnings release and, any volatility pumps and volatility expansions. That's actually usually the main reason, because you don't know what the stock is going to do. It may go up, it may go down, it may go nowhere. But pretty reliably so, volatility is going to expand going into earnings. Like volatility is going to be on an uptick going into earnings, usually, not every time. But I'm going to say 80 to 90% of the time that's going to be the case. So if you're doing something that's short premium, it really makes sense to wait to put that on for the actual day of the earnings. So for that reason alone, Trader 1986, I might end up passing on this, but I'm curious. So you're saying I'm gonna do a put ratio set, a $20 put ratio set, buy 120. So buy, I guess, a 20 strike is what you're talking about. I buy the 20 strike and I sell a couple 15s. Yes. I see what you're. Yes. Okay, so this must be it. You buy a 20, you sell a couple 15s. This is your classic 1x2. I think it's fine. You're right. Your max loss is 969. That's going to be if the stock goes to zero. SMCI goes down to nothing, which it's just gone. It just dissolves. In this situation, though, A, I don't like it because of the earnings situation. I'd rather wait. But also B, ratio spreads. Unless you're prepared to hold this thing to the very end, unless you're prepared to carry this thing close to expiration, which, look, you've got to get express written consent to do that. You need a signature from Tom. You need a signature from Tony before you're allowed to do that. So make sure you get those things in place first. And then if you have those things, maybe you can take it inside of 21 days to go. Like maybe you can carry it closer to expiration, but that's between you and Tom and Tony. You all got to figure that out. And so just be aware, though, if you're not prepared to do that, the most you're going to make on this is 31 cents. And not even 31 cents, because that would be going all the way to expiration. The most you're going to make on this is 15 cents, 18 cents, 20 cents. And so I typically, if you're going to manage at 21 days to go or before, that's when I typically like to, collect a lot more on the front end. So, for example, using the same strikes here, if I actually, if instead of a 2015, I did like a 20, you could do a 2017. Like, there you go. Obviously, you have a little bit more risk now because your long put spread is not as wide as it was, which is giving you buffer to the downside. But now you just have a lot more credit to work with if you're going to manage at 21 days to go or before. Now, if you plan on carrying the ratio spread inside of 21 days to go, which we've experimented with here on the show and we'll continue experimenting with as time goes on, if you plan on doing that, then that's a different discussion. And it's a completely different scenario. And so maybe that's what you're looking to do there, Trader 1986. But if it's not, and you're going to manage at 21 days to go or before, I would probably try to collect a little bit more. And so hopefully that helps you a little bit. And so Wayne says, "Hey, Dr. J, what's going on? What's going on there, Wayne? I appreciate you, my friend. I have a Tesla 315, 320 strangle. I'm sorry, 315 210 strangle is what I should have said, with 28 days to go. Even though my put is not being tested, would you ever roll down your calls to collect more premium? Yeah, let's take a look at this. I'm assuming it's not tested. Yeah, you're at 240. Yeah, you're at 247. Okay, yes. And so I kind of mentioned this earlier when I was talking through like Amazon and AMD and those kinds of things. It all comes back to your philosophy. It all comes back to your own personal, view on the market. And I understand that the tasty research suggests that rolling down the untested side more aggressively is going to be more beneficial to you. And I'm not going to necessarily disagree with that. I'm not even going to disagree with that. Not necessarily. I'm not going to disagree with that. But you also have to take into account, like, here's something that I think that is not talked about enough. What is your own personal schedule like? What is your own personal ability to be in the market like? Like, it may not be a 25-8 schedule like a Tom Sosnoff, right? You might have like a life. You might have like friends, right? Like, these are things that Tom doesn't really have to worry about. And so if you've got friends, you've got family, you've got a full-time job, maybe you've got multiple jobs. It's like, man, if you can't be glued to the markets, 25-8, then something, you could still make this work. I really think that you could, but something that's a little bit more hands-off, something that's a little bit more laissez-faire, something that's a little bit more maybe in a Dr. Jim lane, or maybe not, where you're just kind of like, hey, it's working. I'm not going to do anything. I'm not going to meddle with the process. Then, hey, you're able to, you're still trading small, you're still trading often, but you're just adjusting less. Like, you're not as in there trying to zig and zag between raindrops. And so, yeah, I mean, that's what I would. So, Wayne, I would not roll the call down. But could you? Of course you could. And if you email Tom today, Wayne, you should do that, just because I know he doesn't get emailed enough. So I would shoot him an email anyway, just tom@tastylive.com. Email him and ask him, and he'll tell you to roll the call down. Email him and ask him that what you should do, and he'll say roll the call down. You got to roll the call down. You got to be more aggressive with your adjustments. And of course, I mean, that's a great way to approach it. But again, just think about kind of where you're at, and only you can decide what the answer to that is, Wayne. I don't know I don't know what the right answer is. I don't personally or professionally believe that there is a right answer here. Like, I think it's very, very hard to find points of equilibrium or even optimal solutions in something like the world of trading, because so much of it is a gray area, and so much of it is really just a gimme gotcha trade-off. It's not really yes or no. It's not really better or worse. It's gimmies and gotchas. And so that's how I would view this. I would sit tight, but could you roll the call down? Of course. And just to kind of, in case you were thinking about doing that, you're here in November 29th, you've got this 310 call, you said, right? 315 call. Yeah, so this thing's only worth $1, right? So if you were going to roll this thing down, where could you roll it down to? Well, there's a couple ways that you could do it. I mean, you could look at your deltas and kind of trim your direction by, 30, 40, 50%. You could go that route. That would, of course, be a good way to do it. But an even easier way, if you don't even want to fiddle with all that, you could just go in here at your 315 strike and just say, hey, where does the new expected move? Boom, right there, 275. Done. Next question. Right, you just roll it right down from the 315 to the 275. When you do that, you're going to pick up like another $4. That's pretty good. Like, that's pretty good indeed. But you just have to understand that now, instead of having a 210 315, you've got a 210 275. Which, of course, you're thinking, man, I still have a ton of room on both sides. I mean, you do, but man, you're just a couple Elon tweets away from not only being tested, but being broken through on one side or the other. And my man's Twitter game is on point these days. Like, he's fired up, man. He's not talking about anything related to Tesla or SpaceX or any of that. But my man he's out there. He's in it. And so he is absolutely going to be saying some pretty wild stuff in the next couple days. So I'd probably want to stay at the 315 for that reason alone, actually. Just to give yourself just a little bit more buffer against the Elon event risk that is pretty much a daily thing. But hopefully that helps you there, Wayne. So Kimberly says HPE. We got a T of what's HPE? I'm getting all these new tickers. Is this Hewlett Packard? It is Hewlett Packard. Wow, I can't believe I got that. I can't believe I pulled that one out. That was a total guess. HPE, Hewlett Packard. Wow, they're still in business. That's unbelievable. That somebody hasn't unseated Hewlett Packard as the printer crown, the printer crown holder, I should say. $20 a share. Kimberly says it's going to 21. I don't know that she's even saying that, but going to 21. That's crazy. And so, yeah, I'm going to pass on Hewlett Packard because they're probably due to be insolvent just about any day now. And so let's see here. If we go to Damon S. says NFP was a total disaster. Really? What was the number? Okay, so Mikos, a couple comments down, says NFP 12,000 jobs. No way. 12,000 jobs? 12,000 jobs on a 113 expectation and downward revisions from the previous months. Now, the downward revisions, I mean, that's just par for the course. That's what they always do. Because all these numbers are fake and they're all imaginary. They're just made up on the spot. Like, I think there's just some guy who just figures out what he wants it to be like 5 minutes before the print. Like, there's not like these models and equations. It's just a guy in a room. He's like, let's make it whatever. Because we're going to revise it again anyway. And then there's a revision guy that works right next to him in the cubicle that might be adjacent. And he's like, well, I just revised the last one by 80,000. He's like, well, how'd you figure that out? He's like, it just felt right. Like, I just kind of went with, my gut on that one. You're telling me that the market expected 100,000 jobs, 113,000, and it got 12. So a 100,000 job, not 112. You mean 112 or 12? A 100,000 job miss and downward revisions from prior months, and the market's rallying. The market couldn't be stronger. I mean, it could maybe be a little bit stronger, but it's incredibly strong today. Now, I mean, obviously what's the narrative that's going to come alongside that? It's going to be, well, now Powell's going to cut. He is going to cut a full point next week because he has to, because otherwise we're going into recession. Like, it's everything. It's apocalyptic. It's, catastrophe. It's all this kind of stuff. But man, they really missed the mark on that NFP print. That's crazy. It's been a while since. Wow, so it was so close to we're so close to losing jobs. Like, negative numbers on the jobs. Like, with the revisions, I'm curious, Mikos, or anyone else that wants to chime in, and I may not get to these comments when you guys post them, but I usually scan the comments when the show is over, and you guys always make me laugh, by the way. So if you drop something in there and I don't get to it during the show, that doesn't mean I won't see it. I usually spend 90 seconds and scan them before I kind of have to do my post show things, and you guys always make me laugh, so I appreciate you guys very much for that alone. But the revisions, I'm curious, did that make any of the previous months negative? Like, I don't think we've had any job losses, and it's been a while. I think it was COVID when that stuff was kind of happening. And then once COVID kind of got settled, which took a while, of course, it's been pretty much a nicely upward trajectory, I think, since then. I don't think we've lost any jobs since then. Do we actually lose jobs? That would be pretty wild. But Theta Trader says, oh, yeah, Dr. J has the Chris Vecchio style shirt unbuttoning on that salmon colored polo. Yes, it's magenta, actually, in preparation for the extra long content. That's correct. And so we kind of had to be, I needed to be able to move. Like, I needed to be able to just it needed it to be a bit more, free flowing. And so 5 reps, 175 overhead press, then let's go, man. Better you than me. Because my right shoulder, it started to hurt just reading that comment. Like, it started to hurt just, barbell overhead press, man. I mean, maybe for you youngsters out there, like Theta Trader, you're in your 20s, I think, right? You're like 25, maybe 28, doing those back alley root canals. And so you young guys, like, you can get away with that stuff, man. I can't do that. You kidding me? I can't be doing barbell overhead press. I won't be able to move my arms for, 3 weeks. And not from muscular soreness, from injuries. Like, I'll have a whole new litany of injuries I have to work through, and I don't really want to do that. But I appreciate you there, Theta Trader. Michael Flores is in the house, says that was a low pro endorsement. No endorsements for me, right? It's either going to be good or it's going to be better. It's either going to be great or it's going to be the best, right? And you can go ahead and choose whichever side you want. It doesn't matter to me. I could care less. And so Rick CR 1205 says that sounded like a pro Harris endorsement. No, I'm not pro anybody. I'm just keeping you guys guessing. I just want to keep you guys on your toes. Oh, I voted. I absolutely voted, but it doesn't matter who I voted for because my vote doesn't matter. Like, this isn't a Kevin Costner movie. My vote doesn't matter. Your vote doesn't matter, right? So do whatever you want. And of course, I'm saying that facetiously, although mathematically, it literally does not matter. And so T-Bone says you have a vertical and it goes against you. Is closing one side ever viable? Great question there, T-Bone. No, I don't think so. Because when you have a vertical spread, you go on as a package, off as a package, as we like to say. And if you start breaking apart one side of the vertical and leaving the other side of the vertical on, then not only is that either going to completely change your risk parameters. So for example, if you have, a long call and a short call and you take off the long call, just leaving the short call, now all of a sudden, instead of having what was defined risk, you now have undefined risk. And so it's like, man, that's not really what you originally signed up for. So I don't like it for that reason. But then also number two, a lot of times, like for example, let's say you sell a call spread. Like let's say you sell a call and then you buy a call further out of the money. The market goes down, so it goes in your favor. You decide, hey, I'm going to try to beat the system here. I'm going to close my short call and leave my long call on. And so if you do that, now you're taking something that was a bearish bias and flipping it over to a bullish bias. There's a time and a place for that. Like some people, that's kind of their trading strategy. They kind of go back and forth in the market. They kind of play both sides. I think that you can do that, and that can be a successful way to approach the markets. I don't like it from an option strategy standpoint, though. In terms of like inside the same strategy, where you're breaking apart legs, you're trying to get super creative, whatever. I would much prefer, seeing you do a short call spread, and it works. You take the whole thing off, and then you want to be bullish, do a short put spread, or buy a long call spread. Just do another strategy. It could be in the same stock, whatever. Just get some fresh. Just get some. It's that water from the loo, man. Just get some fresh strikes to kind of put yourself in a better situation. That's what I would do. And so let's see. Kimberly says XLT48. XL. I can't keep looking at every single one of these, Kimberly. You got so many. 48 from 34. Again, my P's and your T's may not be the same thing. I have a sneaking suspicion that they're not, but man, XL, that's Excelsius? No, that's Excelsis? No, that can't be. I'm gonna pass on this real quick. I should have passed a couple seconds ago, but yeah, I'm gonna pass on that. Kimberly says Paul Tudor Jones is in the know. Trust me, they are not selling. Well, we'll see. Buy the gold and silver dip. We will see. We will absolutely see. I mean, all I'm saying is that when silver was 35 last week or whatever, I mean, I came out here and I say, hey, listen, I said, if you are buying silver here, you're not a contrarian, which you might be cool with that. I'm not saying that that's the wrong move or the right move. I'm just saying you can't call yourself a contrarian. You're buying gold at $2,800 an ounce. You're buying silver at $35 an ounce after these huge breakouts. And so I was on the short side of those trades, not in this account, but potentially in some stealth accounts that may or may not exist. And so now that, silver, where's silver at now? So gold, you've got gold. Let's see here. You've got gold down $3 today. So it's hanging in there, 27.46. And then silver was about 32.5 a couple seconds ago. Where is silver now? Yeah, okay, so still 32.5, so 32.55, right? So it's gotten taken out to the woodshed the last couple of days. I mean, there you go. It was up to 35. Just for clarity on the records. You see this point right here? This is right where Dr. Jim came out and said, "Hey, what are you doing? You should sell silver." Hey, what are you doing? You should sell silver. So did I paint the top? I certainly did. Is it the first time I've ever done it? Of course it is. Is it the last time I'll ever do it? Most likely. And so Dr. Jim, he got this one right. Am I going to get the next one right? I don't know. I don't think so. I mean, you got some resistance that's going to become support. I mean, this is basic. This is TA 101 stuff. Maybe like 102. But this is entry level. This is entry level stuff. I mean, there it is right there. You're at 37 before you know it. And so you might be right there, Kimberly. And you're in good company, that's for sure. Michael Flores says, hey, that felt good. That's good. Linton29 says, what's up? What's going on there, Linton29? I appreciate you. Down 721. Happy Friday, Dr. J. Man, look at you, down 721. I appreciate you. Appreciate you very much. Let's see. Krizrog, or KRZ Rods, says, hey, what do you think about selling a call put at 89 for November 8th and buying a 92 call and an 86 put for November 15th for a credit of $1.93. Then at the end of next week, selling another put call for November 15th for a credit. Okay, so it looks like what you're doing is kind of a straddle strangle swap, kind of a bit of a calendarized iron fly in a lot of ways. And where you're selling the straddle with the inside strikes, and then you're buying the strangle with the outside strikes. I mean, it could work, and this looks like it's kind of an election event, maybe. But then you want to roll it again for November 15th. I haven't done too many straddle strangle swaps, or even strangle swaps. It's been a while. Let's see here. I'll take a look at it. Let's see. Oh, you didn't give me a stock for $1.93. Oh, at 89. 89. I don't know what stock that is there, Chris Raj. I appreciate you very much. And straddle strangle swaps can be interesting ways to take advantage of the volatility that might be kind of, front loaded in the front month. And then you do have the protection in the back month. And you also a lot of times have potentially more vega in the back month too, because you have more duration. Now, it may not be that clear cut though, because if you're selling at the money strikes, those also have higher vega. So you have more vega that you're selling in the front month because you're at the money. You have more vega that you're buying in the back month because it's the back month. So which one is going to reign supreme? Which one's going to pull rank? I don't know that there's a cut and dry answer where it's always the front month and always the back month. But that could be, it could be an interesting strategy where you're able to take advantage of any volatility collapse, in the front month, and then, still have the protection on, in that back cycle. And so it's pretty interesting. But I'm gonna have to pass because I don't know what stock that is. Let's see. Kimberly says BTC. We're doing some crypto now. Man, Kimberly's doing it all. A micro poll's incoming in November. That's what they've been saying for a while, Kimberly. And so I don't know if you're part of the they crowd, but y'all been wrong. And by y'all, I mean if you're part of that crowd. If you're not part of that crowd, then my express apologies after the fact. But you, I don't know. That's what they've been saying for a while. So we'll have to wait and see. And then a VIX pullback is coming. It could be, Kimberly. And not even with your super secret system it's not really super secret. I appreciate you sharing it. Volatility doesn't like to be in the 20s. Historical average is 16. So for that reason alone, I mean, some kind of collapse makes sense. Like some kind of, downward movement in volatility makes sense. Just from a historical standpoint, just from a mean reversion standpoint, that absolutely makes sense. And so let's see. Oh, David Galmore says the other day, Biden called me garbage. Yeah, they say some crazy things out there, man. They all do. And so that doesn't surprise me one bit. And so just because they're all saying some crazy things, especially in the final days, man, like you think that was bad? The next 4 or 5 days, we're going to hear some real doozies, man. Just keep your ears pricked and you're going to hear some good ones coming from probably both sides. And so Kimberly, what's going on with DJT? They've got to be out of business now, I would imagine. Let's see. Rick, we got Kimberly. Kimberly says with Google, let's see. The ex-dividend date. Kimberly's she's weaving ex-dividend dates into the system. Yeah, wow, that's beyond my pay grade, I think. I'm gonna pass on that, Kimberly. I appreciate you though. We got Apple, we got Intel. Let's see. Yeah, I love it. It's getting political now. And I opened the door. So I'm the one that opened the door. Look at you guys going back and forth talking about Biden's doing this. We got a Clinton reference on the show. We're talking about Bill or Hillary because there's multiple Clintons, right? And so, man, this is good. This is good. So it must be election season. Like there must be an election coming up in the next week. So I'm going to pass. I'm going to completely sidestep all that. Let's see. Big Deal Donuts is digging it. Let's see. Oh, Finwest in the house. Good morning, Dr. Jim. What's going on there, Finwest? I appreciate you, my friend. Theta Trader says, I think the personal relationship with Scott Sheridan is more important than Tom or Tony. That's 100% correct. But your mileage may vary. Also correct. Anton does okay with being Tom's favorite. I mean, somebody's got to be the favorite. Like it's obviously, Anton's the front runner. I think Zhijuan is climbing the ranks pretty quickly. I mean, the kid's got a real bright future, man. Kid's got skills. The kid's got the ability. So I think he could unseat Anton here pretty soon. And so Sergio's in the house. Good afternoon, Dr. Jim. What's going on there, Sergio? That's great. I did not even see this comment. But Michael Flores says Zhijuan, I'm pretty sure that's how you say it, is coming for Scott's place. Yes, that's correct. It's going to be a chess match, white versus black, right? Anton versus Zhijuan. Like that's absolutely Zhijuan. I think it's Zhijuan. I read it more than I hear it just because of, the way that, just the way that things shake out on my end. But Theta Trader says Intel has been a source of constant disappointment. So not like Anton, of course. Though I was very happy to be out when it cratered again in the last month. Poster child for single company risk. Yes, a little unsystematic risk for my finance students that are out there. Intel. Well, it's up a lot today. And so, and again, guys, look at this. You guys don't need me for this. This is TA 101. This is TA. This isn't even 101. This is like the prereq to get into the first TA class. Look at that. It's so obvious, right? Boom, right there. It's just so obvious, right? I mean, after the fact, it's just a beautiful thing. It is a beautiful thing. And so, boom, there it is, right? Like, I mean, how could you guys not see that? Theta Trader, how could you not see that? I'm so disappointed in you. Like, you're disappointed in Intel, but I'm disappointed in you. that you did not see that. It's right there. It's right there. And so next time when you see it, is it going to the same thing going to happen? I don't have no idea. And neither does anyone else. But man, it's just so obvious. It's just so clear. And so Theta Traders in the house. I appreciate you, my friend. And so let's see. We've got Kimberly. Oh yeah, there you go. We got Tug of War. We got Intel. Man, we got Big Deal Donuts in the house. Man, look at this. I love it. Michael Flores is back. It's going to be fun. I might have to free up some capital for that. I think maybe you're talking about the election. It is going to be fun, and it will not be quiet as a mouse. I can assure you of that. Just like last year or last time, wasn't quiet as a mouse. Oh, Damon said it was November 3rd. Okay, so I think what we looked at is still applies. Let me go back really quick. Do I have time? Wow, I still have time. That's great. Let's go back. Yeah, let me zoom. Let me go all the way back to it was 2020. Boom. Okay, here it is. November 2nd. Let's see here. Where is the day? Look at that. Okay, beautiful. All right, let me zoom in on this. Yeah, I want to quiet as a mouse. Yeah, I don't think so. Here you go. Look at this. Look at this. So this would be November 2nd. This is the day before. This is the day. Wait a second. Hold on. No, that's not right. Let me make sure I get this right. Cuz I got to remember that the election is all day. It's an all-day event, but the results don't come in until the evening or start coming in. Again, this was like a week-long process in 2020, but it still is not going to be until, kind of an evening deal. So November 3rd, where is November 3rd? Right here. Okay, so here's your November 3rd candle. So markets rallying, going into election, whatever that means. Okay, fine. Look at this gap. Look at this gap. Now, again, this is I don't think I'll be able to go 5 years back looking at like 15-minute charts or whatever. We would need like the super secret Errol Coleman settings to be able to do that. And I don't think we certainly can't get that for free. And I don't think I can afford what he's charging for that. And so when we look at November 3rd, though, the close of, wow, this is crazy. Look at this, guys. Man, I'm blown away by this in so many ways. The close of SPY before the last election was 336. That's 336. 336. We are a crisp 240 points higher now. In 4 years. In 4 years. That's pretty crazy. That's a testament to the resiliency of the economy and just, the resiliency of the market itself. And, obviously, with the the COVID crash and then rebound was like, nobody saw that coming. Nobody, zero people. But we closed at 336. Look at the next day. The next day we opened at 340. So that's a 1% move higher. And what did the NASDAQ do? Hold on, because I think the NASDAQ was the one that was even more significant. I want to get to a couple more questions, but now, hold on. Let me just do this real quick, because now we know what we're looking for. Thank you, Damon, so much. Let me find November. Oh, yeah, here it is. Look at this. Look at this, guys. Yeah, quiet as a mouse. Look at that. November 3rd, NASDAQ closed at 274. It's now 488, by the way, if you're keeping score at home. The next day, so it closed at 274. The next day, the NASDAQ opened at 283. That's a 7-point rally on a 270 base. That's like that's 2.5%. That's a crazy gap up, not to mention all the craziness that happened overnight. And so, man, if Tuesday night is half of what last election was, it's going to be completely crazy and bonkers, right? And so quiet as a mouse. Unbelievable. Anyway, I got to get to a couple more than that. I guess you guys did. Tim Knight, man, let's see. You got somebody new in here? I appreciate you guys so much. MJ's in the house. Here we go. MJ says, can you please discuss about any other election result option trades and which option selling strategy one could go for? Yeah, here you go, MJ. I think something like a strangle, like what I did in MNQ, because nobody knows what's going to happen to the election. Nobody knows what's going to happen to the market as a result of the election. And there's a lot of uncertainty. But man, getting in there now, or you can wait till Monday, Tuesday, getting in there, doing something neutral in the indexes. You could do a strangle if you have, the capital and the experience level to handle that. You could do iron condors if you want something that's defined risk. But I think, neutral premium selling strategies are a good strategy right now going into the election. Because, we don't know what's going to happen. And this is a good time to, take advantage of high volatility and sell that volatility. And so that's what I would do. Let's see. Stephen Carpenter says, always bet against the asteroid. That's correct. That's just a good life strategy, because if it hits, the joke's on them. The money won't matter. Although if the asteroid hits, I'd like to have a few bucks in my pocket, I think. because if I got to live underground and I got to now, I mean, everything is in the black market. It's like I'm gonna need cash. Like I'm gonna need something to get by. And so, man, I don't know. But let's see. We got somebody new. I see Scramble. Everything's in the house. I'm just grabbing one real quick. Let me see here. I see Madeira by Wolf. DJT is one of Trump's best con jobs. Yes, maybe so. But again, if they're still in business, it's not going to be too much longer now. And so let's see. Flower Power 2222 says Jijuan will be in Tomsey. Yes, that is the trajectory that kid is on. I completely agree with you. And so let's see. Oh, EP Boyd says Jijuan's going to get paid 7 figures at Citadel in a couple of years, 100%. And I agree, since Tom's only paying him 4 figures now. And so let's see who else we got. We got Alan Rollette's in the house, suspending disbelief that DJT is actually worth something. Playing both the up and the down butterfly from Liz and Jenny. There you go, at 10 and 50. There you go, man. Play both sides and just let the market figure it out. Let them fight it out. And then you can just walk away with all the cash. And so let's see. Where are we at? I'm just about out of time. But man, I see Boston Franks in the house says, why didn't stock sell off today because of the jobs report? Nobody knows, but my guess is it's because that the market's excited about lower rates. The market's excited about the Fed continuing on either its current path or even accelerating the path, bringing down rates and financial assets like lower rates because it essentially boosts the present value of future cash flows. And so financial assets, they like cheap money just like we do. And so that would be my guess. In that, to stave off the potential recession, the rate cuts could come even more quickly than what we thought before. That's just my thinking here, kind of flying by the seat of my pants. But I got to go. I got to get you guys to Tim Knight. Man, I appreciate you guys. We made it through the show. I cannot believe it. Thank you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm Jay Schultz at tastylive, or we can connect on Twitter. I'm at JSchultzF3. I would love to hear from you guys as always. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody. Happy November. Happy Friday. And brace yourself for next week. It's going to be really something. Tuesday, of course, is the election. Thursday is the FOMC, which, depending on the election, who knows how much attention Powell will get. He's used to having the entire world look at him. Maybe nobody will care at that point. But yeah, it's going to be a doozy. I've got a lot of charts to show you today. So let's just jump right in. It's a green day. The bulls are getting a bit of a recovery from yesterday, but the damage is clear. Very good week for some cracking, some fractures, some failures. Here's the spider. Strictly speaking, let's be more conservative and just drag this fella right to the price gap. But I'm not so sure we're going to get above Thursday's high. But this is the price gap. All kinds of positive developments here. Failure of the trend line, new price gap, and an affirmation of the importance of this dashed midline of the channel to the penny. Really cool stuff. So we could, it is, put it this way, my hunch is that a week from today will be lower than we are right now, in spite of the universal, or as Goldman Sachs stated today, anonymously bullish disposition of all their customers. Anonymously. Good heavens, my English is failing. Not anonymously, although maybe. Unanimously, that's it. All the voices. So unanimous bullishness across all their customers. So yeah, that's the narrative. It's going to explode next week into lifetime highs. We'll see. But for the moment, things are looking pretty good. We're getting some, as I said, some fractures, some failures, some breaks. We're past the cool part of the earnings season. Apple, one of the largest companies in the world, is down not much, about 1.33%. No big deal. We've been ambling around this zone for months and months. It's a really dull stock. Amazon had a very good evening, and they've blasted higher, although not to new lifetime highs. The lifetime high from July 8th still stands. And yeah, so there it is. It's a pretty dull stock as well. But all in all, the cubes are benefiting from Amazon's strength. The cubes are up about 1%. But that trend line that I've been obsessing over has a new function now, which is resistance instead of support. And so here we are cleanly below the trend line. A perfect open yesterday, exactly at the trend line as we fell away from there. An inside day today. And as I say again, let's be a little more conservative and just we'll anchor that to the gap instead of that peak. But the trend line failure, which took place yesterday, is just terrific news. Going into sort of subsets of tech, the semiconductor index SMH, also a new price gap, thanks to yesterday's move. And XLK, which is a different flavor of tech ETF, this one also failed its immediate term trend line. Of course, in the midst of all this, the big report we were all waiting for this morning was the jobs report. And it was actually kind of bad news, which is odd since the market's so strong now. But hourly wages were stronger than expected, so that implies stronger inflation. And B, the jobs added from the private sector was actually negative for the first time since 2020. So the number of jobs is actually shrinking. It was a tiny, tiny positive number because all those, I'm sure, very useful government jobs they've added into there. So it was like 12,000. In a nation of a third of a billion people, 12,000 new jobs. And of course, private jobs, which are real jobs, shrank. So yeah. But in spite of that, yeah, green all across the board. NVIDIA, by the way, critical tech stock, has been stumbling a bit. The lifetime high remains back on the 22nd. We're well below that breakout zone. And yeah, next week's going to be a doozy to sort of shed light on the longer term direction of all these. Got to mention SMCI again. This has been a real plunger. We're down 80% on this from March. As I said yesterday, the S&P Standard & Poor's proudly embraced SMCI in March, added to the esteemed S&P 500. A great honor for any American company. And that was almost to the millisecond when they peaked. And they've been collapsing. You don't usually see comedy from auditors, but the letter from Ernst & Young, right here in the Silicon Valley, was unintentionally hilarious because usually auditors just sort of bless the entire report and say everything's copacetic, everything's great, love Ernst & Young. This one didn't do that. It surgically extracted just tidbits from the report, like today's date and the color of the paper. It was honestly comic. It's like, sentence 6 on page 3 we agree with, sentence 4 on page 12 we agree with. But it's clearly implied that there is a mess. And the NASDAQ has actually told them, if you don't get this ship shape by, I think, the 16th, you're delisted. So, this was the NVIDIA of its day. This was a powerhouse, one of the most potent blast off in the bullish universe, and could be the end run of our day. Who knows? We'll see. But it's quite the collapse. A month from now, this may not even be a working ticker symbol anymore. In China, up a little bit. It's become pretty dull. We're still range bound on this, and the resistance and support remain the same. So resistance is this red line here that's been in place ever since this gap was formed, and support's way down here. And we're just kind of ambling around like so. Much more interesting to me, and you probably guessed that because I talk about it every single day, is Brazil. EWZ is going great. I've been talking about this pattern day after day after day. It's just getting better and better and better. We're down almost 3% today on a day when the US stocks are mysteriously green. So this is just very exciting, and we're getting closer and closer to the completion of a gargantuan head and shoulders top on Brazil. So I've got a big short position on this. It's doing just super. So very delighted, and tightened up the stop on that to the gap that I've drawn, the gap being yesterday's low. What else is cooking? Oh, just by way of more precision here, just want to mention, last I looked, the most important component of EWC is PBR. So this is kind of, isn't a very nice little topping pattern. It isn't as gorgeous a head and shoulder top as EWC is, but this is a driving force behind all that diminishment. Mix it up a little bit, some bullish charts. DocuSign has a lovely little inverted head and shoulders pattern there. We're coming off that green base there, looking real good for DOCU. Cart, Maple Bear. We had talked about this back when it was a little bit cheaper, back in the day, like so. It's done nicely. It's up again today, and a new intraday lifetime high on Instacart, aka Maple Bear. We've also talked about Compass as it emerged from this bullish base, having a good day on this one, up over 7%. And Toast, which is up over 3%. Nice long base there as well, and pushing higher little by little, week after week. So all looking real nice. With the election on Tuesday, DJT, not the person, but the stock, has been getting a lot of attention. It's a very cool chart. I'm a very simple chartist. I don't put a lot of junk on the screen. This is it's like a Zen-like chart here. We just have, appropriately, America, red, white, and blue. So we've got red for resistance and blue for support, but they kind of switch roles too. So this blue line here had been supported, failed, and then we conquered it again, and up it went. And here's the cool part. We went way up here to almost $55, and then most of this week it's just been collapsing. So we've gone from 55, look at the low, exactly at the trend line. It's like magic, really cool stuff. And this red line here, which is the other component of this triangle pattern, this also is acting as support. So we've got kind of an apex going on right here. So clearly next week, this is going to be a volatile little beast. And it'll be very interesting to see kind of in retrospect what this move was all about, because that was a like 400% rise in just a few weeks' time. How are we doing on time? We're doing all right. We're going to make it. Gold is down a little bit, as I've said. I'm staying far, far away from something I think is going to do terrific ultimately, which is silver. But I want the election to be over first. And so far, I'm not upset with myself about that decision. Silver continues to weaken. SLV is down almost 1%. Next big test, this gap right there, 29.20. If it gets below that, then we're going to have to look for an even lower entry point. Not to say that I'm going to get in there, but it's just illustrative, I think, of the danger at hand. Some short positions got cooking. Just review those. I've got I guess including Brazil, 16 different short positions. Costco, This is something which this is a real test, because if I had any sense at all, I wouldn't be in this, because historically these tops don't work out. We're going to give it another try. We got very close to a failure today, and wouldn't you know it, starting to strengthen here. But that'll be extremely interesting to see if this can not only slip under the pattern but follow through. CrowdStrike, CRWD, the dashed line here, that's the key stop loss level. Lumen, LUMN, huge top on this one. And as I say, I mean, as I look at my positions now, there's about, of these 16, there's probably 7 equities that are down today. So it's a real mixed bag today. Yesterday, $1 trillion got wiped out on market cap. So definitely having some recovery right now. This one reports next Tuesday afternoon. On Tuesday afternoon, this is Novo Nordisk in VO. Royal Caribbean is finally showing some red here, coming off of its earnings this week and slipping lower yesterday and today. We've also got Schlumberger, which is down about 0.2%, coming off below that right triangle top. And then Unity also up today pretty strongly, but hasn't penetrated that neckline of its head and shoulders pattern. So one of the biggest items that has changed recently has been the continued weakness of bonds. That's a very big deal. The 50 basis point cut the Fed was all thrilled the world with, and everyone was talking about endlessly, has been rendered absolutely moot. Rates have completely reversed away from that. It's meaningless. Honest to God, there's no need for the Fed. They could just have an intern could write a computer program and just follow the markets and just set the rate. The market is doing the job, but we can all pretend along with them. And so, they did slash rates, did mean a thing. Rates are substantially higher, far above the 50 basis points that they slashed, and bonds have cracked clearly this support. So expect much higher rates ahead. And this is being reflected, for example, in Bernardo, which I've mentioned a bunch of times. This is an interesting short. B&O down a little bit today, coming off this extraordinary confluence of trend lines right there. And just to put a bow on it, the ES, as we close here, we're up about 26 points. But the key, as I've said over and over again, is the fact that we finally cracked this intermediate line. And Monday will be kind of the last, probably Monday and Tuesday, because obviously the votes don't really start getting tallied and reported until Tuesday evening. So we'll probably have like 2 tense but semi-normal days on Monday and Tuesday, and then who knows. So it's been a fun week. Hope you're doing all right. Rest up this weekend. We'll all need the energy, and I'll see you here on Monday. Bye-bye now.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Well, the fruits of my labor of 2 weeks ago came to fruition yesterday when UPS dropped off a little something for me. You can look underneath your thing on the left-hand side, right by the bottom of the blues. It's a gift for you. I was sitting on my couch one day. Open it. You can open it. It's for you.
This is hella sus. Holy shit!
Yeah, see that?
Oh my god!
Yeah.
Oh my god!
Yeah.
Where did you get this?
So I go to this auction site.
This is
a auction.
Signed Taylor Swift from the Tortured Poets Department. It's a signed insert from
the CD.
Taylor Allison Swift herself. This is now my most prized possession. This is like the nicest thing you've ever done. We'll add it to my shrine.
So wait, Tom, are you going out again tonight?
Yeah, I told you I'm going to the Aragon Ballroom. I'm partying tonight.
You're going to like a rock concert tonight, and you are literally wearing a white t-shirt that still has the folding crease patterns in it.
And you know
that's not metal, dude.
You know that's what he's wearing too, because he ain't changing.
This is not what I'm wearing tonight.
Oh, you're not gonna wear your fringe jacket again, are you?
I'm not going to tell you what I'm wearing. I got a really cool outfit for tonight.
And his really cool outfit is a Tasty FX zip-up.
Can I vote now?
You can vote now. I will send you early voting. It's in your precinct.
Yes.
I'll send it to you. So my job responsibilities include signing Tom up for his shots, finding where Tom can vote, finding if Tom's vehicles are vehicle emission compliant, and
Don't forget my cell phone.
yeah, don't forget your cell phone and your pap smear.
We're going to pizza. We're going to your favorite pizza joint. And what's your go-to pizza?
Pepperoni black olive.
Ugh, I don't like that.
We're not ordering I don't know if we can do that. Saz is paying. We can do it.
Wait, do not. Okay, because I don't want you to be in a bad mood. Let the pizza sit for a minute. I know you're going to want to dive in. I guarantee you burn your mouth if you go right in. Okay? Then you will.
I like the way you guys talk to me like I've never eaten pizza before. I've had 25,000 pizzas in my life. Okay, I like the way you give me instructions on how to order a pizza.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. I'm having a good day. I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go? This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the last call, sir. How is your day going so far? Even the S&Ps are only up 25. What do you think of this?
You know, I started off better. I've been bleeding all day a little bit. Most of it, though, has to do with the bonds trading down 108 and the notes trading down half a point. That's where my bleeding is from. It's not. I didn't make any bad trades.
Yeah, okay. Yeah. All right. If you say so.
I've been loading up. My election play is obviously being long bonds. It's I'm going taking it to the mat on election day. That's going to be my play.
116.23 down a pull 0.08, Sosnoff.
Yeah, this is the low that they made. 116.23 is the low they made. I have a 116.22 bid and I did not get filled. 116.23 is the low from 2 days ago, and then notes at 109.31 is the absolute is below the other day's low. Other than that, you know.
Now I know you didn't think we were going to get down here.
Yes.
So do you think there's some headwind coming to the overall market? I know the market's up today, and I know
I think that this is an easy play here. I know you're going to think I'm freaking nuts.
Well, I don't think you're freaking nuts, but I hate it when you say things like this is an easy play here, because in all my years of trading, I've never seen an easy play. Now, I've been right about things.
That's because there's no such thing as an easy play, but it's very easy for me to say that it's an easy play. But there's no such thing as an easy play.
Okay, go ahead.
This is as easy as it gets, and I will explain why. Because one of two things have to happen here. There's no way that interest rates can skyrocket in a very short term, and the stock market will continue to go to new highs, regardless of. So the election, which is 2 days away, is being set up now. The reason people are
2 days away, a few days away.
Well, 2 trading days, right?
Yes. Okay. Sorry.
Yeah. 2 trading days. There's only there's Monday and Tuesday basically, and Monday, the day before the election, happens to be one of the most bullish days of the last. I want to say of the last 3 election cycles, the Monday before the Tuesday of election was incredibly bullish.
Okay.
Up every time. So what I think's happening today is that you're seeing a lot of buying pressure because people know that going into an election the Monday before, we tend to go up. That's me getting filled on bonds at 22.
Those are your 22 bonds you never want to see get filled on.
Yeah, I didn't want to see those, but got those. And there is
presently you bought the bottom.
Currently, until the next tick. Yes. I also sold the top today, which is not bad in the notes, but whatever. Anyway, I think they're up today because Monday is traditionally a very strong day, the day before the election day. But I think you're in a situation now which is really interesting, where notes are. The 30-year bond's one thing because that's kind of got a mind of its own. But when
think of it almost as like leap options, right?
Yeah.
It's okay. Go ahead.
I mean, but just think of what happens when, there's no hiding behind the 30-year, behind the 10-year, and the 10-year, is down to under 110. That basically means that one of 2 things has to happen. Bonds have to go up here in order for the market to be able to maintain these levels at 5,800, whatever, or the market goes down and bonds go down. Personally, I would, I'm playing for both of those things to happen. So I'm playing for bonds to go up and the market to go down. If the market goes up here, and continues to go up, then I think bonds have to rally. If bonds don't rally, the market goes down. So I think that's the way you got to play it. It has nothing to do with the election. I mean, the election is, the election is going to be the trigger event that makes that happen, in my opinion. But that's, to me, I don't understand why nobody's talking about that.
10-year rates 4.36, Sosnoff.
Yeah.
Yeah.
And
a month ago they were 3.8.
Yep. And what are the 2-year rates?
Let's see. /
2YY will give you the 2-year rates.
4.17. Sorry, 4.178. Yes.
There you go. Okay. Just curious. It's interesting. I'm going to stick with that, and we'll see what happens.
You got to think that this bond move lower has putting a damper on this market, but yet this market is near its highs.
Yeah, sure. No, I don't think it really hasn't.
The longer it stays, the market stays at this level, and bonds stay at their levels. Something's got to give. One way or the other, you would expect something to give. The market's got to come a little bit lower, or bonds rates have got to come down and bonds have to go higher. That's what you're playing on, right?
Yeah. It was funny. I was doing this interview today overseas. It was just for the BBC or something. And the person before me was an economist. And they said, do you still think the Fed is going to lower rates? And they go, well, yeah, it's already built in. We're going to lower rates 2 more times this year.
They're good for their word.
Yeah. They're going to lower rates 2 more times this year. And I'm thinking to myself, are we watching the same movie? I didn't want to say
trillions of dollars are at stake here. I don't know how they can do this.
Is everybody watching the same movie? I don't know. And anyway, as far as the market goes, yeah, the first couple of hours were really busy today, and things were all over the place. And then the last couple of hours, I mean, the S&Ps have been stuck in a 10 handle range for 3 hours. I mean, Apple's down a little over $3. It's pretty much been here all day. Amazon's been, I think, trading between 198 and 199 the entire day. It hasn't moved at all. Nvidia's been strong. Coinbase is a little weird with Bitcoin down. Coinbase, it's just been trading weird. It's up.
But Coinbase has given it up the last 2 days and 3 days, and given it up pretty significantly as Bitcoin's been going higher. You are right. Bitcoin under 70,000 now, 69,600 on the future.
Yep, and different, some commodities turned around a little bit. Gold clearly turned around a little bit. It was up earlier today, and it's down now.
That's okay. Gold could take a little breather too, as far as I'm concerned.
As far as everybody's concerned, I don't think there's a single trader on the planet that wouldn't mind a little gold sell-off here.
Frankie liked it when it was higher.
And you know what? I don't think I'd mind a little silver sell-off either. Both of those I'd be okay with both of those things. I think they're contrarian plays. I think that their sales going into, I think this election is a contrarian play. That's all. No matter what you think. And I think and believe it or not, I think that the betting markets, which are really weird, they're all none of them are lining up right now. I think they're going to be a pick 'em by Tuesday. By Tuesday night, I think it's all going to be pick 'em. I think you're going to turn on the TV. It's going to be all right. Pick 'em markets. Let's go, which should be fun.
Well, okay.
It'll be fun.
I don't think you. How about this? I don't think anybody's getting paid one way or the other on Tuesday because they're not going to have the results on Tuesday. They're going to have a little bit of a quandary on their hands when this expires.
Well, the interesting thing about election markets are that I don't know what the actual, like in a game, there's at some point there's a winner, right? Mm-hmm. There's never something that's open-ended. I don't think, other than a horse race where there's, where there's an inquiry.
Well, even then there's a photo finish. They go to the
no, inquiry.
Oh, inquiry. That's even worse.
Yeah. When the light pops up and it goes inquiry, you're like,
they call it a Stewart's inquiry, Sosnoff. Yes. Yes.
Right. Mm-hmm. So in a horse race, you can have an inquiry. That's always weird for gamblers. But in everything else, there's, they don't reverse. Even if you protest a professional football game, it never gets reversed.
Right. Right. You can protest all you want. Sure.
Yeah, you can protest all you want. If they find out, a month later that Joe Blow threw the game, you're not getting your money back.
Yeah. It's not. Doesn't matter. Right.
Yeah. You're not getting a refund. So, anyway, I think this is interesting. I don't know what determines the winner. Like how they actually. I don't know what that is.
It's gonna be interesting.
Yeah, no question about it. No doubt about it.
My Taiwanese source just said most betting sites are not paying out until January when the vote is verified.
Okay, well then there's your answer. Then there they go.
It comes from a very high up Taiwanese source, Sosnoff.
The only bet I'm really concerned about collecting on is my Bears bet. Just so you know.
Yeah, that might be a problem for you.
Could be a problem.
7.5 or 8.5, I forget. What was it?
Bears?
Yeah.
8.5.
Ugh, you're dead.
Bears, 8.5. Yeah, it kind of starting to look like I'm not looking good after last week's Hail Mary.
No, that was one you should have had. It stinks.
Yep. Anyway, all right. So let's talk about everything else for the weekend. There was a little bit of weird tape action today. Crude oil was really strong overnight with all the talk of another attack.
Trade
on
up
Israel.
To 71.45. South if it's under 70, 69.48.
Right. That's what I was going to say. It sold off almost $2. Gold sold off almost $20. A little bit of risk off today. Although vol was down.
Gold sold off by $30, South. Now they got up to 72. It's 44.
Oh, I didn't know that. Okay, there you go.
Big move, yeah.
As far as our trading goes, We turned a good day into an average day. The yen's down. Our biggest loser was the S&Ps versus the Russell and bonds and bonds. Notes we did okay. And then let's see in the equity marketplace. You know what stock I heard on? I don't even have a big position there. Lululemon. The hell happened?
Oh my God! Isn't it up like $23? I got a position in there too. Yeah, $24. What gives? No, tell me.
I don't know.
Did they bring back those see-through pants again?
I don't know. You must have bought a lot of them, and you know. I don't know what's going on in Lulu, but I have
$23 and it has earnings December 5th. I'm in November still, and there were 15 days to go to find risk trade that I'm struggling with. So I didn't want to roll into earnings because the markets are stinky. I can't even believe I got in here. Now I'm out $2 on the trade.
You know what? It's weird. Like there are certain stocks that I hate to trade because the markets stink, but Lulu is one where the markets look like they're wide, but actually everything trades pretty good.
They are wide on the screen. I mean, you do get some.
No, I know, but they trade
marks.
somewhere. They trade somewhere close to mid price. Like Lulu's, like certain stocks look good and they're crappy to trade. Other stocks look crappy, but they're really kind of good to trade. And Lulu's one that if you stay small, it's not bad.
Baidu under 90 now, Sadnov?
Yeah, the Chinese stocks didn't do too good, and my brilliant play in SMCI today didn't work out either.
Was that the free money trade you were telling me about? What
no,
was the free?
No.
Oh, bonds were the free money trade. I forgot.
Yeah, no, notes were.
Oh, notes were. Sorry, yes. Yeah, SMCI down $3.
I've been buying notes all day. Yeah, I'm not. I thought the chances of notes getting under 110 were 0. But,
or close to 0, sure.
Yeah, I don't love the tape action today, but I'm getting ready for a wild week. Don't forget, Sunday night, all the boys will be back, and hopefully we'll have no tech issues like last Sunday, so we will be good to go Sunday night and for a full show getting ready for election week. And then Monday through Friday, the Bat and I will be in town. And Tuesday night, we've got an election special. It's going to be the best one in the whole industry. So, and we're giving away a bunch of money. And if we get our swag in time, we'll give away some swag too. We ordered all new swag. So
beautiful. Nothing makes me happier than when you give away swag.
You know, I think we got berets, but I don't know if we have other swag. But we'll give away swag if we get our delivery in time. So we got a packed week. Sunday night, Tuesday night, and then all 5 days during the week. And then tomorrow we'll be in Dallas, Texas. Whole team's down there already.
Mm-hmm.
I'll be heading out later, and everybody's looking forward to it tomorrow. Spoo's on the lows of the day right now, Mr. Batista. Not a very strong close. It looks like there are Gesundheit. There's definitely some sellers here going into the close.
Yeah, but lows of the day, you mean lows of the trading day, meaning from 8:30 on, because they were lower last night going into the day.
No. From the trading day today, we were up almost 50 this morning.
Yeah. Oh yeah. Mm-hmm. And it looked like smooth sailing, and it looked like we were going to sit there all day too. And then they just started.
It looked to me like yesterday they were down 100, right? 105.
Yeah.
And it looked to me like they wanted to take it all back, and it's no bueno. This isn't,
No, not at all. Agreed.
Yeah, I mean, I'm kept my short deltas, but
volatility down 26 cents to 2060. It was almost $1 lower than that this morning when we were near our highs. When BAT closed his XBX butterfly for $1.25 profit overnight. You know how it is, Saz. That's how we roll.
Of course I know how it is. That's exactly how you roll. I mean,
Option trades today. That's right. You watch the podcast that Sadlov gets all his trading ideas from every Tuesday and Thursday, wherever you see your podcast around noon Central.
I mean, if you have a chance to take a profit, knowing your track record, you should take it every time you get it. One.
It's always good to be loved. Better to be feared, but it's good to be loved.
Well, all right. I don't know what the setup here going into the. I'm not sure what the setup here going to the close. I don't think it's a good close, but who knows?
Yeah, everything looks a little bit different each day. How about VIX 1 day 15-12, Sosnoff? What do you think about that for a trade for this weekend?
I don't think
you got the intestinal fortitude. You got the Gouillons.
No, actually, I don't even.
You got
want
the brass ones.
I'm keeping all my positions on. I haven't taken a single position off. So
this is a good thing. What's your capital usage at? What's your delta? What's your theta? Let people know going into.
My delta is a little bit short. My theta is about 5-1 to my delta, but my extrinsic number is really big, and my capital usage is up to almost 50%, which is the highest it's been in a long time. Mm-hmm. It's actually a little over 50% right now, but I'm probably gonna. The only position I lightened up on today was Apple because I bet that it would stay in the middle, and it did. So I did take off the bulk of my Apple position, but everything else I left on. Oh, we took off Amazon too, because they're both post earnings. I don't know.
Sure.
But took off Apple.
Apple still has a decent Ivy rank of 36. I mean,
it does. It does, and I'm going to. I probably will Tuesday. I will mess around and change my position. I'm going to take a shot on Tuesday night because I feel pretty confident that everybody's got this wrong, and I'm gonna fade the world. But
because that's what you like. Because that's what you like to do.
Because I'm gonna go out with a bang. But my main fade is. My main fade is going to be bonds. I'm just going to be, I think either way, doesn't matter who wins the election. I think the bonds go higher.
My Taiwanese sources want to remind me that I did 2 trades on my option trades today on Thursday. I did a wide Microsoft Iron Condor that's also up around 50 cents. I don't know, but again, that's only in 1 day. So, you never know what's going to happen tomorrow.
Do you stretch your arm patting yourself on the back? Because I can't reach around because I think I have
especially now with your left arm. Now with your left arm.
I have a rotor cuff issue right
your
now.
Your right arm feels like you're doing it. Your left arm feels like somebody else is doing it. You know what I mean? That's the way you got to do it. You got to do it with the left
I can't
arm.
move my left. My left arm's broken right now.
You never had a left anyway.
My dad told me when I was a kid, he's like, you don't have a left, you never play pro ball. He was right.
He was 100% correct. I told all my kids that. Yeah, I agree with your dad.
Yeah, when we played basketball when we were kids, he used to say, he used to tell us we should all tie our right hand behind, tie our right hand into our belt
so
or something.
Do everything with your left, dribble, everything.
Everything we left, dribble, layups, the whole deal. Yeah.
Boeing caught a bid today, up $5 and change, $5.38 when everybody thought it was dead, myself included.
It was down $5 yesterday, and Boeing is just a kind of a crapshoot play. We're absolutely flat Boeing here.
Still has a decent implied volatility, Ivy rank of 58.
Yep. I don't think this is going to be. I think this is going to be a tough stock pickers market around the election. I mean, I'm not sure which stocks do well with which candidates. I mean, there's a couple of things that are weird. Like people saying, well, the Trump trade is that, he's going to win, so that's why the bonds are down. But if that was the case, then why isn't Coinbase up? I don't understand. If that was the case, there's just certain stocks that, if that was the case, then why does DJT down, why did DJT drop $20 this week?
Sure. Why isn't Tesla rallying? Yeah, I get it.
Yeah, I'm just saying. There's just there's a lot of weird stuff. Like I don't like when people say this is a Trump trade or this is a Harris trade because they pick out one underlying. If you can explain to me why DJT dropped $20 this week, yet you're going to tell me the bonds are a Trump trade, or doesn't really make if this is supposed to be good for crypto, then why isn't it good?
Why isn't it good for crypto?
Why isn't it good for Coinbase?
Right.
I'm not. I don't know. I'm having a hard time believing any of that. I think it's just, this is just what markets do.
Besides SMCI, anything hitting your radar to the downside?
SMCI is a very different kind of play. When you get into like where there's smoke type thing, I don't like those. I mean, obviously Boeing was a stock that we thought was oversold and rightfully so, I guess. But just looking at, stocks that maybe you think are a little cheap for whatever reason. I mean, we have been playing, I've been playing IBM to the upside, and today we got a little bit of a pop in IBM, but it got down to 204 yesterday. That's where we bought on the opening. It's 208 today. So that's one stock, but no, nothing like that jumps off the screen at me type thing.
Mm-hmm.
No, I don't think so. Again, I don't think it's a stock picker's market as much as I think it's going to be. I think, if you're going to play the election on Tuesday, you're going to play it. It's an index play.
Sure. Yesterday we had all four indices down, even the S&P, Nasdaq, Russell, the Dow. Today you've got all four up. Although they are up small, half a percentage point versus almost a 2% move yesterday. See anything in that, like synergy in the market itself?
No, and I don't think you're going to between now and Tuesday night. I think you're going to see, how the markets act just before the Fed comes out, and everything is like on pins and needles, and you have no idea what's going to happen next. I kind of feel like that's the way it's going to be on Monday and Tuesday. A little bit of bias maybe to the upside for Monday because people, historically like to buy markets the day before elections. But I don't know. I don't think you're going to see much. If you're talking trend wise, and if you're talking vol wise, I don't expect vol to come in much at all on Monday and Tuesday, and B, I don't expect to see much of a trending market at all.
Mm-hmm. SPX, even the S&Ps, they flirted with 6,000. Does that now become the upside level, Sosnoff? I mean, I know it's the all-time highs, but since we're so close to 6,000, is 6,500 far behind? I'm just kidding you. I'm just baiting you.
No, I don't know. I have no idea. I'd be surprised if we hit 6,000, but who knows? I mean, we haven't had to sell a full year. It makes sense after the election to me that it's the counter trend play. Mm-hmm. The weird thing is, you used to get moves in the stock market like you're now seeing in the bond market, but we don't get that. Like the bond market has two-sided moves, stock market doesn't. And I kind of think that's, the stock market's going to mirror the bond market. Bond market goes up, stock market goes down. That's what we're going to see in the next couple of weeks, but who knows?
All right, Sadnap, there's your closing bell. Even the S&Ps muster a little bit of a rally up to 22 on the even the S&Ps. 57.60 is the number. They got up to over 58, down to 57.32. Let's just call them mid-range for the day, Sadnap. Where we open the day, Sadnap, up 21.22. We'll take a quick 90-second break and come back. We got more Tasty Live after this with all the Tasty Live programming. Peace.
See you Sunday night.